I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open, and you would think an anti-AI trade is good for India, but perhaps we have more choppy waters to navigate. Very good morning, Neeraj. So much happening this morning.
Yeah, you're right. And, as a lot of people have stated, Tamanna, that if there was a gradual downtick in this AI trade, then India will benefit. But if the correction the way it is happening right now, then everything gets down because money just moves to safety, presumably, right? But what's happening with SK Hynix, Kospi, semiconductors by and large is unreal. The rise and the fall.
The fall has been sharp. I think if you still look at it from a year-to-date perspective, you still might be making some gains because those gains were outsized and phenomenal. But it's quickly turning out to be more than just initial jitters at valuations, etc.
Yeah.
There seems to be some serious fears there. If you pull up the Kospi, you will see the way that it's tumbled. Last year it was some 5-6% down, or maybe more.
It actually, there was trading halted for 20 minutes for the Kospi as well. And the other thing, Tamanna, is that just the fact that so much of leverage came in right at the top of that trade, and therefore that leverage trade pulled back, and the margin calls that have been triggered in the Korean retail market is something that I don't think we've seen even in India at the worst possible downtick. So that is the problem.
So this extent of leverage trade has not happened in India.
Yes.
Because we're still a conservative mindset when it comes to money generally. But in Korea, you've had stories of people mortgaging their houses and going and investing in stocks. People then getting violent with finfluencers when their calls didn't work out. So that's what's happening in Korea. But globally as well, crude has completely slid, because there's been 3 consecutive days of no firing between US and Iran. Let me just take you through what's been happening. US markets ended mixed after a day of choppy trade. Pull up those indices and you will see the Nasdaq down in the red, although what we're describing across the world is much worse than what happened to the Nasdaq last night. Let's pull up US futures as well, because that's going to be reflective of the mood there. And again, 194 points down on the Nasdaq futures, all 3 indices down on the red. Of course, all eyes on mega cap results next week. You're going to have Amazon, Meta, Microsoft, Apple. All of them are going to be reporting. Microsoft and Meta on this Wednesday, that's tomorrow. Apple and Amazon on Thursday the 30th. So watch out for that. Treasury yields have slid as US-Iran hold fire for a 3rd day. 10-year is at 4.63%. Oil prices tumble as hostilities between US and Iran have paused. Just look at Brent futures now at 84.64 as we see it last. And WTI futures have also been sliding. I don't know if we can, 87.05 now on the Brent actually. I don't know if we can pull up the 5-day chart of oil prices, but you've seen a huge dip with just 3 days consecutively of firing which has been paused between US and Iran. We'll get you that chart in just a bit from now. Let's pull up Asian markets as well. Okay, there you have it. This is a good way of showing you the highs and the lows that we've seen. On the 23rd, you had Brent at about $101 and at about 88 now. Let me just pull up Asian markets for you, and we talked to you a bit about the Kospi, but across the board you've had a bad situation in Asian markets. The Kospi, of course, first hit 9% down, Shanghai as well. The Nikkei down 4.5%. Hang Seng is okay. The India implied is what we should put up at this point, and it's about 65 points down. But this seems to be a semiconductor problem more than anything else. Peter Maguire, CEO Trading.com Australia, joining us this morning. Peter, very good morning to you. Let's talk a bit about crude. How low is low at this point, and it's about 65 points down. But this seems to be a semiconductor problem more than anything else. Peter Maguire, CEO Trading.com Australia, joining us this morning. Peter, very good morning to you. Let's talk a bit about crude. How low is low now?
Well, good morning, Tamanna. I tell you what, it's been a dramatic fall-off, hasn't it? It's fallen. I've got a WTI handle at around about 81.5, or there it is on the screen, 81.20, and it seems to be in a solid downdraft. the US and Iran, they're holding fire as far as, for the third day. So obviously, if this is to be, a week long or a 2 week long or longer in the sense of no action on either side, a ceasefire, then I'm expecting crude to certainly be closer to 70 than where it is at the moment. So that seems to be the general theme, and it's falling very, very quickly.
Got it. Peter, good morning to you. The other question is really what's happening to the chip makers, right? And multiple reasons why this is shaping up. But, SK Hynix has had, a $450 billion rout in less than 45 days. Can this continue? And will it therefore have further extended pain on other equity assets?
Well, good morning, Niraj. Yeah, probably will. I mean, these, like anything, markets overshoot to the upside. I've just gone back and looked at some charts. You're looking early April, that's this year. So we're looking, April, May, June, July, 4-month window. And it went parabolic in that probably the first 3 and a bit months. And over the last week or couple of weeks, probably 3 weeks or more, it's certainly fallen dramatically back to those levels. So it's all about, markets overshooting to the upside, and it's not uncommon when you see that parabolic event happen. Everyone bought into the story. As far as SK Hynix, where we're expecting it, look, I think it's probably got further downside, but it's very uneasy. And, as people take margin calls against their open trades, then they'll have to sell positions. And as you know, that's a cascading effect in any marketplace. So I'm probably, it's a time to be short for certainly South Korean Kospi, and the Kosdaq's down the best part, 7%, and Kospi nearly 9%. There it is, 9% for the day. That's a washout, all right, isn't it?
That's what we've been showing on our screens. But I'm wondering, Peter, what are the implications for India? Because India has the same staid, old, boring stocks, especially in the Nifty. The IT companies whose businesses are very clear and not threatened, the problem was that they weren't growing as much. Do we look now at more attractive?
Well, people look for opportunity, Tamana. That's the normal thing as far as investing. Blue sky, they look for where that faster moving market presents itself. As far as where India is positioned at the moment, I still buy into the whole storyline as far as very, very solid growth over the decades ahead. And sure, it's going to be bumpy over those, the iterations of a market. And I truly feel that, your best days are ahead of you. And the reason why, a young population, growing demand picture, big infrastructure spends, and, a very, very engaged population across all forms of technology. So and young. So I think it's a great country, and I'm really, very excited about the frontier as far as India versus the likes of, where you see Japan or South Korea at the present time.
Music to the ears for a lot of Indian investors. Peter Maguire, thank you so much for taking the time out and being with us today.
Thank you, Niraj.
Now, viewers, just to let you know about what's happening in that whole semiconductor piece. Now, there is a nearly over a $550 billion rout in SK Hynix alone in the last 45 days. And investors seem to be questioning whether the pace of the AI infrastructure spending can be sustained. But there are a couple of other reasons as well. There are growing threats of competition from China, which have weighed in on chip makers. Because remember, CXMT made a stellar debut yesterday. And remember, it's the 4th largest DRAM maker, by the way. The other 3 are yet to there, and CXMT is already on at least the reported trading count yesterday, the largest company by market value in China. Imagine what happens when the others come in and the kind of money that they can raise and then therefore command. And there are reports from a news outlet called The Information, which suggests that China has begun mass producing immersion deep ultraviolet lithographic machines. Now remember, thus far, and lithography is a very important component of this whole semiconductor chain, and thus far there was just one key Dutch company which was doing this. Now if China has begun to do this, the kind of competition that China can give to this whole semiconductor space can be immense. Remember, this could well be the deep seek moment for the semiconductor stocks. Of course, the AI players have since then risen, but in 2025 when DeepSeek first came in, Tamanna, all of us would remember the flutter that it caused around this whole US dominated AI plays. Now the semicon plays and the AI plays have widened, and if China is really amping up the competition out there, there could be a cause for worry.
You know, I find it very interesting that you've used the DeepSeek example, because look at what happened after that first DeepSeek pain and that concern that, oh, DeepSeek is faster than everyone, cheaper than everyone. I mean, it just kind of fizzled out. Having said that, BYD versus a Tesla. Again, there was at one point a huge scare that Tesla is pretty much finished. And yes, BYD has eaten into Tesla's pie. I'm not saying it's not, but it's not demolished it the way that was expected. So I'm not saying that this will have the same fate. Of course, on day one, you are going to see that fear. Let me extend that example to all of the releases that you were seeing out of Anthropic. And each time there was a release of a new software or a new kind of a feature, you had all of these mainline stocks crashing and then picking up. So I think there's more jitters. I don't know if this is going to be a one-way street from here on, is what I'm saying.
So I part agree with you. The only place where I don't agree, for example, or not for example, the only place where I don't agree is that the fear on the street is that what if China releases some really obscure priced AI models into the street, and there are practitioners who are saying that what costs us $100 for a Claude subscription, the Chinese model, is available for $1.
But you don't trust any Chinese model, even if they pay you to use it.
But now, slowly, from the last report that I read yesterday, and I'll try and source it, they've kind of clawed their way to nearly a third of the market right now, globally.
So I agree. I'm just saying, because it's China and because it's something which is now, it's a tool which is so deeply aligned with national interest, with the kind of information you have to give. Let's go back to what the Palantir CEO has been saying, that any AI model that you apply sucks up all your core information and data. Are you going to trust, is any big enterprise going to trust a Chinese model to do that? So I think it's a little more tricky. I mean, it's an interesting debate we're having here, so tell us what you think about it. Do you think that this semiconductor fear will continue or not? Just want to do a quick recap of yesterday's trade before we get to the trade setup with Neeraj, and then I'll come in with factors, because it was a good day. We didn't quite make it to 24,000, but if you pull up the Nifty, we'll pull up where you know, all the key indicators ended yesterday, the heat map, etc., advanced decline ratio. It was a good day of trade. You continued from strength to strength, closed near the day's high, and pull up the heat map as well. Just want to quickly show you what worked, what didn't work. We'll give you the top gainers and losers as well. Pretty much a green screen, and it was the slide down from crude that was helping. Infosys also there on the top list. Some of the results were good as well. Let's take you through the top gainers and losers on the BSE 500. And before we get to the trade setup of the morning, and you will see that a lot of result-specific responses coming in. Loris Labs, for example, good set of numbers, and that was working out there. On the losing side, of course, you had a few which didn't work out too well. ONGC suffering because of crude prices going down. But I reckon among the other things to watch out for today, Neeraj, would be HDFC.
Yeah, and that will be a big one, and we'll talk about that in great detail today. I'm actually looking forward to all of those conversations. But aligned with what I think Tamanna was making a point earlier about the death knell for maybe tech as well. Just think of this, not just in India, but did you know that 17 out of the 30 worst performing stocks in the S&P 500 for 2026 are software and related services companies? Can this be the turn? Remember yesterday Jefferies put out the note saying that they are going overweight in forces and have cut the underweight on IT services as well. Could IT bounce back? Well, TCS is already up some 13-14% from its lows as well. So maybe that happens. But what's the trade setup for the day today? I think crude price behavior leading to sustained buying yesterday with a strong close. I think that's the beauty, that the close was nearly at the high point of the day. That's what you want. Even if you don't rally 2%, it's fine. You may rally maybe just 0.75%, but you need to have that trending move for there to be confidence. And I think we kind of saw that kind of behavior in trade yesterday. The index is far away from extreme greed levels right now, and in fact the gains may sustain if crude prices stay subdued. So Won't be surprised if India kind of becomes an outlier in the Asian pack today. Japan may do what it is doing, Korea may do what it is doing, India may be slightly different than that. And while Citadel believes that the Fed may deliver a surprise hike, I somehow don't think that the Fed or the BOJ, which is slated for this week as well, will dampen equity sentiments globally this week. So you probably don't have too much of a negative coming in from the central bankers. So you dance to your own tune. Right now, the rest of Asia dances to the tune of what's happening to the semicon stocks. At least Korea and Japan do. India does quite the opposite, I would reckon. Even if we don't rally too much, I doubt we'll have the kind of cracks that some of the Asian markets have. So which is actually a good piece of news.
Maybe just a bit of cool off after yesterday's markets, because no one trusts this 3-day, I don't want to say the word ceasefire because it's not, but a pause in firing between US and Iran. A latest statement from Donald Trump saying that they want to talk. But the problem is we've heard those same lines again and again. So no one's going to believe it till you don't have something signed and sealed. All right, some of the factors to watch today. The Nifty monthly expiry is today, so look out for that. It's reclaimed its 50 and 100-day EMA, that's the exponential moving average, but remains capped below short-term moving averages. A sustained hold above 24,000 is required to trigger a short squeeze. A sustained move above 24,000 to 24,100 can trigger an advance towards 24,200 to 24,300. Resistance at 24,010, 24,040, 24,090. Supports at 23,920, 23,890, 23,845. For the Bank Nifty, it's mildly positive, but confirmation requires a breakout above 57,600. Resistance at 57,270, 57,365, 57,515. A pivot support is at 56,960, 56,865, 56,715. Just want to also bring you BofA's India strategy. The author here is Amish Shah. He's talking about the first quarter of FY27, saying broad earnings resilience despite pockets of weakness. For the Nifty, 51% of market cap that they are tracking has a 3% beat at a plus 12% year on year. Energy and metals have delivered the strongest beat and broad earnings strength with selective weakness. Similarly, 10% year on year growth for the NSE 200. So some heartening words there coming in from Amisha this morning, but we have to see if that optimism is displayed on the F&O.
At this point of time, the implied open isn't showing that runway kind of move that we are expecting. So possibly post the start, if this implied open does continue to be held, the follow-on buying will be something to watch. So the opening trade becomes very, very important today for the Nifty. We were close to that 24,000 mark, as you guys highlighted that a very heartening move, especially seen in the last few hours of the trading session. As crude cracked in the last hour, especially you saw those moves very pronounced on the Nifty. For the Bank Nifty too, I mean, we've highlighted that 58,800 was the level that we were watching out for pre-earnings. The earnings haven't panned out as the street would have liked, but then you've seen receding to that 57,000 mark, and hence continues to be an important level that we're watching. Any kind of geopolitical sanity, if any, would be something to watch for the Bank Nifty as the next key trigger, apart from the interest rate meeting as well as the Fed meet as well, amongst other factors. Specifically and we'll get to the rollover data in just a bit, but the foreign investors continue to be sellers in the market, and hence the month of July has been largely a washout in terms of positions being built in. So we are ending almost index longs at the lowest level that has been, very close to that April and May level of just sub 10%, and the open interest distribution also shows you that. So every time we move closer to the 24,000 mark, 23,800, 900 has of course seen some active open interest being built in, but on the upper side 24,000, 24,200 have seen high call interest. Finally, for stock specific action, SAIL was one which was in focus in terms of open interest gainers. So was Manappuram Finance, but also in terms of the losers, if we can quickly go to that data point as well. Maxell Tube Investment was one where you saw covering of shorts yesterday. TVS Motor was also another one of those candidates as well. But in terms of the rollover data, this is highlighting is that there's not been too much material change. So a 24% uptake on the August open interest on the OI change is one which for the Nifty 50 is. for the Nifty Bank as well, it is a similar percentage. So not a runway kind of positions being built in on the top, but a lot of those longs were already being cut in. So this data point tomorrow will be something to watch as well.
Okay, thanks a lot for that, Puneet. Well, in fact, before we move on any further, let's cut across to the Coforge con call while CEO Sudhir Singh is addressing analyst questions.
10 years. As you listen to our Q1 commentary and the very robust growth and margin expansion we see ahead of us in this year, we hope you will recognize that the execution intensity and the commitment that has got us here over the last 9 years is not just undimmed, but it is actually getting stronger. Over the last 9 years, we have delivered a revenue CAGR of 21.9%. Over the same last 9 years, we have delivered an EBIT CAGR of 24.6%. And over the same last 9 years, we have delivered a PAT CAGR of 24.1%. That is an exceptional record of sustained profitable growth. And yet, that is the past. It is the future which is far brighter. And it is the future which in the short term looks set to mark Coforge out as the firm which truly brought the promise of enterprise AI to life. Our pipeline of large deals in Q2 and beyond has never been stronger than it is today. In Q2 itself, the quarter we are in, 1 month has elapsed, we believe that we are likely to sign large deals in numbers that will be very close to what we signed in the full year just 3 years back. You will recall in Q1 we had indicated that we were set for a flat quarter because we were culling elements of our India government and data center business to ensure that we deliver on our promise to expand reported FY27 EBIT to 15.5% on a consolidated basis and reported FY27 EBITDA to around 20.5% for the year. We are pleased to report that not only have we exceeded the full year EBIT margin guided target in Q1 itself, but that we have also grown 1.1% CC sequentially. Excluding the impact of the businesses that we culled in Q1, we have grown almost 5.2% CC in sequential terms in Q1. Our growth in Q2 and beyond is likely to be very robust, and our margins, having reached this threshold already, will sustain at a minimum and likely expand further. In Q1, 86% of our business came from AI-led engineering, data, and cloud services. Equally importantly, in Q1, the Encora acquisition was consummated using the proven Coforge integration playbook, which is uniquely our own. We immediately and fully integrated both organizations on day one itself, on the 24th of April itself.
Okay, that was Sudhir Singh, the CEO of Coforge speaking, and all of the updates on what they're saying in their conference call will be at the bottom of your screen. This is also a decent set of numbers that we have seen. All right, first on my watch list has to be and is HDFC Bank. Now, here's a tricky one. There are going to be a lot of questions about the action that HDFC Bank has taken last evening. But what does it mean for the stock is the question. The close was down about 0.34%. The ADR has been completely flat. And here's what's happened. HDFC Bank has concluded its internal review of the MSRDC deposit arrangement. You will remember that report, which was that story which was broken actually by the Indian Express, where they talked about a differential deposit rate which was given to MSRDC, but was dressed up as marketing spends. Now, the board concluded that the conduct of employees involved was business overreach, but not driven by malified intent, personal enrichment, or improper motive. Warning letters as a result have been issued to employees involved, but look at who the employees are. A 1 lakh rupee penalty has also been imposed, but it's on the CEO, the CFO and group head retail assets. The matter to be formally now communicated to the Reserve Bank, and the review will be conducted based on findings of a special disciplinary committee of independent directors. The board also noted a potential divergence with applicable RBI directions. Here's what Macquarie thinks about it. They've maintained and outperformed with a target price of 1,150 on the stock. They're saying about the MSRDC issue outcome, no misconduct was found. The review has concluded a business overreach and not a misconduct. The focus now shifts to the CEO extension. CEO extension now remains achievable. Here's my take on this issue. Now, while the bank action may remove an overhang from the CEO extension issue, the question of appropriate action remains. Is a 1 lakh rupee penalty and warning letter enough for business overreach? Of course, this clears the pathway for a CEO extension for Shashidhar Jagdishan's reappointment, but considering all the noise around it, does it continue to be an easy path? I'm not so sure about that. For the stock immediately, this may be a bit of a relief. The second stock on my watch list is Bharat Electronics. The numbers were overall good, but it's a tricky one, really, because look at this. EBITDA margin is at 25.1% versus 28.1%. This margin slide is the reason for that thumbs down that you're seeing on your screen. The EBITDA was up 12% at 1,389 crores. Revenue was up 25.3% and net profit was 8.2%. Order book is robust at 72,000 odd crores. What are the key highlights? Revenue growth has been aided by continued defense order execution. Margin pressure that we talked about has come from higher semiconductor costs. Q1 execution was weaker than Q4, impacting operating leverage, and the order book is at 72,258 crores versus 72,510 crores, so a slight slide there. The authorized share capital was also raised to 1,000 crores. JP Morgan has maintained its overweight target price of 525. They have also said that a product mix has impacted the margins in Q1, but FY27 guidance is maintained. BEL remains their top pick in India's defense sector. The medium-term margin, sustainability and pay commission impact will need to be seen. The large order pipeline includes NGC, PS7 F-51s, Hammer, Shakti and EW systems. The third stock on my watch list is Balaji Amines. We're giving it a thumbs up. The EBITDA margin has jumped handsomely from 15.3% to 25.4%. EBITDA has gone from 54 odd crores to 116 crores. Revenue is up 27% at 456 crores and net profit is up 97.2%. What's worked? Revenue has grown despite lower volumes. There's an increase in realization per ton, which has aided growth. It's seen improved demand and operational efficiencies. Commissioned India's first commercial scale plant, and this plant, DME, opens up opportunities in LPG blending. Massive specialty chemicals underway at 750 crores. This is a space that you also look at closely. Balaji, seems to have really pulled it off this quarter.
Yeah, and you will. I think personally that we'll keep on seeing surprises from enough and more chemical and chemical related names. So Balaji Amines, there is alkyl amines, and there is indoamines as well. So 2 or 3 names out there, but watch for surprises from almost everybody. I think the one that we spoke yesterday, Neogen, very strong set of numbers as well. So I think this cohort seems to be doing really well for themselves. Okay, the 3 stocks on my list, Adani Energy QIP has been launched. The indicative issue size is of course about 3,500 crores with an option to upsize the indicative issue price at 1615, which is about a 5% discount to the previous close. If this gets absorbed well, you might well see the stock actually do much better. Remember, the past fundraisers have been fairly successful. The stock in the last 6 months has been a stellar performer. Standard disclaimer, of course, the Adani Group owns NDTV and you're watching NDTV Profit. It takes nothing away from the fact that Adani Energy Solutions the last 6 months has actually had a pretty good run from 1100, 1200 odd all the way to 1700 currently. So I think good going. Let's see how it gets subscribed. If it gets subscribed well, the stock could do well. If not, there could be some bit of pressure today. Tilakara Industries. mixed bag for the kind of interest that it has in the stock. So revenues were very, very solid, 1046 versus 394, but operating profit margins just came off rapidly. Is this indicative of what could happen to some of the others as well? 16% versus 24%, as a result of which the profit after tax was down 64% at 31 crores versus 88 crores. Keep an eye out for this one, may see some bit of stick today. CCL Products, no such bad luck. What a superb performance yet again. It continues to deliver quarter after quarter, year after year, almost on a treadmill, and keeps on running. Revenues up 13% at 1200 crores versus 1056. You will think, what's special? Look at that. They have hiked the operating profit margin performance to 16% versus 15%. Profit after tax up 61% at 117 versus 72 crores. So pretty stellar show by this one as well. And I must say, it would be wrong to not point out that the analyst community today seems to be focusing very, very strongly on some of the cable companies as well, because I think CLSA has a note on Polycab, Citi has an upgrade on RR Kabel. Don't be surprised if that entire cohort of stocks has a pretty good run today. RR Kabel's target price is 2800, Polycab's, I think, initiating coverage target price of northwards of 10,500. So I think that cohort of stocks could be very, very much in focus in the session today. But promises to be a big bottom-up day, and a bunch of other stocks which are in focus as well on the back of their earnings specifically. Varsha Johnson with that list. Varsha, good morning.
Good morning. I'll talk about 4 stocks which will be in focus on the back of Q1 earnings. Let me start with Tata Power, wherein they've seen an inline set of numbers in Q1. While the core generation, transmission and distribution and renewable PAT grew almost 14% year on year. Renewable, if you see, rose 15% year on year. The portfolio, renewable portfolio, reached almost 12 gigawatts. Solar cell and module PAT jumped almost 3.9 times year on year, and they've had a record quarterly capex of around 5,375 crore, and Mundra plant is running at a full capacity of almost 4,150 megawatt. Then you have Tata Chemicals, a weak set of numbers, I would say, though there was a revenue growth which was led by volumes, but margin impact was due to lower export pricing from US to Southeast Asian markets. Industrial segment prices remained under pressure. The global soda ash growth was subdued, and the soda ash pricing compression from Chinese oversupply was seen, and hence you're seeing a very weak set of numbers, because if you see, EBITDA margins were at 13% versus 17.5% last year. Then you have Gallant and Spat, again a seasonally soft first quarter which was seen by the company. They had a planned annual shutdown for their pallet plant. There was a monsoon impact on construction offtake and long product prices. Even Middle East conflict added pressure to the global freight and input costs, and hence you're seeing some kind of pressure when it comes to margin for the company. Lastly, you have Aeroflex Industries. Overall, if you see a good set of numbers, they've seen a highest ever quarterly performance. So acceleration in liquid cooling solution business. Even assemblies and other value-added products, if you see, grew almost 37% year on year. So good set of numbers when it comes to Aeroflex Industries.
Okay. Aeroflex is also a good set of numbers. We have a whole host of actually mid-cap and small-cap stocks that have performed pretty well. We're going to talk about all of them and more, but we're coming back after this break with Kuch Bora, Parag Thakkar and your strategies for the day. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us. Welcome back. You're watching India Market Open. I want to quickly pull up what's happening in the implied open before we move ahead. Let's just show you that chart, which is 54 points down in the red. Kush Bora and Parag Thakkar with us this morning. One would think that crude prices coming off would be a continued relief, but Indian markets are concerned now about what? We don't even have semiconductor stocks to be worried about what's happening in Korea.
In fact, for all you know, yesterday also IT stocks have rallied.
Yeah.
So, in fact, Infosys, ADR, Kofo, all stocks have Cognizant, Accenture, everything has rallied. So, I think Indian IT stocks will at least do well for sure today.
You think so? That rally continues?
Yeah, I think it will continue. Plus, Coforge commentary is very good on margins, on execution, on order book, everything. So, I think although Coforge has rallied a lot from, I think from 1100 to 1530 now, 1540, but and trades at around 22 times FY28. But I would say that I think it has more legs.
The IT rally per se.
I think at least so IT
you had
have
a
to go by the day.
table thumping buy on TCS.
Yes, yes.
Now,
By God's grace, it has played out very well.
Is there a table thumping call on any of the IT names or the IT index this morning?
No, no, no. No table thumping.
No table thumping.
No, I might book profits also, to be very honest.
On?
In any of the IT stocks. Basically, I have TCS, Mphasis, Tech Mahindra, Coforge in my portfolio.
Why would you book profits? Just wondering.
No, I'm just saying. I can.
No, I know you're just saying, but I'm asking you why
I'm saying that if it rallies 4-5%, I can. So I have to be clear with the viewers, right?
Yeah, but why? I'm asking you why would you book
my
profits?
point is that see, IT, you cannot be having a very huge structural view. It was a tactical view after the TCS result, and stock price was at 2,100, and it has already given good 10% move. I am expecting another 5-10% move, and in which I might book profit also to raise cash.
What are you thinking about HDFC Bank? Is it an overhang which has been removed? And frankly, apart from the stock price, is it fair and commensurate and enough to fine 1 lakh rupee when a business overreach has been found at the level of CEO, CFO?
See, I will not like to comment on that part. Only my limited point is that there is no misconduct, there is no governance issue. Again, that is repeated. And I would say that within next 2 to 3 days maximum, because Mr. Shashi Jagdishan's term ends in October, it is now high time, and now that chairman has come, I would expect that within next 2 to 3 days, the entire clarity around CEO extension will come, at least from the board side. Then of course RBI will have to approve it, but at least from the board side it will come in next 2 to 3 days, and that will clear some overhangs.
But Parag bhai, to be fair, that will come, but why not comment on the other side as well? When we look at a company, we look at it in all its aspects, right? This is a fair question. That is this enough? First, there was that there was nothing to see here. The first message which came from the bank is that koi issue hai hi nahi. When Atanu Chakravarti came and spoke, he said there is no issue. Then this MSRDC case came out. Then it was, the commentary was, no, this is usual, there's no big deal. The whole narrative so far has been, please move along, there's nothing to see here. Now, clearly the board has found that there is a problem.
The problem of business outreach.
So business overreach, you're saying from an investor perspective is okay. It's basically over-enthusiastic employees.
Yeah.
To put it simply.
Yeah, to get the deposits, something might have happened, but I don't know the exact theme, so I would not like to comment on it. But my view is very simple. They have also said that there is no misconduct, and I'll go by that.
Okay. They have said there's no misconduct.
Yeah.
Fair enough.
And therefore, the valuation you think captures in all of these surround sound.
I have always said that ICICI Bank is my top holding.
No, sir, that's okay.
But
HDFC Bank.
HDFC Bank valuation perspective, yes. But we'll have to be patient, because even if Mr. Sashi or anybody gets a CEO, the margin recovery has to happen for earning growth to drive growth, right? And margin recovery is contingent upon how cost of funds shape up for them, right? So that patience will be required. It might go from, say, it might give a 10% move, but for sustainably outperforming other banks, it needs a margin recovery desperately.
Yeah, you know, just before we get to Kushpur, I think the problem with HDFC Bank has been now that people who have viewed this stock giving a 15% compounding from maybe 2000 to 2020, right? There is a belief that at some point of time this will come back. For people who are got into these markets post-COVID and have looked at the stock last 2, 3, 4, 5 years. Can you pull up the 5-year chart of HDFC Bank once? Just to put things into perspective. This is the 5-year chart of HDFC Bank. It is given a 4% return. At some point of time, the people who've come in now and who don't have that knowledge of HDFC Bank will say, why do I need an HDFC Bank when I can make money in a DCB, in an RBL, in so many others? And that question might well be right for that time horizon. And that is the big problem for HDFC Bank versus maybe even an ICICI Bank or some of the others.
Just I would like to add one point. So when we say this now, I also feel that it is very natural that one can think like that as an investor, right? But I would say that see, you have to see the credit cycle play out, right? So HDFC Bank has done a prudent lending from last 25 years. Mostly all other banks have, apart from of course Kotak to some extent and ICICI Bank after Bakshi ji has come, they have not faltered on asset quality anytime. When we talk about the small banks who are doing very well right now, in fact I was very bullish on DCB, City Union Bank, various banks and Federal also. They have done extremely well, but you will have to give them some more time, because some of the lending which you do, for example, I will not name a company, NBFC, which is growing at 70% right now today, right? Now we have to see how the book seasons out, right? We will have to give it a time.
But if I leave a small bank out, ICICI Bank versus HDFC Bank.
So there, I have also made my choice very clear.
So point being, why does a retail investor need to buy into HDFC Bank? He's not a mutual fund who needs to have a particular corpus as per the index weightage.
That I agree. And so that's why my limited point is valuations are compelling for a great franchise. The only thing is, and remember one thing, when you get a good price when the news is bad. Right? But the point is, the margin recovery is...
the news is not just bad, it's consistent questions over something that can't be proven here nor there. If you have the top job and the top position being consistently questioned in this way, it's just, people are like, why should we get into this? And
that is true. But sometimes,
why find out what's true on my dime?
Sometimes once in a lifetime opportunity comes like that only. If you study Warren Buffett...
does that apply to this?
So that, I'm saying, if somebody has patience to wait out for 1 or 2 quarters till they recover their margins, it is like that. Okay. But if somebody has to see next quarter again, then it is not like that.
Then I have sorry, but we are extending this too much, but then why don't you have a larger overweight on HDFC Bank versus ICICI Bank if HDFC Bank is a once in a lifetime opportunity?
No, I'm not saying that. I'm saying because ultimately I am also managing public money, and for 3 to 6 months if there is no return, my investors will also have a bad experience. That is the thing. So, but if one is a large individual HNI investor and he is ready to wait it out, there is a great entry point. That is what my limited point is.
A lot of public money in HDFC Bank right now. So that's the kind of responsibility there. Kush, you have been waiting to speak.
What do you want to start with?
I want to start with something that Neeraj said, which is, if you invested in HDFC Bank, for a particular time frame, your horizon or your perspective on it will be very different versus, if you invested, let's say, post 2020. Perspective is such a beautiful thing, isn't it? I mean, the best of the stocks can look so horribly bad just because of the timing or the time perspective. So beautifully said. Actually, I want to start off with something very different. The world is my playground has a very different meaning now, doesn't it? Look at crude oil prices over the last 1 month. 70, say 100, say 82, back at 90.
110 bhi hua tha.
110 bhi hua tha. And now at what, 84, 85? This is perhaps the world's highest, biggest, largest traded commodity, correct? This is not a small cap stock. This is not a far out of the money stock, option that you're, seeing such volatility in. I seriously, genuinely hope that, some sanity returns, but I think there'll be 907 odd days before that happens.
900, 1 second. 3 years.
Trump's presidency expires then.
But he'll move on from this. There's Cuba, there's Greenland. There's so many other things to occupy the US president.
So the sanity won't return even if it does to the crude oil prices.
There are the fish to fry. What about Nifty? 24,000 happened to be, and we talked about it yesterday. 24,000 happened to be that resistance which was too high to reach. Do you expect a bit of a pullback today?
Yeah, so some sanity returning to Nifty. That's a good thing, right? Last week, all 5 days, right, of the week, we ended in the red. So what we saw yesterday was expected and what we can very safely call a rebound rally, right? Now, 24,000, 24,100, the 20 DMA, that will act as a near-term stiff resistance. Momentum indicators are very much neutral. Also, Nifty at the resistance mark. So you would expect some consolidation at these levels. It's a good idea to stay long with 23,850, the 50 DMA as your trailing stop loss right now, or as your stop loss, as the case may be. But to go fresh long, I want the Nifty to take out that 20 DMA resistance at about 24,100, 150 thereabouts. Then perhaps we can talk about 24,500, which I think is on the cards, but I don't want to get too ahead of myself right now. So yes, constructive on Nifty. Bank Nifty is a tricky trade, by the way, because a lot of other participants are starting to do well. And just with the sheer amount of conversation we've had on HDFC Bank today here this morning, just indicates that, this one still needs to join the party. If it does, I think, 59,000, 60,000 plus levels also very much on the cards. But again, let's not get ahead of ourselves. You can hold your long positions on Nifty and Bank Nifty both. Don't create fresh ones just yet. I am more excited, by the way, about the mid space. Remember, 2-3 weeks ago, we said that thoda sa yahan pe pause aayega. We did see some correction. I think we're now getting to a zone where the SMIDs will start to perform once again. We'll start to see those, high performing stocks once again. Give me a day or two. I'm just waiting for some technical confirmations to come about, but I think SMIDs are ready to, get back to the party.
Day or two is this week, so I think we can wait that much for that for sure. Okay, I'm trying to toss between Somit's dealing room call versus Kush's calls. Kush, what should we do?
Go to Somit.
Somit first?
More awaited, even I'm waiting for his commentary.
No. With due respect, that is not necessarily the case, and Somit will agree as well. But we can take either or. Let's assume that approach. Yeah. So let's go to Somit first for figuring out what's the chatter in the dealing rooms this morning. We'll ask Kush to double up with maybe a comment on some of the stocks that Somit is pointing, and then his calls. Somit, good morning. What do you have for us today?
Good morning, Neeraj. Firstly, it's PN Guardgill. Now, there are buy flows on the PMS desk. Now, dealers are saying that there could be a QIP announcement very soon that could come in for PN Guardgill. Yesterday, the company reported a strong set of Q1 numbers. It was up 6.5%. QIP is something that is expected to now follow through for PN Guardgill. A set of stocks, Gulshan Poly, HUL and Pidilite. There are buy flows on the large HNI and the PMS desk. Dealers are expecting strong Q1 numbers from all the three names. And on the flip side, for ABB India, there are some sell flows. Dealers are saying that the Q1 numbers could be on the weaker side. Now, do remember that the parent company had reported numbers few days back, and they had reported a very strong order book growth for ABB India as for the India unit as well. But dealers are expecting a weakness on the margin front for ABB India. And lastly, when it comes to Max Financial, there are some buy flows that are happening at the lower levels on the institutional desk is what dealing rooms are indicating. A domestic mutual fund was a seller here, and that selling pressure is largely getting over soon. So the stock could bounce from the current level is what dealing rooms have indicated.
Okay, well, thanks a lot for that, Somit. So So interesting. Okay. Watch out for some of those names. Both Parag Thakkar and Kush Bora were listening to it, and they have a comment on each of those. Kush Bora, why don't you start? Of course, double it up with your stock calls as well for the day. So any one of the stocks that Somit was speaking about, and then your stock calls for the day.
Yeah, I know for sure that Parag is going to do a +1 on this, which is Pidilite. Could run on the cusp of a breakout. If 1625, 1630 is taken out in the next couple of days, or maybe even today, I think the stock's actually headed for a higher level of 1700 plus. So this one's already had a good move. You're seeing consolidation, but on the verge of a breakout. So do watch out for that as well. Now, as far as the stocks go, a very interesting list today as well. Cosmo first. This stock is making a comeback after a long time. It's anyway done fantastically well if you take a very long time horizon of say about 7 to 8 years. But in the last few years, it's dipped. Now it's making a comeback. We're now playing for relatively smaller targets. So 940, 975, these are your targets. 865 is where you keep that stop loss. Universal Cables, this too has had a good move, so has the rest of the pack. So here too you're seeing some positive traction. 1300, 1350, these are your targets. 1210 is where you keep that stop loss. Forgings comes back on the list. We've had a discussion on this some time ago as a call as well. So 605 and 545. Special mention for Krishna Foschem. It was the weekly pick yesterday. The first target of 169 was hit. In this age of instant gratification, जिस दिन कॉल दिया उस दिन टारगेट हिट होता है तो अलग ही मजा है, राइट? इट्स लाइक रिसीविंग एन अर्ली बर्थडे प्रेजेंट. सो यस, द फर्स्ट टारगेट वाज हिट. यू कुड वेल कंटिन्यू होल्डिंग ऑन टू दिस वन फॉर अ सेकंड टारगेट ऑफ 178, बट बंप अप योर स्टॉप लॉस और trail your stop losses to 160 to 163, the initiation price.
Wow, and that's quite something, yeah. Krishna Foschem. If you can just pull up that stock once more, just to highlight the kind of move, simply because I think no, just show. Oh, okay. I don't think we can show just yesterday's chart as yet, but maybe we'll talk about it a bit later on. But Kush, Parag bhai, since Kush mentioned it, let's double click on Pidilite.
Yes. So it is my favorite stock, like Torrent Pharma. It's my core holding, and I always buy when crude oil goes up. And that's why it's a simple recipe to buy Pidilite. So yesterday when crude oil fell, Pidilite went up by 2.5%. So it is always the case. When crude oil moves up too much, because generally people say that there will be margin pressure, and so Pidilite comes down. It's a great franchise to own at whenever you get a good entry point, you should buy that stock. And I am expecting a very strong quarter for them also.
Why so?
Because VAM prices have dropped. So I think the margin wise they'll beat estimates.
For the current quarter?
For the June month. So I would say that margins can be in the range of 26%, which should beat estimates.
Okay. Keep an eye out for Pidilite then, and maybe some bit of it happened yesterday because the crude prices came off, but keep an eye out for Pidilite for sure. Okay. Coal India is a stock in focus as well. Mixed brokerage calls on this one. Parth joins in to talk about the JP Morgan argument versus the Jefferies argument. Is that it, Parth?
Yeah, that's right. And it's so interesting that two separate brokerages have very contradicting views on the same company. Let's begin with the analysis. If we start with the first point, then Jefferies has a buy rating on Coal India. They're targeting a price of 500 rupees per share, and that implies an upside potential of 17% from the current market prices. On the other hand, JP Morgan has a neutral rating on the company, which they have cut their target price after the company reported their Q1 earnings yesterday, and they've cut their target price to 430 rupees per share. So on one side you are having 500 rupees, and on one side you are having 430 rupees. On the next point, Jefferies has estimated higher coal prices because of the e-auction prices. They are expecting to be in the range of 3,000 to 3,200 rupees per ton. But on the other side, JP Morgan has an argument that because of the higher inventories globally and also in Indonesia supply increasing, they are seeing limited upside in the e-auction prices versus Jefferies is estimating. On the next point, because of the power demand that we are seeing recovering in India, Jefferies is seeing a 5% yearly volume growth for Coal India. But on the other side, JP Morgan has an argument that we saw in the Q1 numbers as well. Coal India's production declined by 7%, and JP Morgan is seeing a production growth of just 4.5%. So maybe Coal India will not be able to keep up with that power demand according according to JP Morgan. In the next point, Jeffries is saying that the valuation of Coal India remains attractive at 8.7 times their FY27 PE, and that is actually below their 9.2 times historical average. But JP Morgan has said that because of the lower e-auction premiums, that weakens the risk reward on Coal India. And in the last point, Jeffries is expecting a 6% EPS CAGR during FY26 to FY29, while JP Morgan has cut their EBITDA estimates for the same period by 1 to 3%. So that's the entire fight between the two brokerages. And lastly, on the analyst recommendation side, to get an overall picture as well, around 14 analysts have a buy rating on Coal India with a return potential of 8.1%. So it will be quite interesting to see how the stock reacts today after they posted their Q1 earnings yesterday.
Okay, well, we'll keep an eye out for Coal India for sure. Interesting contrast between two analysts, and it's again a stock that is maybe a tactical play most times, doesn't necessarily have a trending move, and maybe rightly so. Incidentally, the subsidiary which got listed has actually done much better, Parag Bhai, since listing, and has created wealth as well. Any thoughts here on Coal India at all?
So my view is very simple. There are two ways of looking at it. If one sees intrinsic value of the business, it is clearly a buy. Okay, at 8 PE, at 6% dividend yield, and at the necessity of coal for India and the way power demand is going to grow, it is a buy. For a person who looks at very short term, he has to just focus on earning growth, delta of earnings, right? And that will come from e-auction coal price. And that is dependent on imported coal price plus the demand of coal in India, right? So if somebody takes a view that e-auction prices of coal are not going to go up in a hurry, then and the wages will definitely keep on increasing, right? So from earning delta perspective, a short term or a tactical investor will not buy the stock. If there is an intrinsic person who understands intrinsic value and the need of this business, he will buy this stock. I'll put it this way.
Yeah, I think very few of the latter, to be honest, and it's completely fine because a lot of our viewers don't really have the time to be able to going into so much depth for a business which has not given so many returns to try and figure out the intrinsic value, the eventual use of coal, how much of it will go into power, so on and so forth. It's a long list. So it's okay to ignore Coal India, frankly. There are a lot of other stocks which are doing really well. And, frankly, if you are at a loss of which are the stocks that could be in focus today, aside of all the things that we've spoken about, Sharad, there's a list of some more which might be in focus today. Sharad, good morning.
Good morning, Neeraj, and of course a lot of action we can expect in the mid-cap spaces, but I'd like to talk about sector-specific moves which we can expect going ahead. Of course, the first one is going to be on the important announcements coming in from the Gujarat is important policy for the shipbuilding and the repair segment. The 2026 policy was launched last night itself, and bullishness coming in especially in the new areas. The investment is also a very big amount, almost you could say 27,000 odd crore is the amount of investment which is expected in the stocks which should be in focus. Is Swan Defense, we have Knowledge Marine as well, and also ABS Marine. So these are the smaller names which might buzz in trade. Also looking at the toy sector theme, that's also picking up, especially keep an eye on Shelley Engineering and Acus India. They have a consumer division as well. Now the government has set up its task force to boost the toy manufacturing and exports. Now they're targeting 5% share of the global toy market by 2032. Also looking at Good Luck India, very interesting update coming in from its arm Good Luck Defense. They have cleared an important inspection from Ministry of Defense, and the certifications have been received for artillery shells. These are of course the open artillery shells. And lastly, Misho would be in focus. A little bit of selling pressure might be there because there will be a block deal where Elevation Capital is likely to sell almost 12% stake, which the value comes into roughly 1200 crore rupees. So two sectors and two stocks which should be on your radar today.
Okay, thank you for that, Sharad. Ruchit Jain of Motilal Oswal Financial Services joining us now on the show. Ruchit, very good morning to you. Where are you seeing the Nifty going today?
Yeah, hi, very good morning to everyone. Well, I think the markets would remain range bound only today. Last few trading sessions, we have not seen any directional move coming in the index. The index has formed a base around at 23,600, where the rising trendline support is coming technically. But on the high side, a lot of hurdles around 24,000, then 24,200, 24,400. You can see that it won't be an easy task to clear all these hurdles unless we see some big positive news flows. So more or less, I think we would stay within a broad range today also. 24,050, 24,100 would be the intraday hurdle that would act, and 23,800 would act as a support on the downside. So I think it could be a day of where more stock-specific momentum would be there rather than the index.
As we're speaking, sources are telling NDTV Profit that HDFC Bank has concluded an internal review regarding its past deposit arrangement with MSRDC. That's what we actually saw, the exchange filing on which the bank put out. But the important bit is, this is the end of the matter at a board level. The board now moves on to the question of CEO appointment. So it's the Nomination and Remuneration Committee which will meet soon to take this decision. That's what we're hearing. And they will deliberate on the reappointment of a CEO. They will evaluate this basis board decision. So RBI will evaluate the CEO reappointment basis board decision. Now, a lot of this sounds like par for the course, but I think the next 24 hours is important to watch in terms of what happens with HDFC Bank. I would say that nothing is a given till we don't know what the board decides to do.
Absolutely.
Is that fair enough to say?
But see, I'll tell you, it's a 49 lakh crore balance sheet bank with 11 lakh crore market cap. So whatever will happen will be good for the bank, good for the country. From government side, from RBI side, from HDFC Bank board side. You cannot play around with such a large entity. It is too big to fail, too big to lose trust of one, I think.
No, I don't think there's a question of losing trust at this point. But, you know, jo hoga, achhe ke liye hoga is a nice way to look at things. But what is eventually, I think it comes down to whether there's going to be one solo name going ahead from the bank side for a CEO appointment, and whether that is a reappointment, if that's the start and finish of what the bank board chooses, or there will be more to it. I think that is what we have to wait and see.
That we'll see.
That will be the key to look at. Ruchit, are you looking at HDFC Bank this morning? First, ticks will be in a question in just a minute. But before we see that, my question to you is, how are you looking at HDFC Bank this morning?
If you look at the recent past, the stock has witnessed buying interest around at 720, 730 levels, be it in the month of January where the bottom was formed there. Then again in the next correction in the month of April, we saw that the stock witnessing buying interest from 720. Now last 10-12 days, the prices have already seen a correction from that 840 to 740 now. So the risk-reward ratio is definitely favorable, where the downside seems to be limited for the stock. But yes, the stock has not been in that kind of trended phase on the positive side. But just because of the favorable risk-reward ratio, I think one is looking for positional trading or maybe a kind of stock where you want to add it to a portfolio, then these are good levels to take counter trades here.
Okay. 9 a.m. and the pre-open rates have started kicking in. HDFC Bank, first of the block, we're just showing that, and that is starting off slightly weak and skittish. That might have a bit of a bearing on what the bank Nifty does for sure, but even what the Nifty does, bring up the Nifty and the Sensex therefore in that regard. And there might be, that might have, the move on the Nifty and the Sensex might well have a bigger bearing from what's happening rest of Asia. Because remember, if there is carnage on the street in Asia, India doesn't get left behind. If it's only when there's a mellow let down in this semicon trade unwind, that's when India benefits immediately. Otherwise, we will also get hit and then recover maybe. But a lot of individual pockets of performance that could be attributable today. So watch out for BEL, by the way. The numbers, you could argue some of the brokers were saying a bit of a miss. What is the stock doing on open? For now, very, very flat. Pidilite has had a good move overnight, and all of the crude beneficiaries might be in focus as well. So you might want to keep an eye out for some of those in the session today as well, because I think that cohort of stocks could be looking okay. But a lot of result boys in the session today, and Adani Green QIP in focus today. But Tilak Nagar, CCL, Aeroflex, Gallant Ispat, Capri Global, there are a lot of names out there which could be in focus this morning. So keep an eye out for all of those. Okay, well, Aeroflex, let's see if it does have this 10% start or no, but I think numbers look very good with that 72% uptick in revenues and profit after tax at 18 crores versus 7.2 crores. Certainly a stock you want to keep in mind along with Capri Global. Ruchit, your ideas for the morning?
Yeah, so a couple of names on the buy side from the large cap space itself. Pidilite is one stock which we even like technically, where in spite of that market correction which we saw from the highs 2-3 days ago, we have not seen any kind of volume-based selling over there. So when the markets are not doing good, the stock is relatively holding well, and the stock is now showing signs of a breakout from its consolidation. So we expect some good momentum on this. Keeping a stop loss below 1570, one can go long for potential targets of 1700. And Bajaj Finserv is another stock which technically is on the verge of a breakout from its recent consolidation phase. So here also we expect some good momentum on the positive side. So it can be bought with stop loss below 1860 for potential up move towards 2000.
Okay, just want to look at a few quick ideas before we get into the fag end of the pre-open session. Polycab, let's just pull up Polycab, see what it's doing pre-open. CLSA has initiated an outperform on Polycab with a target price of 10,150. They're saying this company is springing ahead, market leadership with industry tailwinds priced in, industry growth favoring market leaders, sustained growth backed by scale and execution. They expect PAT of 17% and CAGR of 15% between FY26 and 30. They see strong execution, rising exports and premiumization, which will reinforce its leadership position over the medium term. CLSA on KEI Industries, they've initiated a hold with a target price of 4,800. They're saying higher voltage and higher value coming in, strong fundamentals, fair valuation, and high specific cables is the next growth lever. The company is built on right foundations. Okay, between the two, Polycab, KEI, and I want to pull up RR Kabel because there's an interest in RR Kabel as well that they have talked about. CLSA, they've initiated an outperform on RR Kabel, and that'll be a big brokerage call of the morning that we'll talk about in just a second. How do you look at these three? Polycab, RR Kabel, and KEI.
RR Kabel. I'll go with RR Kabel. In spite of 84% move in last, I think, 4-5 months. This is the first time I'm saying that, and I'm not holding it, so I'm not a beneficiary of it, but phenomenal numbers, just phenomenal numbers. 17% volume growth, this quarter 202 crore PAT, 28,000 crore market cap, so not very expensive compared. If you are seeing a company which does above 15% volume growth and with such robust margins, phenomenal numbers, unbelievable actually.
Kushbora, we don't know if it'll start off 9% higher or otherwise, but just wondering, what is your view on any of these three names, either of or any of these three?
1400 रुपए से RR Kabel recommend कर रहे हैं. I just checked, we've recommended that stock multiple times. Now, today, I think it's a good idea to book profits. Had a run, you get this kind of a gap up, book profits, buy again on dips. Where do you buy? If you do get them, if you do get it close to 2350, 2400 levels again, हो सकता है आज नहीं हो, it might take some time, but maybe closer to those levels. Why does that hold ground? Because remember Polycab, we had a discussion some weeks ago, about 2 weeks ago, when it was in that downturn, and I said 8800 to 8700 to 8900 का band है, यहाँ पे support zone है. If it halts here, then you can buy. That's exactly where it took that support, 8900 thereabouts, right? And it's rebounding from there. You have a positive note today as well. From a positional standpoint, mind you, this is a good entry point. Keep your stop losses at the lower end of that band, which is 8700, and you can buy Polycab from a positional trade point. KEI, quite rightly so, I think you can avoid for now. So book profits in RR Kabel today and enter Polycab.
Look at Happiest Minds this morning. Supreme Industries is looking good. Coforge is looking good. We talked about Coforge as well. I want to see where HDFC Bank is settling now that we are moving towards the end of the pre-open session, and whether there is some stability there. Nothing much is happening on that stock price. Godfrey Phillips was a bad set of numbers, tough set of numbers for Godfrey Phillips. That stock about 9.5% down. We spoke yesterday about how ITC will also have a tough quarter, and I think that's what you're seeing play out on the screen this morning. Just wondering how you would look right now at a Godfrey and an ITC with this bucket, knowing that this is going to be a tough quarter?
So I generally buy ITC in around 275 to 282 range. That is my range, because that is where I feel at 5% dividend yield, the bad quarter which is going to come in this June quarter is factored in. So I'll be a buyer on in ITC on dips.
Okay, we were talking about RR Kabel. That's the big brokerage call of the morning. Sharad, what's CLSA saying about it?
Well, there are two things happening. CLSA has, of course, initiated an outperform rating with a target price of 2850. But post-market hours in the con call, two important things were stated. The H2 will be better than H1. And also they're expecting 100 basis points margin expansion towards the end of FY27. But coming back to the big bold brokerage call, Of course, the company is rising up to the challenge, especially against its peers. Now, the ambition is backed by the expanding capabilities and the industry dynamics right now. The demand tailwinds is helping all the sectors. Growth pipeline is strong, and if you talk about the numbers, the revenue PAT CAGR is expected between 18% and 24% respectively over the next 4 years. So yes, the brokerages are bullish, so is the management commentary.
Yep. Interesting. In that curious 8.9% number stuck to our cabal in the pre-open, but yep, it is likely now that pre-open rates have settled, right? It's starting off as the top gainer on the bourses, followed closely by Usha Martin, Capri Global, which had a good set of numbers too. Macrotech, about a 3% uptick on that one. Coforge at 1570 doing okay for itself. Emphasis doing okay. Infosys doing okay. Somebody smiling in the studios. Yep, a lot of them. Paratakar, for people who have missed this conversation earlier, are these levels wherein you would book profits into IT if you had bought them tactically earlier?
Yeah, if I bought tactically earlier, which I had, luckily, some of the stocks, I would tend to book in this rally. Slow, not entire holding, not entire 10%, but at least 2-3%.
Okay, book some of the monies into the gains.
Yeah.
TCS, by the way, 2325 is up 1.2% as well. So pretty strong showing from some of those. Ruchit, a pocket of stocks that is doing very well is this Alkyl Amines, Balaji Amines, Indo Amines. I think Indo Amines too, a smaller name, but had a very good rally in the last few days as well, before maybe cooling off a bit. And the numbers are following suit. I believe Balaji Amines came out with numbers yesterday. Tamanna, you mentioned Balaji Amines earlier?
Yeah, it was on my watch list.
As well, right? So these 2 or 3 names, Ruchit, how do they look on the charts? Would you trade them on the upside, or if you had positions, would you believe it is better to book profits here?
So relatively, I think Balaji Amines has a very good chart structures. The clear high top, high bottom structure from last 1.5 months can be seen. Any decline towards 20 and 50 DMA range is getting bought into. So clearly this stock would stand out. And on the high side, the stock has potential to rally towards 2600 kind of level. So if anyone has long positions, they should continue to ride on this trend. If you have to choose anyone of these for creating fresh longs, then it would be Balaji Amines, keeping the stop loss below 2,150 for potential up move towards 2,600.
Okay. Balaji Amines about 2.85% up after the pre-open session. I want to look at BEL as well. So numbers looked okay. Margins have been squeezed, and part of it also because of the product mix. Yesterday you spoke about how BEL was your top defense holding, or your only defense holding.
Only. No, not top. I'm not holding too many defense stocks. So it's just 1.5% by the way.
It's the first in a race of one. Okay, so but it's made it to your portfolio. How do you look at BEL and basis the numbers, because the semiconductor
cost has gone up.
Cost has gone up, which was to be expected. That's hit the margins to some extent, but even the order book has not grown.
Yeah. So basically, this is a problem with any business which is lumpy. Right. In fact, BEL is the least lumpy one. If you have seen the result of Zen Technology, and
the order book has not grown.
Yeah. So basically, this is a problem with any business which is lumpy. Right. In fact, BEL is the least lumpy one. If you have seen the result of Zen Technology and various others in defense, you would realize that BEL is the least lumpy one, and that's why I hold BEL in the portfolio. And around 40-45 times trailing, I know it is expensive, but it has a moat. 72,000 crore order book, and I think 15% revenue growth and 28% margin guidance is kept same by the management. So I would say that definitely below 400 somebody will definitely buy the stock.
Should somebody buy, Mr. Somebody? Should you be buying the stock below 400?
No. So they say fundamentals tells you what to buy, technicals tells you when to buy. Sometimes it tells you when not to buy. ठीक है. तो 400 पे रुक जाओ. अगर उसके नीचे जाते तो then there is 385, 380 kind of support zones that exist. Maybe around those levels. But remember, for the last year and a half, the stock has not gone anywhere. So I generally don't prefer to trade or invest in stocks which have not done anything for a while. Unless there are signs of recovery, there aren't any on this yet. So maybe 385, 380 support zones you look at and hold with a stop loss if it's a trading position.
Okay. Well, 2.5 minutes left. So let's give our guests, or let's take the top ideas from our guests instead of trying to take them in a bit of a hurry. Sometimes we tend to do that well. and Ruchit, I'll come to you first. If you had to bet on one stock for trade today, based on the pre-open rates, now that they have been discovered, which stock would that be, and what are the levels to watch out for?
Based on the pre-opening, I think IT is one sector which really could do well. Most of the IT heavyweights can be seen on a positive note. So I think I would go with Coforge, which has come out with the numbers also, and the stock is even breaching its previous recent swing high resistance. So that has potential to rally towards 1640, 1650. So go long on Coforge over here, keeping stop loss below 1520 for potential up move towards 1640.
After its run-up that we've already seen, and you spoke about it earlier, Parag bhai, you said valuations now need to be looked at. Would you look at alternatives to a Coforge right now if you want to be in that IT space, if you want to come in now? You were on the sidelines and you said, IT, really, I don't want to get into this. It's looking a little clearer now. Where would you come in and buy?
So basically, I have, as I keep saying, I'm slightly overweight IT. And this is a stance which I would like to continue. I may trim a little bit of IT in this rally, but I'll not go ahead and buy now. The buying time is over for me now. When there was extreme panic, it was a time to buy.
What about you on Coforge and any of the IT stocks?
Not a bad name at all. Plus, it's already trending up now. It's taken another 200-day moving average. So, in fact, this is where you either add on some more or at least hold with trailing stop losses. So, no reason to book out in Coforge. In the IT space, look at OFSS. The reason is this has been the strongest amongst the pack. There has been a downtick and now it's on the way up. So with the stop loss around the 10,600, 700 mark, again for levels of 12,000 plus, I think OFSS is back in action.
I want to see some of the others that have reported and how they've ended before we hit the opening bell in the pre-open session. Pull up a Northern Arc for me. Pull up an Aeroflex. Let me look at a JK Paper. Let's look at a Tilak Nagar. Let's look at some of these and see what's happening there. Northern Arc is completely flat. JK Paper is down about 1%, in fact. What is Tilak Nagar doing? And the Aeroflex stock, let's take a look at that as well, whether it's looking interesting in any way. Aeroflex about 5.5% up. Do you look at this on the charts, Aeroflex?
Very positively, very positively. You should continue holding on to this 405, 410. That's your stop loss. Wait for buying right now.
Okay, Kushbora, your top call will take post-market open because there's just 12 seconds left for the markets to kickstart trade. Remember, we may have a start which is maybe mildly in the red, but don't be surprised if we actually recover from that, simply because what's happening in Asia right now is something that is not quite an India problem. India suffered, in fact, because Asia did so well on the semiconductor boom. This should actually be the reverse. But right now, I'm not surprised with this. We mentioned in this morning that the kind of trade that we had yesterday and the fact that we don't have that problem. Again, this might well unravel and we might be lower as well, but I wouldn't be surprised that if we were lower, we recoup some of those losses as well, because for us, the biggest overhang, crude, is coming off. Advanced decline ratio is positive, 946 to 683. Mid caps mildly in the green. Banks about a 0.21% in the red. I wonder if HDFC Bank is contributing to that. And IT should come up on your screen because IT globally had a decent day. Let's see if, oh yes, look at that move, 2.27% higher, really strong show. Pull up the heat map. And let's see what's moving and what is not. Is HDFC Bank having a dull day? Well, it's not in the top 10 losers. Reliance is, from a heavyweight perspective. That one is maybe putting a bit of pressure. HDFC Bank is just right here, 0.2%. BEL, top loser. Coal India, top loser. Power Grid, mildly lower. But what's happening at this end? Look at the top four. Infosys, another 2.5% after the Jeffries upgrade yesterday. TCS, another 2.5%. 20 days after Parag Thakkar gave it a table thumping buy, this is an 18% return from that level. Cipla, 2% higher. Tech Mahindra, 1.7%. HCL Tech, 1.2%. It won that large order, good results. What more can you ask for a fairly decently valued company? Shriram Finance comes to the fore today. Wasn't quite very active yesterday, but up about 1%. I mean, at the end, it clocked in 3%, which was very good. At the start, it wasn't very active. Today, it's building on from the 3% up move yesterday. Max, Wipro, JSW Steel, even Stevens on the winners and losers. But I would give marks to the winners because on a day when the Asian markets are a sea of red, I think we are holding on, which is very good news. Courtesy IT.
It's one of those days, you know, when everyone was crying that we don't have any semiconductor stocks on our key index. Today you're glad. So the Kospi can keep the SK Hynix at least for today, I would say. Look at how the Nifty is hanging on to the 24,000 mark with its fingernails, if I had to describe it like that. Let's pull up the Nifty contributors for you this morning, and it's a fair amount of green. If there is a drag, where is it coming from? An RIL dragging down by 11 points. BEL, we told you it's a lumpy business, but that margin squeeze the street is not going to like. That's why we gave it a thumbs down. That's exactly what's happening. Coal India was also a bit disappointing, but really it is the IT majors who are having their moment in the sun. If you've missed this entire story because you were on the side that thought that their businesses are not really AI ready, then this is not the time to jump in, is at least what our experts are saying. Let's get the mid cap and the small cap stocks on this morning for you and show you what's happening there. The Nifty mid cap 150 completely flat. Let's pull up the small cap. That's pretty much flat as well. The advanced decline ratio, the gap has narrowed, but the declines have more on that side, 1212 to 986, which is showing you that there might be a bit of a bearish trend. Watch out for this space. I think the last word has not been said on the market mood this morning, which is why good idea to go into stock specifics. I want to pull up HDFC first. The CEO, CFO amongst top three have been fined for business overreach. That's how we've described it. We have to watch out for the next 24 hours because the question about whether the CEO continues or is pushed for reappointment by himself, what happens, all of that will get sorted out pretty soon. I want to look at some of the results which have come in. Happiest Minds, Coforge, among others that have reported. Let's pull up Bharat Electronics. Let's pull up an Aeroflex if we can. A whole host of these companies have reported. Coforge is actually quite rocking this morning, 6% up. As we can see, Aeroflex is also about 6% up. Bharat Electronics about 2.5% down. There was a positive call on RR Kabel, Polycab and KEI. I want to see what's happening there. It's RR Kabel which is really ruling the roost. Some more result names: CCL Products, Balaji Amines, Aeroflex. Let's look at those. It's actually not a positive call from CLSA. These are the result names. Balaji Amines is also doing okay. Semiconductor stocks have slide. Has it helped? IT companies, Infosys, Emphasis, TCS and Persistence. Just let's look at some of them. All of them doing well, of course. Infosys, they're about 2.5% up, showing strength. TCS nearly 3% up, and so is Persistent Systems. This is the day when you should be happy that you have IT in your portfolio if you sort of hung on. But mainly it's the IT story that stands out, Neeraj. Everything else is middling.
Yeah, you could almost argue, yes, that is true, that everything else is kind of middling. The Nifty 500 too literally is middling because it's just 0.04% if you will. So nothing dramatic out there. You could argue that anode, alkylamines, etc. are okay, etc. RR Kabel too is no longer 8.9 but 6.6%. But Coforge, big strong show and just promises that. But the beauty is just the way the IT names are actually building on that strength. TCS is now up 3%. It started at 1.8%. So it's a beautiful start on open. Kush Bora, I couldn't get the top call from you, but give me a top call as well. But also just view on, let's say for example, Nifty IT or TCS from a trade perspective individually.
You know, I'll rather share something interesting. I want to now listen to everyone who said, let's go global on trade, you know. India chodo, bahar trade karo. Because the only trade in town, you know, globally was AI. We were talking about entering that trade at the peak of it, right? So I think India is अच्छा है, right? We've got enough and more stories here to play around with.
A little early to write off. Now next week when you have Apple, Meta, all of these companies reporting and then they sound good, then people will say, "Arey, please diversify."
No. I'm not writing that off. I am saying कि हम global trade में जाने की बात तब कर रहे थे when the AI trade was at its peak. At least now we can say was at its peak because it's come off. यहाँ से भी चलेगा. So how much of an upside do you think they are going to have? Correct. So I'm not saying it's not a bad. Actually, I'm saying it's a bad trade. So yeah, don't. That was a bad timing. Last month, 2, 3, maybe that was bad timing to get into the global AI trade. So that's the word. Yeah, IT index itself gaining from strength to strength. It's going good. I was actually a little intrigued when Parag Bhai said that he'll be booking profits on some of these names because the risk reward ratio still remains favorable. Rather, what I would do is trail my stop losses on some of these names. So you could continue holding on OFSS, Coforge. These remain our top picks. And as far as TCS goes, here too you're seeing a good run. So like I said, hold this one as well with a trailing stop loss at 2275.
Ruchit, any call that you want to make after the markets have opened?
No, I think IT is on the only trade for today, as we spoke in the pre-opening as well. So clear relative outperformance can be seen in the stocks over there. Within the IT names itself, Tech Mahindra is another name which looks good on the charts. The post numbers, we did see good reaction recently, and the follow-up move is looking strong. So there was a gap area around 1670, 1680. I think the stock has potential to reach there. So Coforge is one stock which we gave during pre-opening. And I think if one has to take any fresh trade now, still Tech Mahindra is looking good here.
Okay, Tech Mahindra is looking good for a fresh trade. Thank you so much, Ruchit. Thank you, Khush Bora, Parag Thakkar for joining in today. We're joined now by Gurmeet Chadda, Managing Partner and CIO, Complete Circle. Gurmeet, great to have you with us this morning. We're talking about IT being the only trade in town. Are the tides turning, or is this just a one-day story with semiconductor stocks, slumping to the extent that they're making our IT companies that we were all questioning actually look good?
Hi, good morning, Tamanna. I think it's more tactical for now. Also led by good numbers from Coforge, although it includes the Encora number which they acquired in April. But even if you adjust for that, I think what Street liked was the combined margin was, I think, upwards of slightly 16%, and they had guided a little lower. And even the organic number was slightly up. See, but end of the day, if you look at the guidance of all top IT companies, it's between 1 to 3%. Now, that would not lead to a material upside in stock. You might have because they're in the oversold zone, and you have Kospi now, circuit down, and most of the semiconductor names, down. You could see a bit of a bounce there, but the growth needs to come back. And in one of the interaction, a lot of the industry leaders said that there's hard negotiations happening on the size of the contract, on margins, etc. So I think you got to be stock specific here. Unfortunately, what is good is not cheap. So Coforge and Persistent isn't cheap. We have been slightly nipping into KPIT Tech of late, and we have just HCL Tech because HCL Tech is far more diversified versus the other top three. But our exposure remains sub 3%. And at best, right now, to me, I could be wrong here. Looks like a contra call. We are more interested in some of the platform plays, which is not the digital companies, the likes of Eternal, Grow, Misho, etc. I think that's where the growth is there, unit economics is there, not comparable, but our digital portfolio would have a tilt towards that versus the IT services companies.
Okay, Gurmeet, good morning. And we never know when is this conflict gonna end, if at all, and therefore what will happen to crude prices over a medium term, right? The medium term is technically the long term right now. But considering the fact that we've cooled off a little bit in the last 2-3 days, is this enough ammo to go out and buy or invest into India, looking at the fact that the Q1 earnings season is turning out to be a charm relative to what was anticipated?
Oh, absolutely. I'm quite pleasantly surprised with the earnings, and I think the action still is stock specific. I don't think so. The indices still have those kind of legs in terms of, unless Reliance and HDFC join the party, Nifty it crossed, let's say 25,000, 26,000 would not be easy. And obviously you need a bit of IT support as well. Don't know whether it will come by or not. But look at some of the numbers which have come in. Look at some of the, yesterday, for example, Aeroflex reported numbers, Senor Pharma. You had a few days back some of the tier 2 banks reporting very good set of numbers. So I think the action is more stock specific, earning specific. I think there are so many small mid cap companies reporting 20-30%. kind of an earning growth in this environment when everybody thought that supply chain disruptions, raw material inflation will affect margins. So I'm quite pleasantly surprised. I've never seen this kind of Q1 sales by auto companies cyclically low. I remember you interviewing yesterday Shriram Finance team, and they pointed out the same that disbursements are very strong. My sense is the auto ancillaries haven't seen a bit of a rub off. While the numbers have gone up for Bajaj Auto, TVS, and some of the others, the auto anchs, maybe with an exception of one or two like Sona, etc., haven't really rallied. And I think that's where probably you will see a bit of an opportunity. So you got to be more stock specific wherever the earnings are till the time the FIs return. And I don't know when they will return. I mean, it seems to be a very, very long wait.
Okay, Gurmeet, I want you to stay on with us and join in our next conversation. I think your views on this will be very interesting, and we've also invited Abhizar Divanji to talk about this. We're just going to focus now on what's happening with HDFC Bank. They've concluded their internal probe into the MSRDC deposit matter. As you know, they put out an exchange filing last evening. The board also found instances of business overreach but no malified intent. Abhizar, we've been speaking about this for a while. Do you think that this is a decision by the board that puts the matter to rest? Is it a rap on the knuckles, or will it now lead to more questions?
I think it is to put the matter to rest. Because no action would have would have invited further comment, and sometimes irrational at that. So I think it's best to put it at rest to say that yes, the board has taken some action. Action is required. Yes, of course it is required, because even if it is just a bad business practice, it is something that needs to be dealt with. And I think that about kind of gets the treatment it deserves more than anything else.
Gurmeet, how are you looking at the whole HDFC matter right now? Do you think the overhang continues till we at least don't have some clarity from the board or what's happening? The NRC will decide on the CEO reappointment, etc.?
No, I don't think so. It's getting over very soon, Tamanna, honestly, because I'm very pained being an ex-employee and a long-term shareholder of what is happening in the bank. You can just, I mean, without being too harsh, just visit the branch of an HDFC versus an ICICI or other bank. You'll see the difference. I think the focus is so much on fee income, which is insurance and earning FX spread, etc. I think somewhere they've lost focus on core banking, and that is now getting reflected in all kinds of issues. Plus, these things should be managed. When you source large deposit, I've been a banker. I think should not have come to this point. Also, I think they have been on different earnings call, not been as assertive as you would want an HDFC bank to be. Look at the NIM, 3.26%. Now, I've seen HDFC Bank at 4.5%. I know it was a merger, it was a costly merger, all of that. But where is the synergy? I mean, the merger is now, 3 years old? The combined market cap was 14 lakh crore before merger. You are at about 11.5 lakh crore. There has to be some answers. I mean, you can't have a premier bank losing so much, and so many issues with regulator, tier 2 bonds, now this fixed deposit, US scrutiny, digital apps, net banking being an issue, one after the other. So clearly shows that somewhere the business vertical heads, are not in sync, which wasn't the case. I'm sorry, when Mr. Puri was around. So somewhere I think it needs a bit of a rejig in my view, and I think it's more a culture issue than the operating performance issue. Once you fix that, which happened with ICICI, a lot of things will fall in place.
Abhizar, how would you respond to that? Because I buy your argument that let's assume that this judgment or this result that has come out puts to rest the current issue that was at hand. But what about the overarching problem that stays with HDFC Bank versus almost any other? And we tend to look at things from a market's lens because it gives a great reflection. Last 5 years, the stock has not done anything. I'm not asking you to comment on the stock, but it gives you a sense of how is it that people are viewing the HDFC Bank performance in the first place.
No, so you're right. In a sense, does the bank need an overhaul in some sense? Yes, it does. So first of all, let's put to rest there is no governance issue. In fact, I would actually say that this bank has been more than forthcoming while other banks have not been. So in that sense, I would give it complete regard that yes, there is an institutional ethos that this still stays in the organization. Now, coming to the merger point that was also raised right now, and where does HDFC feel the turmoil, in my view, is the fact that yes, they're trying to grapple through a difficult merger, and it has taken 3 years. By the way, 3 years may not be enough to do such a merger, at least, especially given the external circumstances of a deposit run because of the capital markets, technological changes, which every other bank has been through, by the way, mis-selling kind of stuff. So all those things have happened. So at the end of the day, I think HDFC Bank, one, is in high scrutiny because we discussed last time because of the stock holding that people have. The other thing, of course, with HDFC is that there was an expectation. As the earlier speaker also said, he was part of HDFC. There was an expectation, and that expectation, in a way, has been buried. Because, oh, how can the best of the best do this? But the reality is, everybody does it.
Allow me to come in. It's not just expectation; it's the action taken. Now, you had this investigation. You came to the conclusion that there was a business overreach and no malified intent. I mean, I'm going to ask Gurmeet if this is standard that you come into this overreach, but then look at the action. There's a warning letter and there's a 1 lakh rupee fine on the CEO of the company. Just the optics of it. I know there is a reverence for HDFC Bank because of the storied institution it has been. But the fact is, if this was any other company in any other sector and there was a business overreach like this and the CEO was fined 1 lakh rupees, it would be described as a joke. That is also a fact.
So if Tamanna, if you're talking about the fact that have people been let go easily, if that's what you want me to address, I will talk about it. So my own view on that is that this issue has a much larger implication. The larger implication is every other business, by the way, the overreach is not that strong. In every other business, nobody decides how much you can charge for the raw material and how much you can charge for the finished goods. But in banking, it does. So now, for example, when you have to do a real business where you have to create, where you have a CD ratio issue, credit to deposit ratio issue, where you have to go for deposits, where the market demands a particular return, and then you have a regulation which says that you can't do some things. People will and people are doing these things. HDFC has come into the limelight, I agree. But where the issue has been dealt with, I think, is that yes, it's an overreach. One does believe that one should not be giving out stuff in other ways. But look at the regulation. In a banking industry where you're trying to struggle for deposits to be able to grow your asset book. And in that kind of an industry, this happens. By the way, I'm again saying this. There are people who get caught and the people are still doing it. And I think one has to be cognizant of reality and then deal with situations. You cannot dismantle a good organization because they believe in good faith or act in good faith in a realistic world.
No, there is no question of the dismantling part. I don't think that's in question at all. But Gurmeet, on the question of market realities and the action that needs to be taken, what Abizar is essentially saying is everyone does it. These guys got caught.
I think the penalty is a joke. I agree with you. I think either you fine, take action. This 1 lakh rupees is a joke. But coming to numbers, I think some of it I agree with, Abhizar, is that, see, look at the base right now. 30 lakh crore is the loan book. 31 odd lakh crore is deposit. Now, deposit cost normalization is taking time, and that is what is causing the impact. Now, this FCNR mobilization can help. But honestly, I have managed a lot of family offices. We have client base. I'm not seeing that kind of spark in FCNR, in HDFC versus the other. I'm giving you this ground feedback. So the focus on deposits, is not as much as it should be, although there's a lot of talk around it. Second, as I said, in the sense, you need to see a change of culture in the bank. I'll give you a small example, Tamanna. When I was in HDFC Bank, we used to use a purple form to open a current account. And the form has not done any changes in the last 15 years. You're still supposed to fill all of those details when you're opening. So if you want to open a current account today for a private limited company, it will take you at least 3 weeks. Now, why do you need to fill so much? You can fetch every information from the GST portal or the ROC portal. They just make you go through the same rigmarole again and again. So the digital interface needs serious reflection. in terms of the ease of business. And as I said, the focus has to come back to core banking. And I think once that comes in, I'll be more happy. It's one of my largest holding. I've made a lot of money on it. And now I'm pained by seeing, the lack of focus on core banking. So I think once they fix the culture, ICICI Bank, for example, removed the bell curve. The branch only had unit profitability, no product wise target, no credit card target, no insurance target. Right? Something more needs to be done. The branch attrition mid-level is very high, almost 30%. A teller is also has cross-sell targets. Sorry, I'm going on and on this because it's something a little close to me and I hold a lot of. So I think they need to fix it. I mean, it's the premier bank. No issues on corporate governance, no issues on asset quality. All of that is fine. But now you need to perform.
Okay, so I mean, the pain out here is very different. It's also pain of somebody who's transacted it for a really long time. But Gurmeet, I'm amused. You remember a purple form and that's lasting for 15 years and a change there. Quite something. Okay, fair call. Abhizer, let's look at the other side. And I'm starting off with the point that you made, that if indeed this issue to your mind has been laid to rest, is some form of a reset good enough to give arguably still the best banking brand in the country a facelift, growth, and maybe an uptick in valuation multiples, because it suffered from all of these over the last 5 years at least?
No, absolutely. I think does HDFC need to look at a re-strategy? I agree. So what Mr. Bakshi has done in ICICI Bank and has highlighted earlier, excellent. I think something like that needs to happen. Focus on core banking needs to come back. Focus on other services need to come back, but the targeting needs to be on overall customer profitability than anything else. And I think if we do any of that and we do a rejig, see, HDFC also from a strategy point of view, as we mentioned last time, was a very much working capital provider of banks. It did not get impacted by the 2008 crisis for a reason. But does it need to now expand into more structured forms of credit as banking evolves and our customer needs evolve? Absolutely.
Okay, and Abhizer, can all of that happen with the same management team, or would you believe that a change?
Absolutely.
Okay, and Abhizer, can all of that happen with the same management team, or would you believe that a change is needed?
Again, I mentioned this last time, that the management team bandwidth needs to be enhanced significantly. Need to get the right skills to be able to implement what we need to. And I think, as I said earlier, when you have an extended term of a CEO, then a generation of good bank that may have happened with HDFC Bank, and I think they will need to. That may have happened with HDFC Bank, and I think they will need to reinforce the management talent for sure.
Okay, Gurmeet, where are you on this argument? There's a lot of chatter around a CEO position.
Neeraj, I think with due respect, the internal talent and bench strength is pretty strong. I mean, there's no doubt about it. I would say just for, from a shareholder point of view, sometimes the change helps. It just might help to, reset things. I would probably, in a bank prefer a business vertical head as a leader, always, because you need to also drive business more aggressively. And so I would prefer that. But as I said, valuations are like mouth-watering. I've never seen HDFC at 1.5 book value, 10, 11 times earnings, at least in my 20 years of tracking it. So yes, I think it's due, but you need to do a few more things for this due to play out.
Gurmeet, thank you for joining us this morning. Abhizer, thank you for joining us. I hope you face no traffic wherever you're going. Right now, we got you in the car. So thank you for dialing in for this interesting conversation. All right, focus on Tilak Nagar Industries and the back of Q1 results and impact of new acquisition as the company eyes expansion and deeper reach in existing territories, UK FTA benefits and Karnataka policy. The new excise policy is also in the spotlight. We have Amit Dhanukar, Chairman and Managing Director with us, talking about the results. Mr. Dhanukar, a very good morning. Thank you for your time to us here at NDTV Profit. Volume growth has been the exciting story for you in Q1, although margins have seen a bit of a squeeze. How would you describe the quarter?
So the quarter, I think directionally we are, poised for growth. I think we have a very large integration just behind us. It was a large business which we acquired last year, almost 20 million additional cases coming into our fold. So the large part of the integration is behind us. So on the quarter one business also has grown compared to quarter four. And we look at volume growth now in the lower double digits going forward for this financial year.
Okay. Additionally, I'm just trying to understand what kind of packaging inflation has crept in and will sustain. Some obviously in Q1, but do you think that this now eases off or some uncertainty continues? Because we have seen geopolitical factors and raw material factors still continue to hurt.
Oh, sure. So the inflation started setting in towards the latter half of quarter four. But obviously, since we had enough stock, so we didn't see any of that inflation impacting us in quarter four. But quarter one actually has borne the brunt of this impact. I think the EBITDA margins have been impacted by approximately 150 basis points on account of the inflation which we have faced in quarter one. I think it's quite hard to tell how this will pan out over the coming quarters. I think there lots of uncertainty still remains. So it's difficult really to give any definitive comment on how this might pan out over the next few quarters. But as a company, what we are doing is that we are looking for price increase opportunities wherever we can to mitigate this offset. So I think some states we have already received price increase, and many of the other large states we are actively in talks with government to seeking a price increase which will offset this impact because of the inflation.
Okay. I just want to understand from you, Mr. Dhanukar, what is the kind of benefit that you get from the UK FTA, which will now be actioned? To what extent does it help you, and what is the kind of margin improvement that comes in?
So, given the existing margin, we clearly see an impact of about 60 to 100 basis points on account of UK free trade agreement being actioned out. As a company, we will see this benefit in the second half. So we'll start seeing that benefit from quarter three.
Okay, so 60 to 100 basis points is decent. And how do you see that pairing out? That is now a first burst, or that now gets added on consistently?
No, that's a one-time burst, I think, because then going forward, but as the duties reduce, then obviously the margins again will, there'll be some additional benefit if the duty is further reduced. But currently it is a one-time benefit. So as progressively the duty comes down, the margins will increase.
Amit, good morning, Neeraj here.
Morning.
And just the reinvention that you and some of the others have done with the kind of products on offer is stellar. Would love to know, as India signs not just this UK FTA but a bunch of other FTAs, etc., what kind of scope do Indian products have in a global market per se? Because there is a market which is the Indian market, but there is also this wide world out there, right?
Sure. So I think it's a good question, very apt question, and in fact, the acquisition has been one part of our story, because I think it's the beginning of the journey, because now we have that pan-India distribution. I think post the acquisition of the Imperial Blue business, now we are present virtually across each and every retail counter in India. So that gives us an opportunity for premium play in terms of introducing our new products, which is the luxury malt, the luxury Indian brandy, and of course we have the Spaceman Spirits portfolio, which is the Samsara Pink Gin, Sitara Rum, Amara Vodka. And we have a few more exciting introductions which will start being rolled out in the next 6 to 18 months. So while there's a play in India, I think as you have correctly pointed out, I think there's the international opportunity also is fairly large. And the Imperial Blue business also gives us, an opportunity to address many of these export markets, because the brand was being exported to more than 40 countries. So I think we have now access to wide and large export markets, which could really benefit from these Indian products.
Amit, the other question really is that this whole belief that is coming out of the challenges around future consumption, simply because the whole new generation of people who are coming into the adulthood age are not consuming alcohol the same way it used to. is there a question mark around the pace of growth over the slightly longer term? Because this is arguably in all of our minds a story for eternity, but seemingly it is not, if indeed the consumption habits are to be believed.
Right. So I think this narrative, in my humble opinion, it seems to be coming from the West, and I think it's. I mean, for the US particularly, I think it's true. I think the younger generation is consuming less. I think they're not getting into the spirit consumption that easily. But I don't think it's necessarily true for India. We have a huge population, around approximately 20 or 25 million odd, who are getting added to legal drinking age every year in India. So I think the opportunity is still very large in India. We are not seeing any signs of slowdown yet. So we are very optimistic about consumption continuing. I think just to put it in perspective, when I joined the business about 20 odd years ago, I think the total size of the Indian IMFL industry was around 70 million cases. Today you have one state like Karnataka or Tamil Nadu doing 70 million cases. So I think it's just the growth is still to come as far as India is concerned.
Okay, Amit, net debt reduction timelines.
So net debt as of Q1 was 2,100 crores. Don't see any significant reduction in Q2. I think it will hover around similar levels. But end of this financial year, I think we should see a reduction of at least 400 crores. So we should be at approximately 1,700 crores in net debt. Of course, that is given with the assumption that the receivable position in Telangana doesn't improve. If it improves, we could see further significant reduction, because the company has large business in Telangana and a large receivable with the government over there.
Just trying to understand, Mr. Dhanukar, how does the Karnataka excise policy, the new policy, aid and abet?
So we firmly believe it's been a progressive policy. I think Karnataka is one state where we've seen our MRPs reduced twice. I think our flagship brands, Mansion House, which was priced around 250. Today it's priced at 200 rupees. So good 20% reduction in the MRP. So, certainly the volumes are going to increase, and we see a good uptick in volumes in Karnataka.
Okay, Amit, thank you so much for speaking with us this morning. We appreciate your time, and Tilak Nagar in focus this morning. The stock seeing a bit of a dive because, of course, that margin compression also did come in. But time to shift focus to Happiest Minds. The stock is buzzing after posting a strong set of quarterly results, with AI and analytics leading the growth momentum now. To understand the company's action plan for FY27 and guidance going forward, my colleague Puneet had an insightful conversation with the management. But before we get to that conversation, Neeraj, the entire IT pack seems to have found some salvation.
Yeah. I call it the anti-AI trade or call it something else. But you could almost argue, Tamanna, that it started with the kind of display that TCS did, isn't it? Because the stocks had not done too much until then. Then TCS commentary, their confidence about acceleration in Q2, I think it really revved up all of that. So it'll be really interesting to hear from Joseph Anantharaju, who is the co-chairman and CEO of Happiest Minds, as well as Venkatraman Narayanan, who is the managing director, about what is it that Happiest Minds could do in the quarters ahead, and whether they are as confident about the outlook as some of the other peer sets for Happiest Minds have been. I think a digital first company will be really interesting to see what is it that their take is on what happens going ahead. Here are a slice of the conversation that they've had with my colleague Puneet.
Hello and welcome back to NDTV Profit. We are putting focus on Happiest Minds now on the back of their Q1 results. The revenue grew 4% on a quarter-on-quarter basis. Margins have held through at 15.1% in this particular quarter, while net profit has also grown as well. But to talk about what they are currently seeing on the ground, joined by the management here, Mr. Venkatraman Narayanan, he is the managing director of the company, as well as Joseph Anantharaju, the co-chairman and CEO of Happiest Minds Technologies. Gentlemen, both of you, thanks so much for joining me today. Let me just start off with some interesting comments that and something that you both have also emphasized, that AI is not a disruptor, it's rather an opportunity going forward. Mr. Ashok Soota, of course, the co-founder, has mentioned that in the press release too. It's something that a lot of IT companies have been trying to tell us as well. So how are you looking at the AI opportunity now, if you can give us some perspective, because you don't give out specific AI-led revenue, but you mentioned that the pipeline has actually grown quite decently in this particular quarter. So what has been, the advancement of the same that you've seen in this quarter, and have that also been visible in the new deal wins that you've reported?
Yeah. So if you look at AI, Puneet, the way customers are leveraging this technology is threefold, right? One is they're looking at how do we use AI to give a better customer experience or new functionalities that will drive additional revenue. The second area where we are seeing quite a bit of focus is on how do you optimize your back-end operations, whether it's finance or customer support, HR and other functions, or it could be even supply chain. How do you really use AI to make it more efficient and reduce cost, increasing productivity? The third area has been on the software lifecycle, and we are seeing a huge push in the last 6 to 9 months, where customers are promoting and expecting, I would say, that we use these tools. Increasingly, it's becoming more of your Claude or Codex in an agentic AI approach for, rather than just using Copilot as an assistant, and expecting the productivity to help them, find money to invest in innovation or modernizing their current tech stack, addressing tech debt. So all of these we see as opportunities, and we have in our pipeline opportunities in all of these three areas where we're working with customers. But I would say that the last 3 to 6 months, there's been quite a bit of push on how do we really, include or use these tools in the software lifecycle.
Also, just the perspective, and I think we spoke about it in our last chat as well, that you've gone ahead and actually raised the constant currency revenue growth guidance. Of course, the street also liked the same as well. The question now being that, was quarter one enough in terms of the part towards that 12.5% kind of growth that you had envisaged, or was it slightly more lesser? Because the numbers that are in front of us show that there'll be a lot of work expected to be done in quarter two as well as in H2. But as mentioned, that H1 is very strong for the IT company. So are you satisfied with the growth that we see in quarter one, or is it more back-ended on some of those pipeline conversations that we might see on deals for you?
If you look at the growth that we have done in constant currency year over year is about 6.7%. Yes, slightly. It leaves a lot of work to be done in the subsequent quarters and in the second half. And you're right, the health in the pipeline and the deal signups that have happened right now, those are the things that we are really banking on to make sure that we get back into that growth cycle for the rest of the year. But there is also Artha Banking. Artha Banking is sort of lumpy business. We did have a blip in the last quarter in terms of 2 deals moving into this quarter. Out of that, we have not been able to close 1 deal. That's the nature of that beast. So, but we are seeing a decent pipeline in Artha Banking as well, and that's also something that's being factored into our subsequent quarter. So you have your growth expectation from your existing accounts, pipelines adding up, and the product business that's slightly lumpy coming in to help us meet those numbers in the subsequent quarters. And you've got platforms like EduWeave that Joseph just talked about. We are building our own industry agnostic AI platform, and there is quite a bit of expectations from that also taking you into not only new accounts, but also having that non-linear revenue adding to our growth. Yes, it is. Our work is cut out for the subsequent 3 quarters.
And just one question on your, as we look at you, we spoke about the verticals part, but the digital service offerings that you also have now, the AI as well as the analytic units, I'm guessing that has a lot of those newer businesses that we spoke about data engineering, about Gen AI amongst others. That has been very stagnant at the 11 to 12% mark in terms of your, the revenue proportion. while we have seen cloud continuing to be majority of your revenue coming from those verticals. Could you give us some perspective as we wrap up the conversation about how we should look at this particular number? It has been constant mention. I think the last big change was in FY24 when we saw that, and then has been largely stagnant. But now as things have changed over the last couple of quarters, you've had some time to look at it. Is there any expectation of where this numbers might go, either in terms of quantification or just the general sense?
See, the AI and analytics number that you're talking of about 11 to 12% is a service offering split. But if you go back into history, what we did is we gave you that split to show that we were 90% or 95% of all the work that we did was digital and digital only. That was the background to it. Now, in the last 1 year, we have got this new angle of AI. We started it out as a new business unit in the early days, which is GBS. But what's happened is AI is leading most of the work that we do, whether it is in security, whether it is in cloud, automation, analytics, and the like. So that's why the metric of AI-led service is something very important. We will be publishing that we said in the first 2 quarters, Q1, Q2. We are getting those numbers together because we don't want to come out and because it's going to be something that we'll report on an ongoing basis, like whatever metric that we have done until now. But suffice to say, that's a large number, the AI-led number. So AI, the analytics piece that you're seeing is as a percentage remaining constant, in line with the growth that the company has shown over the last 3 years. You should compare it from that standpoint. But most of
just
the getting into the AI-led, and it's getting into the other slices of the technology that we are reporting.
Sure. And another angle, Puneet, just to add a little bit out there, the two additional angles out here. Sometimes you have AI which is being delivered in the cloud. So the classification may happen under cloud, right? So that's one part. But the second part, which is very important, is when you're doing an analytics or AI project, right? There would be testing, or there would be some front end that you would do, maybe some deployment. All of that we're not counting out here because we're only looking at this is a people-based quantification. So if you look at it from a project standpoint, that number would be much higher. And as Venkat pointed out, we will come back with that number in Q2. We have the number for Q1, but we want to run a little bit more, test and checks on it to make sure that it holds. Because as this is something that we want to report on a quarterly basis going forward.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये युग तुम्हारा ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में
We're back with India Market Open, and we'll focus a bit on HUL. I believe the numbers are out. We'll just get to that in a minute as soon as the numbers hit the screen. But just before we do that, just that the kind of moves that IT is making is quite stunning, because Tata Tech, Persistent Systems, Tata Consultancy Services, 4.5% for TCS. Just mark that before we get to HUL. If you can just mark TCS and the kind of move that it is making today before we get back to HUL. Can we pull up TCS? 4.5% for TCS. This is stuff that an IT investor's dreams are made of. Okay, now shift focus back to HUL because the numbers are out on your screen and the stock is reacting. Net profit at 2673 versus estimates of 2811. This is just the initial flash. We need to wait for the volume growth numbers. We need to wait for the EBITDA numbers. But the net profit on the face of it is weak, and which is what is showing in the stock right now. A sharp nosedive. Let's see if this lasts or no. By the way, by the sharp also, I mean it was less than 1% lower. It is still less than 1%. Less than 1% is still less than 1% lower, but there is a bit of a reaction on those numbers. We wait for the other numbers to come in, but I would suspect that. Okay, let me not actually kind of hypothesize. Let's wait for those data to come out, because the net profit number could be lower for n number of reasons. Key will be volume growth. Key will be what they do in terms of the EBITDA numbers, and then the commentary that comes in from the management, simply because Tamanna, all through this earnings season, the FMCG names have actually delivered very strong numbers. No reason HUL cannot.
Yeah, just let's keep that chart up because it's deepening now. The estimates have not been met. That's the first cut on revenue
as well.
Either 17,341 crores is the number versus an estimate of 17,571, and of course we'll get Mahima Vachujani up to talk about it. We'll get our experts up as well, but these two numbers are telling you that there is some pain coming in HUL, and you're absolutely right, Neeraj. The expectation from FMCG has been higher after the likes of Nestle etc. have reported. This is now deepening, nearly a 4% downtick and cut on HUL coming in. You know, some of the factors to keep in mind is also the commentary that they will bring, because this is Q1. We've not yet seen what the impact of El Nino etc. has been all of this time. What would have also played out in Q1 is the ability of HUL to pass on some of those high input costs.
And presumably they haven't been able to do so, which is, I think, which I'm presuming is the reason why the revenue numbers are looking weak, Tamanna. And I would suspect that this could well be a volume growth downtick as well, not just value per se. Okay, but 4% now and counting on HUL, this is not a good number.
The EBITDA number also lower.
Yeah, lower than estimate. Okay, yeah. So that explains, right? It's across the line items that revenues were down, as a result of which the EBITDA is lower, and therefore the PAT number is lower as well. It's across the line items. Now we need to wait for the internals and need to wait for what the management is saying about what led to this miss in Q1, and of course, what is it, therefore the resultant impact would be on the quarters ahead. Mayuresh Joshi with us as well. Mayuresh, thanks for joining in. While we wait for Mahima to give us the internals, your initial take, because across the line items there is a miss: revenue, EBITDA, profit after tax.
Morning, Neeraj. You know, it seems to be the case that it is a miss in terms of what HUL was expected to deliver and what it has delivered. The EBITDA margin is within their guided range, what they had probably indicated. But the expectations of a stronger growth, specifically on the top line, it seems that the underlying volume growth is 5-odd%, which again is probably at the lower end of what the estimates probably were. Clearly, I think the first cut, whatever I'm seeing through right now, indicates that it seems to be a very soft quarter for HUL.
5% in Q1, year-on-year figure of volume growth of 5%. Is that what is the disappointment right now? Mayuresh, as we're waiting for the internals, we know home care is up 13.4%, beauty and well-being is done okay, 12.5%, but that volume growth at 5% is the pain point?
Morning, Tamanna. Possibly, because I think that was probably at the lower end of what the expectations were. And what its peers have probably done, if you probably look at what Nestle has probably performed, what Tata Consumer has probably delivered in terms of the core volume number, along with the margin performance as well. I think it is a little bit below par compared to both its peers and expectations that the street probably had.
Even as that stock is going down about 4%, we'll hear from the management today, right? There will be a press conference. We'll hear from the management. What would you want to hear? What would be key on top of mind for you, Mayuresh, that you'd want the management to address?
So, Tamanna, 2-3 things. One, I think in terms of their portfolio, how is their portfolio playing out across different segments, whether you speak about home care, or you're talking about beauty and well-being, or the personal care segment. The premiumization obviously plays, but how are they looking at this portfolio construct and the pricing related to the portfolio itself? I think that is one of the most important factors that we'll be probably looking out for. The other element that you're probably looking at is how are they looking at the entire macro and the micro environment itself, both in terms of expected volumes across business segments and the input cost volatility, and therefore what probably happens in terms of the margin performance. And the third aspect obviously is in terms of expectations of any more rollouts that are probably expected to happen from the HUL stable when it probably comes to any or the business segments that they're probably operating out of. So I think basic questions which the management has to solve.
Yeah. And Mayuresh, Mahima might have more details. Maybe you want to listen into her as well as she joins in. By the way, the midterm outlook that they've given, they are saying that commodity volatility persists with inflationary pressures expected to continue in the short term and the consolidated EBITDA margin to be around the current guided range. No clarity out there. Mahima, what have you made of these numbers? Nearly over 4.5% gash now on HUL.
Yeah, and a 7% from the day's high point, right, Neeraj, for the stock, and this is the lowest in the last 39 sessions is what we're seeing. That's the pressure that we're seeing on the stock. So I think 3 reasons as to why that's happening. First one, of course, the volume growth is below the expectation. The expected range was anywhere between 6 to 8%. Last quarter they had done a 6%. Before that, we'd seen a trajectory of volume growth quarter on quarter basis, and that streak has been broken, which is why the street is not liking it. So 5% volume growth is below expected, and this is also on account of the price hikes they've had to take throughout the quarter because of the West Asia conflict, etc. So that's impacted the volumes. That's the one thing. The second thing is, I think the overall picture in terms of revenue, it's missed estimates by around 200 odd crores, and that's completely translated to the bottom line as well. So both revenue and PAT have a 200 crore gap, and that's also something that the street has not liked. I think in terms of for the third reason is personal and beauty care was the one driving engine that was seeing a very good growth for HUL in the past so many quarters, and this time it's just up by about 3% odd. Home care, yet another good quarter for home care, though around 13.4% an uptick, and food has also seen an uptick of around 6.7% odd. Beauty and well-being has done a growth of around 12.4%. I think the commentary on demand is that they continue to monitor the monsoon and geopolitical developments. Monsoon has also had an overall impact in terms of rural demand. This will be carried forward in Q2 as well. That's something that you need to keep in mind. And overall, they've said that they expect FY27 to be better than FY26, led out by portfolio and channel transformation. Of course, we've talked about this earlier as well, that they're aiming on one, premiumization, and second, fewer, bigger and bolder bets, and beauty and well-being is going to be their focus area from here on. So this is the overall view of what's not worked, and the overall takeaway of what Q1 earnings look like for HUL.
To look at an overarching issue, it is your personal care has not quite fired. Your volume growth has been anemic compared to what was expected at about 5%. At least a 6 to 7% was expected. So that is one clear pain point taking place. Mayuresh, I'm wondering how you look at this, because this is the biggest player in the space, isn't it? And they're saying FY27 will be better. than FY26, but Q1 is looking a little shaky right now.
No, that's fine. I think if FY27 has to be better than FY26, in what proportion? I think that is the question to be asked. The second element obviously is that personal care has clearly disappointed because the reported 4% underlying sales growth has probably been a little bit of a disappointing factor. Home care was fine. And therefore, I think with the input cost volatility expected to continue remaining at elevated and volatile levels, EBITDA margins will still come under some amount of scanner. And therefore, both volume and value, what probably happens with that, I think the management committee will be extremely critical.
Okay, Mayuresh, thank you so much. Mahima, we'll let you get into the fine print of the HUL numbers, and of course you have to go on and attend the conference today where we'll hear from the management as well. 4% downtick on HUL. We're taking a very short break. We're coming back with a lot more on the other side. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे।
All right, welcome back. Quick look at what's happening with the markets before we move ahead to the rest of the management interviews that we are doing. You've seen that knock in the Nifty. Pull up the contributors. Maybe HUL is contributing to that because we were coasting above the 24,000 mark so far. HDFC Bank and HUL are both joining the party in that sense and pulling down what's happening in the Nifty right now. Let's pull up the HDFC Bank stock as well. BEL and Reliance Industries are the other two culprits that we are seeing. You have a 0.77% downtick right now. Let's go across to Puneet now, talking about Orion Pro. The company saw margins decline in Q1 despite a steady quarter growth as the quarter was hit by supply chain disruptions and geopolitical issues. Before we have that conversation with the management, Puneet, give us the heads up on what the quarter looked like.
Well, thank you for that. We definitely have seen a weaker quarter for the company, and essentially the guidance that they were calling out for at 20% in terms of growth for the full year now seems to be impacted, and hence the stock continues to decline and down in trade. Margins have declined by 230 basis points in this particular quarter, and hence you've seen that impact coming through. Supply chain disruptions, geopolitical issues were some of the other reasons that the management has highlighted in terms of Q1 impact, but this continues to be a story that we are seeing for the IT players. So for Happiest Minds as well, we spoke to the management. The Q1 guide, constant currency growth that they've achieved is slightly more smaller compared to the targets that they've given, and hence while there has been a deal win for Orion Pro in this particular quarter, streets not liking the fact that there's so much more growth that needs to be back-ended now in Q2 as well as H2, while the first half is generally stronger. So those are all the key factors that are contributing on negative side for Orion Pro, and of course the management conversation very important at this point of time.
Okay, Well, in fact, we did speak to Ashish Rai, Group CEO of Orient Pro Solutions, on their Q1 results and the way forward. Listen in.
I mean, if you have to look at the quarter from a numbers perspective, it seems to be a mixed quarter because the revenue growth somewhere has remained intact. The profitability has disappointed as well. And there are multiple reasons that you've mentioned, from an execution delay to supply chain issues to geopolitical disruptions as well. What is the first quarter actually telling you in terms of FY27 as a year? And was this kind of performance already anticipated?
Good morning, Hiral. First of all, thanks for having me. Always a pleasure. So I think look, overall, I feel pretty good about where the quarter is. We have to go back into Q4 and see what we said and how well have we been delivering to what we said, right? So Q4, of course, was a number of challenges that came in. The focus on banking software, especially in the Middle East with the war and the decision cycle delays, and we said we will go back and refocus. One, double down on business areas where we do see more immediate demand, like data center, like transit, etc. Second, pivot some of the banking software sales towards geographies, which is Southeast Asia, Europe, etc., where we feel there's a lot more potential. I think all of that is happening. So sequentially, if you see Q4 to Q1 growth is pretty strong. It's stronger than some of the previous years. So it's coming back pretty well. It takes a couple of quarters to reset capacity. So the order book, for example, in data center is very strong, but capacity takes some months to build out, which will get built out through the year. So we feel very good about how that business will grow through this year. Banking software, again, pipeline additions in Europe, Southeast Asia, very, very strong. Our AI native stack really, the demand build out is very strong. So overall, we said we'll do a bunch of things in terms of refocusing the business on the back of challenges we were seeing in Q4, whether it's Middle East war, whether it's supply chain disruptions. I think we're doing pretty well on that. Q1, very good sign that the strategy is working, and we hope to accelerate through the year.
Ashish, I remember in FY26 as well, the expectation was that growth will come in the second half of the financial year, which was not done. A similar story is prevailing yet again, where the first quarter is not really showing you that kind of strength, but the anticipation is that the pickup will happen in FY27. Now, how do you expect an investor to actually try and relate to it?
Yeah, so I would say, look, one has to observe over the quarters how the build out continues, right? So ultimately, FY26 was a 20% growth year, which is still one of the stronger sort of plays given the industry. I think we're one of the strongest growing shops in the industry even last year, despite the few challenges. And this year, I would say the order book growth is very strong, especially around the TIG side of the business, data centers, transit, etc. The pipeline growth on the banking side is also very strong in markets that we pivoted to. Even the Middle East seems to be coming back, but I think we still have to announce wins and show that the revenue conversion is coming in. Right. So by and large, I would say the trends are there that the business will continue to deliver. The size of Q1 4 or 5 years back was the size of the whole business for the full year. FY21, we were a 375 crore business, right? So the business has quadrupled over the last 4 or 5 years. It doesn't mean every single quarter will be exactly the same amount of growth. But overall, I think the demand environment for the businesses, whether that's banking software, whether it's enterprise AI with Arya, whether that's data center businesses, whether that's transit, going global, each of them is fairly strong. So I think it's a matter of time before the growth rate comes back.
But Ashish, no one is talking about, or no one is saying that demand is not healthy, because the number of customers that you've added this year, the banking fintech revenues, the orders that have come in there, the technology innovation group, the size that it has grown to. So there is proof that there is demand. However, the issue that everyone is talking about is probably execution and conversion rather than the order inflow. So where is that bottleneck?
Yeah, no, that's a great question, Hiral, right? So I think right now, I would say when we were pivoting out of Q4 to a little bit, the order book, while it was strong in some parts, some other parts were the concern. Now it's the conversion of revenue from the order book, especially around, for example, data center. We announced some very large wins. We continue to win very strongly in the market, but the capacity has to sort of grow to match the demand. That is a question of a quarter or two. So that starts converting as well, right? So I would say to some extent the order book in large parts of the business is in place to deliver, but the capacity side of it needs to catch up to deliver. And I think that is what we've been working very, very hard on. And I would say that improves every month, right? So I think Q1, from an execution standpoint, from the delivery execution standpoint, as well as sales execution standpoint, is a pretty strong quarter from what I see. From a conversion to revenue standpoint, it's still below the normal trend line that we've had for the last 3-4 years. I think it will come back to the trend line soon.
Okay, you mentioned about data.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's big. Welcome back to watching India Market Open. Fresh from winning New Economy Leader of the Year and NDTV Profit's Star-Studded Business Leadership Awards, the Delivery CEO Sahil Barua spoke with NDTV Profit's Nisha Podar on why India's logistic opportunity remains massive and how the company is navigating higher fuel costs through efficiency and EV adoption. Listen in.
Now, Sahil, when we look at your particular sector, there has been intense competition and a lot of e-commerce players have gone into their in-house delivery. With this particular base, and of course you expanded your focus just from e-commerce to the larger play of being a logistics company across the board. But how much of a pressure point is this with the concentration of clients and they going in-house in their logistics?
Yes, I've spoken about this before. Indian logistics is about $140 billion, in terms of market size, of which e-commerce parcel logistics is less than 10%. So first of all, Delivery's aim really is not just to be the largest and most efficient e-commerce logistics company, but really to be India's largest logistics company. And so from our perspective, we remain focused on building not just our parcel business, but our freight businesses, our warehousing business, and our technology businesses. When it comes to e-commerce specifically, we've said this before, the great competitive advantage that Delivery has and that we've always focused on is that we are the lowest cost service provider in the market, and obviously we reach everywhere in India. And I think our costs cannot be matched by in-house logistics. This sort of has been proven time and again. I think companies operate in-house arms for reasons of their own choosing, of course. And maybe the reality is that half the market will continue to be served by in-house logistics. But our aim, of course, is that in the rest of the half, delivery will be the single largest and most efficient player. There will be thousands and thousands of companies selling online. And as more consumers come online, they're going to need reliable logistics services. And that's delivery's job to provide.
Right, because the last mergers and acquisitions that was really done by the company of Ecom Express was basically because of one of these pain points where a large concentration client had really gone in-house. That's why, is this posing a competition in your sector and any impact going forward?
Not really, because in-house logistics arms are sort of uniquely suited to serve the needs of the companies they spring out of. And so at the end of the day, they're not really well suited to servicing, if you're servicing a very, very large marketplace or a very, very large retail arm, it's very difficult to then go and be able to serve an SME business who's selling online on a Shopify store. It's very difficult to design processes and systems to actually be able to serve their very unique and small needs. And that's why not just delivery, but third-party logistics exists for that reason. So in that sense, while it may appear that competitive intensity is going up, the reality is it's only going up in the accounts, from which captive logistics are coming out. And there are really only 3 large captive logistics arms in India. The rest of the market continues to be served by third-party players.
All right. Now, when we...
All right. Well, that's it on this very exciting first 1 hour 15 minutes of the markets and 2.5 hours of India market open, but it promises to be a good day. And well, India is charting a different course versus the rest of the Asian pack, which is actually a really good piece of news.
Indian IT companies are charting a different course. The rest of the Indian markets are figuring out what's happening. It's very sector and stock specific. That's all the time from Neeraj and I and the team that put the show together on India Market Open. But stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello, good morning. Welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin near the $63,000 mark on macro uncertainties ahead of Fed meet. Russia passes the first comprehensive crypto law. FATF crypto travel rule adoption is rising. India's CBDT, there is a detailed guidance note on crypto. The Bitcoin is near that $63,000 mark on macro uncertainties ahead of Fed meet decision. Remember the upcoming Federal Reserve policy decision on July 29th and the subsequent passage of the US Senate Crypto Clarity Act remains a key trigger. Lighter positions are being made ahead of these key macro events. Russia's new framework, which is effective from 1st September this year, has created the country's first full legal regime for crypto alongside the digital ruble rollout. Now, the Bank of Russia gains broad oversight of licensed exchanges, brokers, asset managers, custodians and service providers, which of course gives more secure licenses during a transition window. This gives a significant recognition for the crypto ecosystem. Well, the Financial Task Force says more jurisdictions are putting crypto rules into the law. The global watchdog reported 83% of surveyed jurisdictions have passed the legislation to implement the travel rule. That is up almost 73% last year, and the travel rule is one of the most important compliance standards in crypto. And lastly, India's Central Board of Direct Taxes has come out with a detailed guidance note explaining how crypto exchanges and other virtual digital asset providers must comply with their reporting obligations with the Income Tax Department. Now, this move operationalizes the OECD's crypto asset framework to improve transparency. Now, the industry players believe the latest guidance is an important milestone, even though it does not introduce any new taxes or regulate the crypto assets. And before we wrap, here's a quick check to the crypto prices over the last 24 hours, and largely we see a sell-off coming in across most of the cryptos, especially if you look at Bitcoin, Ethereum. That's where the sell-off is happening. Between almost 3 to 5% is the downfall coming in. And of course, the demand and supply, the support resistance range for Bitcoin, that ranges between that $61,000 to $65,000 mark. But there's a pause happening, and this is of course on macro events. Well, time now to take a look at the crypto strategy for the day, and here's what's there to keep in mind. Overall, the market outlook is showing a very cautious consolidation, but remember, keep your trading positions light because be cautious ahead of the Fed FOMC meet, which is happening in the next 48 hours, and Clarity Act that becomes an important trigger for technicals in the first week of August. The Bitcoin support range on the lower side will be between that $61,000 to $63,000 mark. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबां केसरी।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25।
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me today is Soumit Sarkar. And over the next hour, we'll try and get to all your stock-related queries. A quick check before doing all of that of the markets as well, because today as well, you know, it's an important day for the markets. We've seen a very, very flattish kind of a start and that move continuing. But yesterday's last hour trading gash, essentially led by lower crude prices, has been a positive for the markets as we go into the next month of expiry, of course. So today, Tuesday, is the Nifty expiry, and hence last Tuesday of the month, not seeing too much of wild moves as of now. In terms of the heat map also, if we can pull those up for the Nifty 50 as well. Some key stocks like Infosys were doing well at the start of the trading session. TCS as well as HCL Tech Mahindra, Infosys all doing well. A little bit and a lot of credit for that goes to Coforge, the earnings as well as the commentary that has come through for the management as well. HUL post results is down 3.5%. We'll get you some more perspective during the day on the same. While BL is the other counter where you've seen a slightly weaker picture coming through yesterday, and hence stocks down almost 3% right now. It's been a very, very long time post which BL has come back below that 400 mark. The order book is strong, but yes, those are some of the key factors that are driving in trade today. Let's look at the Coforge stock today as well, and that has risen through, gone through, done well as well in terms of in terms of the stock price performance, up 9% now. A very, very secular growth that we've seen. On the other hand, in terms of what we've seen in terms of the overall sectoral impact too, let's pull that up also. So Nifty IT started off with an up move of 2%. That has built on to its gains, now up almost 3.4%, while there has been a 2% downtick on the India defense and probably VL contributing there as well. Advanced decline is the other key factor before we speak to the next key management we also have in focus today. The declines have actually staggered through and then seen a very big spurt. So right now almost 1650 stocks as of now that are declining in trade today, and we'll get to more stock specific queries as well. But let me go across to Sanjay Kulshetra, who is joining us. He's the chairman and managing director of Hutco now. Sanjay ji, a very good morning to you. Thanks so much for joining in. It's Puneet this side. Just in terms of what we see in this quarterly results as well, Q1 saw a strong momentum that you had seen. Are you expecting that to continue in Q2 as well?
Definitely, it will be complete. It will be going through, and as you see that a lot of requirement is there, capital requirement is there in the urban infrastructure. So I think the business of the company will go on, and the way we are closing our deals, be it the loan sanctions or the pipelines of the borrowing. So I am very sure that the pace will be continuing, looking at the need of the states, looking at the need of the sectors.
Any number you could share with us for disbursement growth, sanctions growth? What is the kind of growth that you're looking for the full financial year?
So in Q1, we had already achieved more than 16,000 crores. So we generally plan our disbursement across the quarters so that it will impact our bottom line. So we are looking at around 65,000 crores kind of figure. And that's how we are planning our borrowing plans as well.
Mr. Sanjay, we've seen actually that NIMs across the board for financial firms have actually come down, and that's largely something that most analysts were working with as well. For you specifically, it's at 2.72. Do you expect that that level to be maintained now as we go through the year? Is this where you're seeing NIM largely bottoming out?
I think NIMs will be improving from this number. This is the bottom number, and this has a arithmetic reaction also. If you see the disbursement in last 4 quarters, it was very accelerated, and the loan book was growing and at the pace of around 25%, which has put pressure on the NIMs. At the same time, the cost of borrowing has also increased to some extent, and we had replaced our short-term loans to the long-term loans to have that ALM kind of matching. At the same time, RBI has came out with the swap window, and we are taking that facility in true and spirit, and we are taking a lot of advantage of that. So I am very sure that this is the bottom figure, and we will be resting around 3% in a long-term kind of time.
Okay. When it comes to the accounts under NCLT resolution, I believe the amount stands at close to 1100 crore rupees. I know that 100% of the same has been provided, but any recoveries that we could expect for the remaining part of the financial year? 100%.
We are too aggressive than you can even think to resolve these kind of assets, because we understand this is the capital which is hidden. And we are very, very aggressive working with the consortium partner, working with the NCLTs and the COCs. And I am very sure that the time had came to resolve these kind of assets, and they are in the advanced stage of the resolution.
So, sir, we've seen over the last couple of years, starting FY24, you've given some color as well in terms of your book, loan book, as well as the diversification towards urban infrastructure is a very big point. I think right now the percentage is almost 75%. Do you feel that this is probably the higher end of things, that you will probably stabilize at that 75 to 80% mark, with the other factor coming in from affordable housing? Or how should we look at this number? Because of course the urban infra part, more higher yields as well. So could you give us some perspective of what should we expect this number to be, maybe this year, maybe in the next year too?
If you see the number, we are responsible for housing, we are responsible for urban development and urban infrastructure. At the same time, we are supporting PMAY 1, we are also supporting PMAY 2. Here under PMAY 2, the counterpart requirement of the states can be requested from HUDCO. Presently, not too many states has came forward to take that advantage, and they are managing their funds very well. So in case of any housing requirement under PMAY counterpart funding, then only the housing portfolio will be increased. But at the same time, I think we are more focused now towards the other part, that is the urban ecosystem. Because if you see the mandate of the Government of India and the commitment of the Government of India, maybe it is SASTI or Urban Challenge Fund or the Financial Commission grants. So everything is pointed towards creation of good urban infrastructure, the improvement in the service level index, be it the waste, water, drainage, sewerage, roads. I think a lot of infrastructure is required. And at the same time, you have seen that how the industrial corridors are being created, how this big semiconductor mission is being so fruitful and so successful. All these things will create a lot of requirement for urban infrastructure, because these are very, very big kind of conglomerates. The way airports are coming, the ports are coming, the expressways, the ring roads. So everything is pointing towards the more capital towards the urban infrastructure side, which is creating a lot of GDP for the country as well. So the company focus will be towards housing, affordable housing in case any state requires. And at the same time, the priority will be to have that kind of ecosystem for Viksit Bharat under the urban infrastructure.
Well, got that, sir. Thank you so much for joining in and giving us your views across your portfolio. Many congratulations, of course, yet again on a strong set of numbers. But let me welcome in our guest now, Swati Hotkar, AVP Technical Research at Nirmal Bang, Tapan Doshi, Research Analyst at CA Tapan.in, joining in now. Both of you, thanks so much for joining in. Very good morning to you. Tapan, a very quick view first, if we could, on HUDCO as well. A decent set of numbers from the company. What's your view on the stock now?
The valuations are okay, Puneet. First of all, good morning. And if you see the loan book is growing strong, affordable housing demand will be there, and infrastructure financing is growing overall. I think the interest rate hike will not be happening soon, so that will be good for the company. Asset quality is stable, so at this valuation it looks okay. Even healthy net interest margin profile is there, so I think one can hold this stock for a little bit longer.
Alright, we'll just take a very quick break, come back with a lot more stock related queries with Tapan and Swati. Stay tuned, a lot more action on the other side.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन।
Welcome back. You're watching Ask Profit right here on NDTV Profit, and if you haven't already done so, do start sending in your queries on numbers that are flashing on the top of your screen. Also call us for stock related queries as well. But let's go across and start with Sanjay from Bengaluru. He's holding on to Samvardhana Motherson at almost 110 rupees per share, so he's doing well in profits as well. Swati, he wants to know if he should still continue to hold on for the next 6 months. Good morning to you. What's your opinion?
Good morning to you as well as all the panelists. Definitely the view is positive. The counter is trading in upward rising channel, well placed above the important moving average. I believe the trend still remains positive as long as the counter maintains the strong support of 142 level. So by keeping that as stop loss, we can definitely hold on the long position. The immediate target I'm looking forward towards at least 155 to 160 levels.
Queries from Suman from Kolkata. It's on UPL. Holding around 31 shares, bought at an average price of 610. Should he buy more or hold? Any view on this, Tapan?
Well, she can hold, but I will not recommend to buy more. The reason is, no, still the working capital intensity is there, no, that is putting pressure on the margin. And if you see the raw material price volatility is there, weather related demand risk is also there. However, on the positive side, specialties portfolio is going up and new product launches are there. So that is good. And debt reduction continues. I think, but at this valuation, I think one can hold the stock, don't add currently.
Don't add. Got that view, but the next one, and this one's from Satyan. He wants to know about Fractal, if it can be averaged now. So he has been holding on to this counter since the IPO, which was around 900 rupees. So currently sitting at a loss. Wants to know about this one. Tapan, so his question being about Fractal as well as Moschip. It's a counter that has been a lot in focus. Either both of them or one of them. What's your preference?
The preference will be Moschip because that fundamental is quite strong and everything. But yes, valuation is on a higher side. So because the demand will be there for AI, for Moschip in future and semiconductor AI, I think that is well placed. So yes, he can average, maybe buy on dips category. For Fractal, I think demand will be stronger. But here the competition is on quite extensive. And my take is that Fractal don't add now. See the quarterly result, then only add. But Moschip and dips he can buy.
Next query is from Vijay from Chennai. It's on Indian Bank. He wants to know the short-term.
But here the competition is on quite extensive, and my
target for this counter. Swati, any view?
As of now, my view is definitely positive in this particular stock. I believe the short-term target will be at around 860 to 865 levels. So you can hold on the long positions.
Got that view, Swati. But the next question, it's on Gland Pharma, and Swati is staying with you. He's holding shares at 185 rupees per share. So currently sitting on some profits. Wants to know if it's a good time to book it or should he continue to hold, Swati? What's your opinion?
I will suggest to hold on this particular stock because it's trading in a high tops, high bottom formations. Continuously, it's taking a very good support nearby 2350 levels. And again, it's making a new high. So the trend still remains positive. Momentum indicators such as the RSI showing a very positive crossover from the downside levels. I believe for a short period of time, my immediate target will be Continuously it's taking a very good support nearby 2350 levels, and again it's making a new high, so the trend still remains positive. Momentum indicators such as the RSI showing a very 2550 levels, and beyond that 2600 levels can be seen. So definitely you can hold on this particular counter if you want to keep any kind of a profit. Stop loss 2380 is acting as a crucial support levels from the last few trading session, so by maintaining that as a stop loss you can hold on the long positions for immediate target of 2550.
Queries for you, Swati. Again, it's from Padma from Bangalore. What Tech Wabag is the stock? She wants to know whether is it a good entry. What is a good entry price for this counter? Any view here?
My view is a little bit cautious for a short period of time, because already we have seen a very spike rally from almost 1400 to 2200. So after such kind of a rally, we can't deny the profit booking, and the same structure we are witnessing at the current levels. I believe if you're looking for a fresh long positions, any dips towards to 1800 to 1700, those 100 points range will definitely be utilized to build up the long positions. As of now, the selling pressure is likely to be seen in the near term future. So any dips towards to the 1750, 1700, you can definitely take a long position, and thereafter the bounce back rally can be witnessed up to the 2250 to 2200 levels on the higher side.
Got that view, Swati. But the next question is on BEL, and today definitely the stock was under pressure at the start of the trading session on the back of its results. And after a really long time seeing that stock under pressure, post results, as I mentioned. So Nagababu from Andhra Pradesh is owning the stock at 414. Wants to know if the long-term thesis remains intact. Tapan, the important question is what he's asking, if it's a good time to average now as well. Firstly, what's your fine print on the results, and would you recommend averaging for Nagababu, who's already holding the stock right now?
See, Puneet, we can see the no pressure on margins as such in this quarter. And again, of course, the revenue was good. Overall, the order book is almost more than 75,000 crores. So no problem in that part. But how will be the execution and whether they'll be able to sustain the margin? That is the main point. Now, I think valuation is on a higher side. It is on premium. So at this level, I'll not tell him to average. I think around 370 or 365 something it comes. Then I think he can average, but long-term thesis is valid. I think it will go up, but it will take some time.
Right. The next is a caller query coming in from Sambhaji Nagar. Shubhakar, you can go ahead and ask a query.
I have 350 shares of Bharat Gears.
Okay.
At 119. I can hold it for 1 year.
Okay. Tapan, any view on Bharat Gears?
Hey, if you see the results and all that, it's been okay. Now, if you see the PAT has little turned to profitability now, and in future auto demand is improving, and the defense opportunity for this company is that export order is also there. I think things are now getting into turnaround for this company. So yes, please hold this stock currently.
Well, let's now start with the rapid fire round in this edition of the show. Swati as well as Tapan, you know the drill. First questions on PFC. Amit is holding on to the shares at 340. Tapan is holding on to 11,000 shares. Should he continue to hold?
Yeah, currently hold.
The next query is for you, Swati. It's on Iris Clothing. The viewer has around 500 shares bought at a price of 37 rupees. Can he hold it for short term, 3 to 6 months?
Definitely, you can hold on the long positions for immediate target of 50 to 52 levels on the high side. Maintain the stop loss of 47 rupees on downside.
The next one's on IDFC First. Now, had a really strong reaction on Monday, Swati post results. Lalita is holding these shares at almost 75 rupees. Would you recommend her to ride the wave? Is the fundamentals visible on the charts too?
Yes, as of now the trend is positive. You can hold on to long positions. Downside, it has a very crucial support at around 84 levels. That is the gap support as well. So by maintaining a stop loss of 84, you can ride this rally for immediate target of 88 to 90 rupees.
Next query is for you, Tapan. It's on NTPC. Monica from Delhi is holding around 100 shares of NTPC, bought at a price of 413 rupees, which is sitting on a loss. Should she average with 100 more shares, hold to this 100 shares, or sell? What is your view?
Average at this level.
Coal India bought by Anjani at 320. Wants to know a long-term outlook, Tapan.
Currently pressure will be there, so if he wants to add around 380 something, he can add.
Next query is for you, Tapan. It's on Gravita India. Prakish from Kerala wants to know whether should he buy Gravita India now after the fall that we have seen post numbers?
No, not now. Wait for some time.
Next one's Container Corp. Our viewer Mohit is holding shares at 512. He's holding 200 shares. Tapan wants a 1-year view on the counter.
Stock is good, but it will be slow moving. Better to move out from the stock, and other better stocks are available.
The next query is for you, Swati. It's on Siemens Energy. Naresh is holding few shares, bought at a price of 3,400. Should he hold, average, or exit?
I would say just book the partial profit at the current levels because the counter is trading at a very resistance level. So book the partial profits. Remaining partial you can hold on for 3,800 rupees target.
Also, Swati, on Birla Soft, our viewers holding shares at 290. What's the short-term view?
Short-term view is positive. Looking for a target of 320 rupees. You can hold on by maintaining a stop loss of 300 rupees on the downside.
The next query is for you, Tapan. It's on GE Vernova. Uma from Bangalore has around 15 shares, bought at a price of 4,388. Is it good to hold, buy more, or sell?
Good to hold, and average around 3,800.
But hopefully Kaushik that answers your question too. But the next one's from Satish on HUL. Tapan, we just had the results about an hour back. I don't know if you got a chance, but what's your view on the stock now?
Well, I am not too much positive on HUL, so it will be avoid from us.
The next query is for you, Swati. It's on HDFC. The viewer has around 750 shares, bought at a price of 782. Should he buy more or continue to hold?
I will suggest to hold on this particular long position. Immediate target will be 800 to 820 for a short period of time.
The next one coming in, it's from Rohit Jain on Inox Wind. He wants to hold it for the next 1 year and wants to buy 500 shares. Tapan, would you recommend?
Yeah, stock is good. Around, if he getting around 74, 70, he can add it.
Next query is for you, Tapan. It's on Tata Power. Subrata Mukherjee from Kolkata wants to know whether should he buy Tata Power from long-term investment perspective.
Yeah, he can.
On Whirlpool India, PS Rao wants to buy for the long term. Tapan, this counter has been underperforming for a while. Would you recommend that, or should he buy something else?
No, avoid from my side.
The next query is for you, Swati. It's on FDC. Rakesh Kumar has bought around 700 shares at a price of 400 rupees. Should he continue to hold or exit?
Yes, you can hold on by maintaining a stop loss of 410. Positive momentum can be witnessed above 420 and the immediate target will be 430 to 440.
Got it. Well, that was the last question of the first round of the rapid fire on this edition of the show. But stay tuned. A lot more stock related queries on the other side after this very short break.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन।
Welcome back. You're watching Ask Profit right here on NDTV Profit, and as we go through the next set of stock related queries, a very quick check, because the Nifty IT continues to power through in today's trading session on a day where we're largely seeing flattish moves come through on the benchmarks, almost 3.7% up now on the Nifty IT. Look at the constituents too; those are the other key gainers. You're of course seeing Coforge leading that pack today. But you're also seeing that on other, the rub-off effect coming in on Persistent, also on Emphasis, HCA Tech, as well as Oracle Financial are some of the other key gainers today. TCS also, if you can pull up the 1 month chart, has given low double-digit returns, and that move continues from the lows, at least on this counter as of now. So all of those counters continue to doing well. Let's look at the 1 month move of TCS too. Of course, a lot of those coming in for Persistent too, but almost a 14.5% up move that we've seen on TCS from those lows of sub 2200. But the next question, and this one's also something that we've spoken about quite a bit on MTAR Tech. Radha Krishna from Bengaluru actually asked this question, and Swati, largely like a reminder, right? I think every week we're probably picking this up with you. He's been holding shares at 7,000 odd rupees, but does your cautious view continue on MTAR Tech? We've seen another rally go to 6,000 and then fizzle out. Does your cautious stance continue?
Yes, because the counter is just making a low news at such new lows on the downside, and it is continuously facing a very strong pressure at around 20 DMA as well. Now, the interesting fact that the immediate support level lies at 5450 levels, that is acting as a crucial cluster support level. If it's break those levels, then more selling pressure is likely to be seen, and my target in this particular counter is lies at around 5300. So I will suggest to hold on. Don't create a major long positions at the current market price. Let the stock find a support nearby 5300, then we will witness some sort of a turnaround. So wait for some more time. My view is a little bit cautious on this particular stock.
Got that view, Swati. And the next one is a caller from Hyderabad. Ajay has a stock query for us. Ajay, good morning. Welcome to the show. What's your query?
Yeah, hi team. I'm holding Upspace Solutions 305 and 1000 shares.
Okay.
At 305 cost. So, can you please tell me fundamentals and technicals? Is this a stock to be held for me? Every time I'm asking technical and fundamental, but you guys are not.
Ajay, we do get a lot of stock related queries, hence one of you at a time. But let me go across to Tapan first on office. Tapan, how are you looking at this counter? You've seen a few listings come through in the space over the last 2 years. What's your view now?
There is a pressure on this counter now. If you see, of course, the valuation is still on a premium side now, and corporate hiring is little bit slow down. Competition is increasing, but I think the overall slowly and gradual flexible workspace demand is going up. So we have to see that how this company is able to deliver the margins and the revenue. I think this company will be in a pressure, even though cash generation is there. I think demand is on a lower side. So my take is don't enter at this level. In future, if it comes up now, I think better to get out from this.
The next query is from Sankana Naran and Tapan, it's for you actually. He was holding around 100 shares of Power Grid at a price of 340. So far the shares have not given him much return. He's a long-term investor. He wants to know whether should he continue to hold this stock or should he change it to PFC?
Well, I think PFC may do little bit better, but I think Power Grid, why I prefer Power Grid? No, because it's like a one type of monopoly in transmission, and we know that what type of demand will be there. So it will be slow and steady. No, it will provide you a return over the time. Again, if you see the transmission pipeline is quite strong, and almost 30 to 40% deficit is there in transmission. If we can stay, I think better to stay with Power Grid. I think from here things will be better for Power Grid. That is what I feel.
Got that view, Tapan. But the next one, and this one's from Khurshid from Delhi. It's on Bank of Baroda. Let's look at the 1 month chart of this counter as well, because post that announcement of that settlement, that 5,800 crore hit that we saw in this quarter, stocks largely been range bound in this range of what we have seen. So the 13% downtake coming in because of that big hit coming in from that settlement. But Tapan, his buying price is 270. Wants to know if it's a good time to add more into this chip. What would you recommend? Because the earnings largely could be affected, right, for this year. So more of a longer 2-year story on this one. What's your view?
Well, yes, there will be impact, and net interest margin also pressure will be there. If you see deposit competition is intensifying now, because most of the deposit is going to the market actually. And if you see the PSU valuation discount will be there, but credit growth for the BOB will be around 13% odd, and retail loan mix is improving. I think if you see gross NPA and net NPA are in control, dividend yield is around 3 to 4%. So if he wants to enter, I think 220 will be a good level to enter, not at this level. Just wait for maybe 8 to 10% correction.
Okay. The next query is on Anantraj. Soumyan Mukherjee from Kolkata has around 100 shares of Anantraj, bought at a price of 534. He wants to know, should he continue to hold this counter from long-term perspective? Tapan, any view?
Yeah, hopefully so. And if you see the data center, that is what I heard, that they are going to have a separate demerger of data center. If it happens, that is a value unlocking. And if you see the rental income will be rising, and we have to see how the DC execution will be there. Currently, it's like a real estate company only, and high capex requirement is there. So we have to see the working capital pressure on the margins and all that. But at this level, I think he can hold on, give 1 or 2 quarter more. It's a cash generating company. Hopefully things will be better and more clarity on data center point of view.
Got that view, Tapan. But the next one, and it's on Cinema SGS. It's been another very, very interesting counter because of the structural up move that we saw, and then some selling from that 1400 odd level. Now, this has been noted by our viewer as well, who's Ajay Kapoor. Wants to know if it's a good time to enter now at the current transaction. Swati, he's looking for an entry price. Is this it, or should he wait for that 1250, 1200 odd mark and then enter?
I would suggest to wait at the current momentum, because this particular counter is under the profit booking session as such. I believe it will find out a good support nearby 1200 to 1180 levels that are the previous swings low supports. The RSI showing the negative crossovers from the higher side. So we might witness more selling pressure in this particular counter. Fresh positions can be add up any dips towards to 1180 to 1200 level. Those are the attractive level, but the risk reward ratio will be also favorable, and probably at that point of time, the counter will also enter into the oversold zone. From there, after, we are looking for a target of at least a bounce back rally can be witnessed to 1330 to 1300 levels on the higher side. So wait for some more time.
The next query is from Aarti from Bangalore. She is holding few shares of Wipro, bought at a price of 205. Should she hold or sell? Swati, any view on this?
I will suggest to hold on the long positions, because already it's a bitten down counter. The risk reward ratio is really favorable. Momentum indicators such as RSI showing a positive crossovers from the oversold zone. So this is the good price to take a long positions for the longer term horizons. Definitely this kind of a bounce back rally or the pullback rally can be extended towards to 200 rupees. So definitely you can hold on to long positions.
Got that view, Swati. But the next one is from Dr. Zeenat. She wants to invest between either of these counters, Swati, either CG Power or Eon Exchange. From the short to medium terms, are either of those or one of those recommended?
CG Power is recommended, but not at the current market price. I will suggest to wait for some more time. If you're getting any dips towards to 800 levels,
either of those or one of those recommended?
CG Power is recommended, but not at the current market price. I will suggest to wait for some more time. If you're getting any dips towards to 800 rupees, will be the good levels to take a long position, and thereafter we will look for a target of 900 rupees.
Okay, the next query is from Lilavati from Hyderabad. She is holding 80 shares of DMart at a price of 2,555. She wants to exit this and buy L&T. Tapan, would you recommend this move?
Yeah, please do it because honestly, Avenue Supermarket is okay, even though the profit and all that is coming, but the valuation is too high. And from here, I think e-commerce competition will be intensifying, discount and all that. And that is where putting pressure of margin of demand. comparatively, yes, L&T is much better option. I think much better scale, and in future looks bright as the Middle East demand is picking up. So yes, please move to L&T.
Big results also of L&T today, so something to watch out for. But let's go across to Hyderabad now. Kiran is dialing in for a stock related query. Kiran, good morning. What's your query?
Good morning, and good morning to all the panelists also. I am a regular viewer of NDTV, and it is my privilege that I talk to you, and I have a query regarding HFCL Limited.
Okay.
And I bought 807 number of HFCL shares with 212 rupees.
Okay. And this one was bought from a long-term view, Kiran, or a short-term view?
Short-term view.
Short-term view. Okay, got it. Well, firstly, Kiran, thanks so much for joining in and being a regular viewer of the show too. Do keep calling in. But Swati on HFCL, he's bought it at 212. What's your opinion on the stock now?
At the current levels, definitely we was a little bit cautious because from the last 3 months we have already seen a huge rally and which has taken a counter from almost 80 to 230 levels. So the profit booking is likely to be seen and which we are witnessing right now. I will suggest you to exit the long positions at the CMP. Any dips towards to 160 level, you can definitely re-enter into this particular counter. But at CMP, you should exit this particular stock because more selling pressure is likely to be witnessed, which will take a counter towards to 160 to 165 levels.
Anil Kulkarni from Mumbai is holding 8,700 shares of GAIL India, bought at a price of 175.6 rupees. Should he hold or sell? Swati, any short-term view on this counter?
Short-term view is positive because the counter has given a cluster resistance breakout of 172 and today the volumes are really doing very well along with the price momentums. So whenever such kind of a structures forms, I believe the positive move is likely to be extended towards to 185 levels. So you can definitely hold on the long position. If you want to keep any kind of a stop loss, 169 will act as a crucial support level. So by maintaining that as a stop loss, you can hold on the long positions for a 185 rupees target.
Got the view, Swati. But viewers, time for another quick break. Come back in the last stretch of the show. We also have the rapid fire round. Do stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो। को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा। तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Welcome back to Ask Profit. Last stretch of the show, so do start sending in your queries if you haven't done so already. But the next query is from Pune. Rohit is having a query on Neel Kamal. He's holding these shares at 1,390 rupees per share, so sitting on substantial gains. Tapan, sitting on 5 lakh rupees of gains, would you recommend him to book partially or maybe continue to hold? What's your opinion?
First of all, congratulations to him. Yes, book partial, because revenue growth and profit growth is decent for this company, and in future also demand will be there. But we know this cycle, it may anytime turn around. Of course, their competition is also increasing. Raw material cost risk is there. If anything happened to real estate department, then also this stock will be hit. And again, the stock has gone up a lot. So yes, please book at least 40-50% of profitability. And I think then you can hold the stock.
Next query is from Venkat Ramani from Bangalore. He's holding 300 shares of Tata Power, bought at a price of 274 rupees. He wants to know whether should he add more for a period of next 6 months. Swati, any view?
I will not suggest to add more at the CMP. Any dips towards to 350, 340 levels are the good levels to take a long position. Positive move can be witnessed above 390, 394 rupees only towards a target of 420.
Got that view. But the next question, and this one's from Prashant. He wants to know about either of those counters between Paytm or Varun Beverages. Swati, do you like either to enter the counter right now? What's your view?
Paytm and Varun Beverages, as if we do the comparative analysis between two, I believe Paytm looks interesting because already we have witnessed a sharp sell-off, then we are witnessing the trend change which has taken a counter into the upward rising channel. But not at the CMP, any dips towards to 1200 or something like that, you can definitely enter into the Paytm. The long-term target, I believe that it has a strong potential to reach up to 1600 to 1700. So any dips towards to 1200 or so, definitely you can add on the long positions.
The next query is from Venkatesh. He wants to know the best time to enter Axis Bank. Swati, any view here?
Yes, I'm positive on the banking sector. Axis Bank at the current level also you can take at least 30-40% long positions. The short immediate target is coming at around 1300, which is the 20-day moving average. Up to that level, the stock is likely to enter. And just keep some more capital to add on if you are getting any dips towards to 1180 or 1160 levels. My view is positive on this particular counter. If you don't want to miss out the rally, 30-40% I recommended at the C.
Got that view. But the next one, and Amit has been looking at the screen today because this question, and who's from Chennai, is on the IT pack. Now he's seeing a positive rally on the sector as we've highlighted as well. Wants to know, Tapan, if he should consider any particular stock for the long term. What would your preference be? Would it be in the larger pack, in the mid cap space, or even in the small caps? Tapan, what do you like?
Honestly, I don't like IT sector from last 1.5 years, but even though, because I think still it may go up, I'm not saying 10-20%, but for long term, it should be a sustainable gain, correct? And that is what I cannot see currently. We don't know who will be the winner. But then also, if you forcefully ask me, then I'll go for Coforge or Persistent. These are the two pick that is much more safer compared to larger IT. Larger IT is completely ignored. It may go up recently because of this rally, but again, result may not come, then it can go down. So if Coforge and Persistent are the two, if they want to go.
Okay, the next query is on Eternal. Ravi from Hyderabad wants to know whether it's a good time to buy Eternal from short-term perspective. Swati, any view here?
Yes, you can take a long position at the CMP as well, but you have to maintain a strict stop loss of 290. The immediate target I'm looking forward at least 330 rupees. So definitely you can go for a long position at CMP.
Got that view, Swati. But the next one, and we actually have a couple of queries on the fundamental and technical side on Rubicon. So let me ask both of you. So the fundamental query is from Bharat, who's from Andhra Pradesh. Tapan, a view on Rubicon. I'll come to you, Swati, as well.
Well, Rubicon, I think if you see the results and all that, that is overall okay. I think still the pressure is there on the margin and all that. In future, I think the guidance looks okay, but I think one should wait. Don't enter at this level.
On Rubicon as well, Lavanya, who's from Illuru, wanted a target as well as stop loss. What's your opinion?
Yeah, I agree with Mr. Tapan. The view is a little bit cautious because we have already seen a very huge rally from last 3 to 4 months. And from last few trading sessions, I'm witnessing a negative divergence in this particular counter. So we might witness some sort of a profit booking. Any dips towards to 1450, 1400 are the good levels to take the fresh long position. So at the CMP, wait for some more time, let the stock correct and find out a good support at a lower levels, and you can re-enter into this particular stock.
Next query is from Sairam from Andhra Pradesh. He wants to know whether can he buy Vinati Organics and PI Industries at current price. Tapan, any view on both the counters?
No, currently no. I'm not too much bullish currently. Still, I think demand sluggishness is there and margin pressure is there. We have to see next 1 or 2 quarter how the results will be. I think the pressure will sustain for next 1 or 2 quarters. So currently no for both the stock.
Got it. Got the view. Tapan, next one is on Canara Robeco. Actually, we had a good set of numbers from the company, and we saw the stock react too. Swati, our viewer Shailendra is actually holding these shares at 260 odd. Wants a short-term view. Is there any visibility? Because I know it's a very recent listing, so not too much historical data. But we saw the rally fizzle out very, very quickly. Anything on the charts that suggests the same?
See, as of now, definitely we are witnessing some sort of a selling pressure, but it has a very good support nearby. I believe that a 255 will act as a good support levels. So maintain the stop loss of 255. A bounce back rally can be witnessed once the stock manages to give the breakout of 267 to 68 levels on the closing basis. If it's break that level, then 280 is the likely target in near term. So hold this particular counter, but maintain the strict stop loss on the downside.
Right. The next query is on Tata Chemicals. Maqsood from Hyderabad wants to know, he's holding around 25 shares, bought at a price of 900. He wants to know your view, Tapan, on Tata Chemicals. Should he continue to hold?
Well, I think it will be sell on rise. Now, this stock has been underperforming for long. Again, soda ash prices, weakness is there, global oversupply, margin pressure, weak global demand, and also commodity price volatility is there. And India demand is improved, but it will take some time. So my take is now, once it comes up, better to move out from the stock.
Got it. Got the view, Tapan. But the next one, and this one's on Thangamayal, Jay Krishnan, who's from Kerala, has bought these shares at 7,320. So he's bought it at elevated levels. Just seen a look at the 1 year chart. It's been a very, very strong move on Thangamayal. Swati wants to know if he should still continue to hold on, because the up move that we've seen on this counter has been very strong. What's your view now?
My view is positive, but can you please let me know the buying price of this particular stock?
He bought it at 7,320, 7,320.
Oh, at a very high levels he bought it. I will suggest to hold on, but maintain the strict stop loss of 7,200 rupees on a downside, because the counter is facing a very strong resistance level on the high side towards its 52-week high. So I believe we might witness some sort of a selling pressure. So maintain the stop loss of 7,200. If it's break that level, then we might witness some sort of a selling pressure or the profit booking, which will take a counter towards to 7,000 rupees on a downside. So hold, but maintain the strict stop loss on downside.
Got it. Well, let's now start the rapid fire round in this edition of the show. The first question is coming in from Manju. How are you on KC International, if she can buy the current price? Tapan?
Yeah, on SIP menu.
Next query is for you, Swati. Sushila from Baleri wants to know whether should she continue to hold the shares of Cupid. She has around 1,600 shares, bought at a price of 136. Any targets here?
Yes, target is 240 to 245 levels. Definitely can hold on the longs.
We took a view on BEL from Tapan, but Swati, anything on the charts that you suggest that it's a good time to buy or no?
No, not at the CMP. Any dips towards to 380 levels, you can go for a long position.
Next query is for you, Tapan. It's on Suzlon. Bhaskar from Hyderabad is holding 900 shares, bought at an average price of 58. Should he hold, add more at current levels?
Yeah, I can add more.
The next one's on Tenneco India. Swati, a viewer, Sai Karthik wants a 3 to 6 month view on the counter. Has seen some run up since listing, again a recent one. But what's your opinion now?
My view is a little bit cautious. Any rise towards to at least 540, 550 levels, you would try to exit the long position. I am not much positive on this particular stock.
Next query is for you, Tapan. It's on SG Mart. Asta Sabarwal is holding few shares, bought at a price of 614. Should she sell or hold?
Sell on rise.
Also, Tapan, on time, Technoplast, because Sainath is holding shares at 158. He's holding almost 2,500 shares. What's your view on the stock now?
Currently hold.
Next query is for you, Swati. It's on JNK Bank. Kiran wants to know whether should she buy at current levels.
Not fresh long positions are recommended at the CMP. Any dips towards to 165 to 160 levels are the good level to take a fresh long position, and then the immediate target will be a 180 to 190.
Next one's on Clean Science. Swati, our viewer has bought these shares at 790, and this is Praveen. Wants to know about a 6 to 9 month view on the stock.
My view is a little bit cautious, but those levels are the attractive levels to build up for the long positions. For a short period of time, we might witness pullback rally towards to 760, 770 levels.
The next query is for you, Tapan. It's on Nuvama Wealth. Madhav from Hyderabad is holding 60 shares, bought at a price of 1,230. What's the long-term view on this?
Yeah, stock is good, so you can hold on.
IDFC first took a technical view from Swati, but Tapan, R. Pillai is bought these shares at 53, so he's sitting on good gains now. Should he ride the wave?
Yeah, ride the wave.
The next query is for you, Swati. It's on CG Power. The viewer is holding few shares, wants to know whether should he buy more at current levels.
No, not at the current market price. Any dips towards to 800, you can definitely think about it.
The next one, it's on Hindustan Copper. Our viewer wants to know if he can enter now for the long term. Tapan, would you recommend that?
No, at least 10% down for me.
The next query is for you, Swati. It's on Swiggy. Ganesh wants to know whether can he buy Swiggy for short term.
Not at the current market price, but definitely any dips towards to 255, you can add on. Target will be 280 rupees on the upside.
Murthy is holding on to Balu Forge, bought at 480. Currently sitting on loss, Tapan, but should he average down?
Yeah, he can.
The next query is for you, Tapan. It's on Balaji Amines or Alkyl Amines. Venkatesh wants to know what is a better bet here.
Balaji.
On Tata Elxsi, our viewers holding shares. This is Tara at 3,800. We got Tapan's view on the sector, but Swati, what should she do? Should she continue to hold?
Yes, definitely you can hold on. Positive divergence are witnessing. Looking for a short-term target of 3,800 and beyond that 4,000 levels can be seen.
The next query is for you, Tapan. Abhijit from Pune is holding 102 shares of KPIT Tech at a price of 770. Should he hold, average more, or exit?
Exit on rise.
Next one, Swati, on NoSil. Dhaval wants to know if he can buy into this counter for the short term.
Not at the current market price. Wait for some more time. Any dips towards to 150 level, you can review this particular stock.
The next query is for you, Tapan. It's on Zenza Tech. Rajiv from Bangalore has bought around 1,000 shares, bought at a price of 485 rupees. Should he continue to hold this counter or exit?
Currently hold.
Got it. Well, that was the last question of the rapid fire as well as this edition of Fast Profit. Tapan as well as Swati, thank you so much for helping us solve 56 queries that we have in the last 1 hour. A lot of queries today on CG Power, a lot of queries on BL as well, but thank you so much for your opinions and your views. Viewers, out of time, stay tuned, a lot more action on the other side.
शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Welcome to KYC, and you're watching NDTV Profit with me, Sharad Dubey. A very interesting show, I get you, and also at times you get recently listed companies to understand what's their story. And today also I have got a very recently listed company. But before that, try to guess the stock, what I'm talking about. The first hint I would like to give you is it's the only listed domestic ocean cruise player in India. I'm sure a lot of you must have guessed it by now, but the ones who haven't, I have more hints for you. The board recently approved a share split. And remember, the IPO listing just happened this month itself. So many corporate actions are happening. We'll try to understand why. Also, another hint I would like to give you, apart from this, is a strong recovery of 30% from the recent lows have also come. Interesting name, right? And I'm sure on a weekend or a long weekend or maybe even a 7-day trip, you must have taken it or your friends must have taken it on Cordelia Cruises. But the company's name is Waterway Leisure Tourism. That is where the brand of Cordelia Cruise also comes in. But we try to understand why are we calling this company, and is this recently listed? What's the story? Everybody's talking about it. What's the actual business model? Has Dalal Seat actually understood how to value a company like this? What should we look? What we should not look? It's a first time for us. It's first time for you. Secondly, let's look at the second question. What would it be? And that is the elevated cruise prices. Is it going to impact the fuel cost or the other expenses going ahead as well? And we'll try to understand more about the progress of onboarding 2 new vessels. Currently, the company is just having 1 new vessel. So this is very much important trigger. Also, let's move on to the next question. Is the rationale behind the share split? Is it to gain the retail participation? What happens next? But Street is concerned. Concerns comes on the debt reduction plans. What are the levels to look at, or does this industry command higher debt? We try to understand that as well. and the FY27 top line and margin guidance, any forward-looking statement which the company can give. And yes, company has come out with its numbers, so it's not in a silent period. So we'll try to ask the management any numbers are there or not, any new routes which are planned in the coming quarters to expand, because India's coastline is huge. So these are the key questions we'll try to understand from the management, but let's try to understand what's the key details for the company. And of course, one of the most important thing is it's India's only listed domestic ocean cruise service. Also, let's pull out the second point. It was recently listed in July 1st, 2026. Now let's get into the details about it. There was a fresh issue. It was mainly funded for vessel expansion and not debt reduction, and that is where the question mark comes for me. What happens to that debt? It has just one ship. It's called MV Empress. Around 55,700 guests sailed in the first quarter itself. Also, looking at that, company has 7 ports in India. That is where they operate.
We delivered this performance in a volatile environment through competitive moats built over time. First, our global supply chain network, R&D agility and manufacturing capability ensured continuity of supplies and faster response to market demand. This helped us to maintain service levels during this period of supply crisis as well. Second, our resilient portfolio straddling across price-benefit pyramid and strength of our brands enabled us to implement calibrated pricing actions while preserving the consumer franchise. Third, despite the cost pressures, we continued to invest behind brands by stepping up absolute A&P spends to the highest level in the last 11 quarters. We further strengthened our omni-channel presence by growing distribution in general trade and continuing offline expansion of digital-first brands such as Minimalist and Simple. And finally, our financial agility enabled us to balance near-term pressures with long-term value creations. That brings me to the overall consolidated results. Our EBITDA margin at 23% was within the guided range. Our absolute EBITDA grew 8% year-on-year, while profit after tax before exceptional item grew 9% year-on-year. The reported profit after tax declined 2% on account of one-off tax credit in JQ25. The tax credit was to the extent of 337 crores. If you adjust for that, then the year-on-year reported underlying PAT has grown by 11%, which is same as profit before tax as well. This performance reflects the quality of our earnings, which means double-digit top line and double-digit bottom line growth and resilience of our business model. Moving to segment performance for the quarter, Home Care delivered 14% USG, driven by high single-digit UVG. This marks our strongest performance in 3 years. Both Fabric Wash and Household Care delivered double-digit volume-led growth. Within this, Liquids continued its double-digit growth trajectory. We continue to see inflation in crude-linked derivatives and are taking calibrated price increases across the segment. Beauty and Wellbeing delivered 12% USG, driven by high single-digit UVG. Within this, Hair Care delivered another quarter of double-digit volume-led growth, driven by premium hair care. We further strengthened our market leadership during the quarter. Skin Care and Color Cosmetics business grew in high single-digit, led by double-digit growth in premium skin care. Within this, Minimalist recorded double-digit growth and the quarter. Skin Care and Color Cosmetics business grew in high single-digit, led by double-digit growth in premium skin care. Within this, Minimalist continued to expand aggressively in offline channels. Oziva saw a near-term softness. We continue to invest behind the portfolio and are confident of its long-term growth potential. Coming to Personal Care, the business delivered 4% USG driven by pricing as this segment continued to see palm oil inflation for the second consecutive year. Skin cleansing grew mid-single digit. Premium bars and body wash within that continued its double-digit growth trajectory led by volumes, which is outlining our premiumization strategy in personal care. Oral care delivered mid-single digit growth with premium innovations like Close Up White Now continuing to gain traction. Foods delivered USG of 7%, which is again a step up of growth sequentially, driven by mid-single digit UVG. Premium tea within this reported low single digit UVG, while coffee delivered double digit volume-led growth. Lifestyle nutrition, which is Horlicks and Boost, delivered double digit growth in this quarter. This is its fifth consecutive quarter of positive UVG and a strong growth. During the quarter, Boost crossed the 1,000 crore annual turnover milestone, making it our 21st brand to be in the 1,000 crore club. Packaged foods delivered high single-digit growth. We expanded Kisan chutneys with 2 new variants during the quarter and continues to see step up as we move forward. As we continue to deliver the short-term performance and step up, we are investing ahead of the curve to build capabilities and remain future fit in marketplace. A powerful example of this commitment is the launch of Unilever Fragrance House in India. It brings together the science of fragrance creation with consumer insight and artificial intelligence closer to one of the world's fastest growing markets. Our liquid labs of the future in Mumbai is another such example. The lab can accelerate formulation development timelines by up to 6 times to respond with speed to consumer needs. In supply chain, our Haridwar and Sonipat factories were recognized by World Economic Forum's Global Lighthouse Network for supply chain resilience and sustainability categories respectively. HUL now holds 8 WEF Lighthouse designations across 6 sites, the highest for any company in India. And finally, we are embedding AI across our value chain. An example of this is our first digital distribution center in Vijayawada, where AI embedded real-time visibility creates a digitally orchestrated fulfillment ecosystem to serve consumers better. Taken together, these investments are building the foundations for long-term value creations along with many others. Now coming to our midterm outlook. The economy continues to be resilient and we expect the consumer demand, FMCG demand to remain stable. Having said that, we continue to monitor the progress of monsoon and evolving geopolitical developments. Backed by the actions that we have taken, we remain confident that fiscal year 27 will be better than fiscal year 26, which has been our guidance so far. And we expect the consolidated EBITDA margin to be around the current guided range, which has been our medium-term guidance. Our focus remains clear and unchanged. Drive competitive, volume-led growth anchored to our key strategic priorities. With this, I conclude our prepared remarks and will now take questions.
You were going to go first, right?
Good morning, Priya and Niranjan. If we see your EBITDA margin, the calculated margin is below 22%, it's 21.7%. So for this financial year, are you expecting to revise your EBITDA margin lower? If you're expecting to keep the EBITDA margin in the 22.5 to 23.5 range, what gives you the confidence? Is it the monsoon? Is it the consumer demand? That's one part of my question. My second question is, if we see volume, again, a bit subdued growth in the first quarter. So for the overall year, what's your outlook on your volumes, on the underlying volume growth? And the third question is, what's the outlook on raw material pricing, especially for commodities, tea, coffee?
Maybe I'll take the last part of the question first and then Niranjan can add. So in terms of inflation, it remains a volatile environment. And we are closely monitoring, both the geopolitical situation, the monsoon conditions in the country. And we believe that in September quarter, we will see sequential inflation. This could be depending on how inflation pans out, between 2 to 5% sequentially for September quarter over June quarter. And we will take calibrated price increases as we have been taking in June quarter. The same we will do in September quarter, but really leverage all the lines of our P&L. So it remains volatile. Given our portfolio, which spans across and spreads across both categories and the depth of our portfolio across price architecture, we believe that we are in a good position to ensure that we navigate this.
And coming to your EBITDA margin, I would like to correct you that if you look at the consolidated EBITDA margin, which is what we report, it's actually 23%. And our EBITDA guidance is also on consolidated EBITDA margins, which is 22.5 to 23.5. And our margin reported for this quarter is 23%. So we are well within the guided range.
Hi, Priya. Hi, Ranjan. I think just the fact that, in the last so many quarters, volume growth has been on an uptick. I understand that this quarter there was also price hikes that has impacted the overall volume numbers. But you've mentioned that 2 to 5% is the inflation that you see sequentially as well. So when you say calibrated price hikes, is there a percentage set that you will be taking, in the next quarter or so? And do you think that for the whole year, the pricing pressure should be mostly done in the first half, and the second half is when you again start that volume growth trajectory coming in?
So I think, firstly, I'll repeat what I said. The conditions continue to remain volatile.
Yeah.
So given the geopolitical challenges that we continue to see, we have to monitor this, and we have to monitor what happens to commodities. The other is the monsoon conditions in India, and we need to monitor the El Nino impact of the monsoon. Now, given that overall agriculture, actually monsoon has become much more limited in terms of the impact of monsoon on irrigation is more important today. But the issue really at hand is what happens with rural sentiment. And this is something we need to watch. But it depends. It depends on how monsoon pans out geographically, and also the depth and extent of the monsoon challenge that we have, if we have one. So this is the two things we need to monitor in the country. Having said that, we feel very confident and comfortable with our equation between price. It's a very balanced equation between volume and price. With 5% volume and 5% price, this is a good balanced equation. We also are very competitive and continue to drive competitiveness in the quarter. So for us, this bodes well going forward.
And just on the fact that monsoon plus there's price hikes, which has overall impacted rural demand, which was seeing a recovery last quarter. So what is your sense there in terms of rural demand versus urban demand going forward? What is it going to look like?
So firstly, we see rural demand continuing to be stable and robust in the quarter. So in the quarter that's gone by, June quarter, we see both urban and rural demand continuing to be stable in the quarter. So that's really our outlook going in. We have to keep watching, like I said, in terms of the monsoon and in terms of geopolitical impact on inflation. But given all the measures that have happened in the country, both in terms of the monetary measures, fiscal measures, the demand in the country remains consistent, remains stable. Niranjan, if you want to add.
No, I think just a couple of probably builds on that. Even on the volume point, even with the price hike of 5% UPG that you saw in the quarter, the volume has only come off from 6 to 5%. So really speaking, a 5% underlying volume growth with that kind of trajectory, again, actually is a strong evidence of our portfolio that straddles across the price benefit pyramid and our brand power, plus our broad-based growth. So the growth is not just coming from a category, it's coming from across, whether you look at a laundry or a dishwash or a hair care or a beauty or a foods or a Horlicks. So it's a very broad-based growth and not just a category which could be impacted by inflation.
Hi. So you called demand stable, but like we've seen, growth has improved. So do you see a progressive improvement in volumes going forward, or do you see them settling, or what's the normalized range that you're looking at? First is that, and secondly, also you said Boost has entered the 1,000 crore mark, and Horlicks Superfoods is also seeing the traction. So does this mean that category is now sort of turning around, and what's the roadmap to make that the growth engine, and also the outlook on the personal care segment?
Yeah, so let me begin with our lifestyle nutrition category. Our lifestyle nutrition category is now seen 5 quarters successive, continued good, strong growth. And what's behind this is really what we've done behind the brands. So we've gone back to talking about the basic needs for nutrition. With the Horlicks Superfood launch, we've gone back to talking about the ingredient storytelling in Horlicks. This has done extremely well for us. combined with the changes in pack price architecture, this is the reason we are continuing to see now a volume step up. With this, we've also entered into Horlicks with Horlicks Protein. This is a new entry we've recently made, and we remain confident of the opportunity that exists in India. There's a huge headroom in India for supplementation of health, and this is just an area which we're beginning to enter with the Horlicks Protein business. So that's really what I wanted to add. Niranjan, if you want to add.
Yeah, I mean, just building on again on this point, as far as volume is concerned, so you see one, demand being stable, our trajectory improving, which also is a function of our competitiveness improving. For instance, we have hit a new high on our laundry market shares, on our hair market shares. The market share improving as well, again as a consequence of all the actions that we have been taking so far. Yeah.
Would you see a similar stories with the personal care segment as well, with what's happening with nutrition?
Yeah, so the way we should look at our personal care business, I think it's a story of two parts for us. One is the category has seen 2 years back-to-back inflation, and therefore overall the category has seen a shrinkage in terms of volume as a result of 2 years back-to-back inflation. That is certainly affecting our mass business in soaps. Our premium business, on the other hand, is growing double digits, strong double digits, and we're continuing to have competitive performance in body wash. So we actually think this augurs extremely well as we go forward into the future, and this will continue to be our focus in personal care.
And lastly, just if there's a price hike, what will the quantum of it, given the input costs are not moving anytime?
Yeah, again, like I said, it's a volatile situation in which we are. So we will take calibrated price increases in line with the inflation. We always look at it in a very calibrated manner, ensuring that we are giving the right amount of price to consumers, looking at all the elements of our P&L, savings, so that we are able to insulate consumers as much as possible.
So if you see, for instance, our June quarter inflation, which we had called out, was around 10%, but we passed on only 5% price increase because we are very conscious of the consumer, because we are obsessively focused on the consumer and therefore protecting the franchise. Therefore, we take all the other actions across the lines of P&L, and thereafter we are passing the calibrated price increases. So very conscious of that, and we'll continue to adopt the same strategy moving forward on sequential inflation.
If I could just add, I mean, I want to just reiterate what our focus is. Yeah. Our focus is we are obsessed with volume-led revenue growth. And I think that is our core focus, and you will continue to see us ensuring that we calibrate for that.
So volume-led over price.
Hello ma'am, hello sir. आपने जैसे कि कहा कि calibrated price hike होगी और volume-led growth देखने को मिलेगी. पिछले क्वार्टर में almost 6% की volume growth आई थी, इस क्वार्टर में 5% की. तो ये assume करना कि आने वाले 3 क्वार्टर में 5 to 6% volume growth normal रहेगी और जो revenue में growth दिखेगी वो ज़्यादा value driven होगी.
हम आगे की गाइडेंस नहीं देते हैं, मगर हमने ये गाइडेंस दिया है कि फुल ईयर 27, फुल ईयर 26 से बेहतर होगा. ये हमारा गाइडेंस है और ये हम गाइडेंस मेंटेन करते हैं. आगे जाके भी फुल ईयर 27 बेटर होगा फुल ईयर 26 से.
मैम आपने ये भी इंडिकेट किया कि प्रीमियम कैटेगरी आउट परफॉर्म कर रही है, डबल डिजिट ग्रोथ वहां पर देखने को मिल रही है. तो यहाँ पे कितना और स्कोप है मार्केट शेयर गेन करने का, क्योंकि कंपटीशन काफी है, एड स्पेंड्स यहाँ पे ज्यादा होते हैं, तो इस पर आपकी कमेंट.
जब आप HUL को देखो, जो हमारा अपॉर्चुनिटी ये है HUL में कि हमारी प्रीमियम कैटेगरीज ना सिर्फ मेट्रोज में और लार्ज टाउन में ग्रो हो रहे हैं, प्रीमियम कैटेगरीज रूरल में भी ग्रो हो रहे हैं, प्रीमियम कैटेगरीज टियर 3, टियर 4 टाउन्स में भी ग्रो होते हैं. तो पूरे कंट्री में जो होता है, हर कंज्यूमर को चाहिए कि थोड़ा बेहतर बाय करे फॉर द प्राइस दैट शी पेज. तो ये हो रहा है, ये सबसे ज्यादा HUL का अपॉर्चुनिटी है गिवन आवर पोर्टफोलियो. हमारा जो पोर्टफोलियो, हमारा जो ब्रांड्स है पूरे कैटेगरीज में, ये सबसे बड़ा हमारा अपॉर्चुनिटी है.
मैम लास्ट क्वेश्चन, HUL पिछले कुछ समय में एक्विजिशंस भी किए, आने वाले समय में इनऑर्गेनिक ग्रोथ M&A कुछ ऐसा प्लान है?
हम देखते रहते हैं कि जो हम कहते हैं बोल्ट ऑन एक्विजिशंस, ये हमारे प्लान में हमेशा रहता है कि हम देखते रहते हैं. मगर हमारा जो ग्रोथ का अपॉर्चुनिटी है वो फर्स्ट है कि हमारे जो ब्रांड्स हैं, एग्जिस्टिंग ब्रांड्स हैं, पहले हम उन ब्रांड्स को न्यू सेगमेंट्स में लेके आए. तो जैसे वैजलीन है, हमने वैजलीन को लॉन्च किया, वैजलीन क्लाउड सॉफ्ट में मॉइस्चराइजिंग सेगमेंट में। तो पहले जो है कि हमारे एग्जिस्टिंग जो ब्रांड्स है उनको नए सेगमेंट्स में लेके जाना। फिर हमारा सेकंड आइडिया होता है कि यूनिलीवर के जो ब्रांड्स हैं हम ले आए देश में, और यूनिलीवर के ब्रांड्स को हम और इंडिया में ले आए। और थर्ड हमारा होता है कि बोल्ट ऑन एक्विजिशन जो है जो हम कर पाते हैं, जो हमारे पोर्टफोलियो को कॉम्प्लीमेंट करे।
हाय,
पहले मैं एक बात बोलना चाहूंगी, फिर निरंजन को बोलूंगी वो ऐड करें। आई थिंक निरंजन ने बोला था ये कि हमारा जो पिछले क्वार्टर का इन्फ्लेशन था वो था 10%, और उसमें हमने सिर्फ 5% कंज्यूमर को प्राइस हाइक किया था। तो हम बहुत कैलिब्रेटेड हैं जो हम कंज्यूमर को पास ऑन करते हैं। दूसरा जो है हम सारा अपना P&L से सेविंग से निकालते हैं। सो दैट इज हाउ वी आर मेंटेनिंग आवर मार्जिन गाइडेंस इन दैट रेंज ऑफ 22.5 to 23.5. So that's the first thing I want to say. Niranjan, if you'd like to add.
और जहां तक ये वेस्ट एशिया क्राइसिस का सवाल है, देखिए ये बहुत ही वॉलेटाइल एनवायरनमेंट है। तो इसमें क्रूड अभी भी एलिवेटेड है, समटाइम्स इट कम्स डाउन, समटाइम्स गोज अप, बट वॉलेटाइल एनवायरनमेंट है। हमने जून क्वार्टर में वॉलेटिलिटी को अच्छे तरीके से मैनेज किया है, जो आपने देखा टॉप लाइन बॉटम लाइन बोथ, और हमारी वही स्ट्रैटेजी रहेगी आगे जाकर भी। बट क्लियरली जो हमारी नंबर 1 प्रायोरिटी है वो है वॉल्यूम लेड ग्रोथ। एंड बाकी जो है हमारा जो स्केल ऑफ ऑपरेशंस इतना है, हमारी फाइनेंशियल एजिलिटी जो है, हमारी सप्लाई चेन है, हमारे सेविंग्स प्रोग्राम है, तो हम सारी लाइंस ऑफ P&L को हम लेवरेज करते हैं और वो आगे भी करते रहेंगे। इसीलिए हमने मीडियम टर्म गाइडेंस अभी भी सेम रखा है कि एबिटा मार्जिन विल बी रिमेनिंग विद इन द सेम गाइडेंस रेंज।
हाय, एकता फ्रॉम जी बिजनेस। प्रिया, मैं ये पूछना चाहूंगी, आपने रिट्रेट किया है कि आप कैलिब्रेटेड अप्रोच लेंगी, तो मैं ये समझना चाहूंगी कि जिस तरह से वॉलेटाइल सिचुएशन चल रही है, रॉ मटेरियल के दाम भी उतने ही वॉलेटाइल हैं, तो आप किन प्रोडक्ट्स में चांसेस हैं कि प्राइस हाइक होगा और कितने % तक होगा? और दूसरा सवाल मैं ये भी पूछना चाहूंगी कि आपने एल नीनो की यहाँ बात की, तो जिस तरह से देश में मॉनसून हो रहा है, आप आने वाले फेस्टिव सीजन में उसका किस तरह से इम्पैक्ट देखते हैं, खास करके अगर हम रूरल इकोनॉमी से डिमांड की बात करें तो?
तो जो वेस्ट एशिया का क्राइसिस है उसके बारे में मैं ये बोलना चाहूंगी फिर से कि बहुत वॉलेटाइल सिचुएशन है। तो हमने बोला है कि इन सितंबर क्वार्टर हम देखते हैं कि 2 to 5% सिक्वेंशियल इन्फ्लेशन होगा हमारे पोर्टफोलियो पे। डिपेंडिंग ऑन द कैटेगरी वो प्राइसिंग अलग होगी। जो कैटेगरीज में ज्यादा कमोडिटी लिंक्ड हैं उसमें थोड़ा ज्यादा प्राइसिंग होगा, बट ऑन एन एवरेज HUL में 2 to 5% इन्फ्लेशन होगा। उसमें हम कैलिब्रेटेड प्राइसिंग लेंगे।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो PPF संभाल लेगा, आप अपना देख लो।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant.
Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar. Let's take it straight across to one particular management with the results commentary really coming in, and good set of numbers when we talk about Tamil Nadu Mercantile Bank. And Saili S. Nair, the MD and CEO, really joins in now, marginally under pressure in trade. But Mr. Nair, good to have you on NDTV Profit. Of course, the numbers stand out in terms of the NIM figures, where a lot of banks in this particular quarter have really struggled. Your bank has outperformed. What is the factor and the sustainability of the NIM figures?
See, on the NIM part, I think industry-wide there is a challenge on the deposits, as you rightly put it. There has been a hardening of the rates across the industry, and we are not immune to that. But what advantage we had in the quarter was the high-cost deposits that we had raised earlier in FY25 and FY26 sort of got repriced in the last two quarters, and that benefit we have got. If you look at our cost of deposit, it has come down from 5.71% to 5.68%. Now, that is contrary to the perception that, the cost of deposit is likely to harden. So that advantage we had on the deposit side. On the advances side, we were anticipating this, that our cost will move up as we go after more and more deposit to secure our resource base. So we tweaked our advances rate in a way to offset that, right? And that benefit, we actually got it in the current quarter. Our cost or yield on advances have moved up from 9.93% to 10.10%, a full 17 basis. So there was a reduction of 3 basis on the cost side and an increase of 17 basis on the yield side. Both together sort of supported us to deliver one of the highest, NIM in the history of the bank, 4.29%.
That's right, but these good numbers, and because of some of the factors that really came in, which gave you a kicker in NIM for this particular quarter, are those going to be sustainable in Q2? Give us a guidance on the NIM figure.
I don't think for the rest of the year we may be able to get to that, sustain that kind of a number. Like I said, deposit rates are hardening a bit, but all said and done, given the fact that I expect the yield on advances to sort of sustain and a bit of increase in the deposit cost. I think well over 4.4% is something very clearly we'll be able to defend for the rest of the year.
All right, and the other important aspect which can really impact the company's ECL transition, how much is provided for? A large part of provisioning has already been done as guided by the bank. Now, what's remaining requirement for this particular fiscal and its impact?
We every month, literally, we do a calculation on the ECL. Certainly, every quarter we do that. And 30th of June, when we did the calculation on the expected credit loss impact on the P&L, on the balance sheet itself, we came up with a number of 324 crores. In fact, we have disclosed it to the public also. Earlier, I've said it earlier also that we did have a 250 crores COVID provision that was lying with us. We have not returned it back. We have kept it as the ECL regime became firm. We have kept aside that to meet the requirement of the ECL. In addition to that, that's a 250 crores. In addition to that, during the quarter, proactively, we have also provided entirely, I repeat, entirely for the stressed non-fund based facilities. That's about 26 crores. And that's also one of the functions of the ECL. So both together, 250 crores existing and the addition that we did about 26 crores, we have a 276 crores kind of number already set aside to meet the ECL requirements. So our own calculations show that ECL requirements today on the 30th of June is 324 crores. So the gap is very, very little, and I'm sure in FY28 we'll take it in the stride, maybe in the first quarter and certainly within the year itself.
All right. So, Mr. Nair, you have also guided that there are two MSME accounts which have really caused the slippages to go up. The resolution is expected in the second quarter. What's the impact on the numbers expected and the asset quality picture in Q2 because of this factor?
Oh, these two accounts are not a very big account by industry standard. These are small accounts because our NPA number is so small. It is just 0.69% of the gross NPA and the net NPA is 0.17%. The numbers are so small. So even a bit of a couple of accounts with some meat in it slips, it makes an impact. So 0.69% of the gross NPA and the net NPA is 0.17%. The numbers are so small. So even a bit of a couple of accounts with some meat in it, and two of the accounts contributed about I think about 23 crores. And that will be resolved in this quarter. I think it is on the way to resolution and we expect that to be resolved. So to that extent, it will be pulled back. So, but from a larger perspective, the kind of numbers that we have put out, we have said very clearly that even in the year going forward, the two resolutions I just said will happen in quarter two. But going forward for the year as well, we will be well below the 1% mark as far as the GNPA is concerned.
All right, so slippages, that will be taken care of with the two MSME accounts, but you've also guided that your biggest growth driver is going to come in from the MSME accounts. Give us the factors at play and guidance on the numbers as well as the growth momentum.
Yes, I have repeatedly said through last year that we have done a lot of changes internally, modernized the assessment processes. We have put in place HR, skilled credit analysts, relationship managers for MSME, etc., are all aimed at driving the MSME growth. I think this is a mercantile bank. So our forte was MSME. We wanted to get back right into it, and that's something we saw through last year, the growth climbing. And this year, I am happy to say that the MSME growth crossed 20%. I think this momentum you will see continuing through the year. And significantly, I have stated that the overall advance number for the year would be in the 21-22% range when we close the year, and this will be substantially driven by the MSME.
All right, MSME-led growth of 21-22% overall advance growth for this fiscal. But give us an overall outlook for this present quarter of Q2, and also a word on loan growth when it comes to the gold financing.
Second question first. The gold loan, the prices have stabilized, and therefore the growth of gold loan portfolio is not going to be at the levels that we saw in the previous year. I think that will come down, but still there is a lot of demand in the market for the gold loan. So the growth will continue in the gold loan, but certainly not to the extent that we saw in the previous year. Like I said, I think that will more than be made up by our focus on MSME and the growth of MSME portfolio. As I just said earlier, the overall numbers for the year would be in, like as I mentioned, 21-22% range, and for the quarter it will be certainly higher than that.
All right, Mr. Nair, always a pleasure to speak to you. Thank you so much for joining. All the best for the next quarter as well. And with that, take a look at that particular counter under slight bit of pressure, but the overall market momentum is also showing a little bit of pressure today. With that, we'll slip into a short breather, but come back and talk more about the market momentum and the corporate developments. Stay tuned to Markets at 12.
शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Welcome back. You're watching Markets at 12. And yes, market momentum is very tentative at the current moment, but Nifty 50 in the last few minutes of trade has shown a little bit of more resilience and away from the lowest point of the trading day also. So there has been a fair bit of recovery. When we talk about the IT sector, that is really outperforming the overall market, and that's what is aiding to the Nifty 50 contribution as well. But let's get chatting with Kashyap Zaveri, the fund manager and head of research at MK Investment Managers. Kashyap, welcome to the show. My first question, how do you see the listlessness and tentativeness of the market and also the factors weighing on it? You're on mute, Kashyap.
So if you look at broadly the market for last about now at least probably about 6 or 8 quarters it's been sideways, but we have seen a lot of actions in markets beneath. If you look at just as top probably top 50 or 100 stocks by market cap, we have seen significant movements across some of the mid cap and small cap stocks, and rightly so, given the fact that if you look at last year as well as first quarter of this financial year, if you look at broadly the earnings growth.
Varun Beverages net profit of 1521 crore rupees, which is slightly above what the street was estimating. Let's just take a look at the numbers, because the stock is up by almost 0.7% in trade at the current moment. So that's the stock reaction, 0.7% up. Net profit at 1521 crore rupees, which is above the estimate of 1400 odd crore rupees. When we take a look at other numbers also, where the impact is really coming in and what's really aiding to the net profit figure, revenues at 8,651 crore rupees, and that is also quite a bit. So it's a beat when it comes to the revenue and a slight beat when it comes to the profit of the company on Varun Beverages. Take a look at that particular counter as well in terms of the performance of the stock backed by this. EBITDA at 2,343 crore rupees, and there is a spike seen in that particular counter as well at the current moment because of the numbers. The numbers would be something that the stock price will really adjust to, but looking at the profitability figure and the picture on that one will be one of the biggest factors based on which the stock performance is going to really show up in this particular earnings momentum. So taking a look at the numbers at the current moment, it's from red zone, it has gone into the green. It is gaining in trade after the numbers, and above, so EBITDA is where the numbers need to be really seen into. So the operational performance wise, it has not beaten the estimates, while the net profit figure as well as revenue figures are beating the street estimates. So that needs to be seen, and we also have to take a look at the internals, that what is it that really boosted the net profit of the company. So 1,521 odd crore rupees when we talk about the Varun Beverages numbers in terms of net profit. So it is a slight beat over the estimates, 1.6% down in trade, and this particular downward movement on Varun Beverages is really coming in because of the operational performance not meeting the street estimates. So the EBITDA numbers are a miss from the street estimate, and that's why that particular stock is really taking a beating. Pretty fast point, it's 2% down in trade at the current moment. We'll also look out for the internals, that what is it that really boosted the revenue of the company as well as the net profit above the street estimates, but at the operational front it has really not met the required estimates and what the street was really estimating, almost 4% down. So it is really quickly losing momentum when we talk about Varun Beverages. EBITDA at 2,343 crore rupees, and it was almost 100 crores above that what the street was estimating. But the revenue as well as the net profit figure are the ones which were the headline numbers based on which the stock really tried to slip back into the green, but then soon after that the operational amount really coming in, and that really missing the street estimates. EBITDA margin is the picture we were looking at, 27.7% against the estimate of 29.5%. So almost a 2% miss on EBITDA margin is what is punishing this particular counter when we talk about Varun Beverages. 3.5% down in trade, and it is owing to the operational performance not meeting the street estimates. So that's a big theme really coming in. Kashyap, let's talk about the consumption stocks and the earnings momentum that they have shown. HUL is down, has taken a beating after the numbers really came out, not meeting the volume growth figures. And here on Varun Beverages, we see the miss coming in on the operational front. How do you assess the earnings momentum in this sector?
So I think, broadly there has been a bit of a polarization over there. So if you look at underlying volume growth for stocks like Tata Consumer or Marico, they have been in, high double digits. Some of them have declared numbers by now where we have seen a volume growth in low single digit also. So there has been quite a bit of, polarization in the earnings that we have seen. However, if I look at broadly the numbers which have come for the discretionary side, I think consumption growth is pretty much visible, whether it is the auto OEM numbers, whether if I look at broadly the payment indicators, which are like UPI or credit card or electronic payment indicators. I think broadly discretionary consumption seems to be picking up. But yeah, I mean, there has been a bit of a polarization in number if you look at the listed companies' results until now.
All right, Kashyap, unfortunately, the numbers came in and ate into our time with you. But we will chat more on the markets next time. Thank you so much for stopping by for NDTV Profit. All right, let's take it straight to, consumption-led, results. And the pressure that the market is seeing today is the biggest theme in the market. We're talking about HUL 5.7% down. It's been under pressure after posting a weak set of quarterly results today. The company will has already given a lot of details coming out from the management on what really transpired and what's the view going forward. Let's take it straight across to Mahima, my colleague, who is right there at the press conference of HUL and really summing up what really came out of that. Mahima, is the management looking confident about the future growth and what is really ailing the consumption stocks and the company's earnings like HUL?
Right, so yes, definitely. So a couple of things and takeaways from the press. I'm live here from the HUL headquarters itself. Before I, take away with, all the, key takeaways from the press conference or the conversation that, we had with the management, I think what is actually putting the pressure on the counter, it's firstly volume growth, which is below expectation versus what the street was expecting, 5% versus a range of 6 to 8% that analysts were expecting. The second one, I think, is on account of the volume being under pressure on account of price hikes. The third one is in fact the personal care segment, which has been a good driver for growth, has not done very well this quarter, and this is largely on account of the pricing pressure coming in. Now going on to the key takeaways from the management, I think the first key takeaway in terms of the net profit that we're seeing, the overall net profit is seeing a downtick of 2%. That was largely on account of a tax credit. Apart from that, overall net profit has seen a growth of around 11%. The second key takeaway with regards to the personal care segment that we were talking about was that the personal care segment, largely on account of premiumization, is seeing good growth, but the mass segment is where the real pressure is, and there's also a structural shift happening that from the mass segment they're moving more towards the premium segment, and that's why there is pressure coming in terms of where the volumes grow. Plus there's pricing pressure also playing its part. In terms of pricing pressure and margin guidance, they've maintained the margin guidance between that 22.5 to 23.5%. But I think for inflation, what they've said is that they will take calibrated price hikes going forward. This quarter, the inflation was around 10%, and they've taken a price hike of around 5%. The rest 5% in the top line growth of 10% was led by volumes. Next quarter, what they're saying is that they're expecting inflation anywhere between 2 to 5%, and according to that inflation, they will be taking calibrated price hikes. So I think this is the biggest takeaway coming in with regards to where price hikes go. Where demand stands, I think they've said that they see demand being resilient, and they're seeing demand being stable going forward as well. They've seen this quarter as well, despite of geopolitical disruptions, and it will happen next quarters as well. So again, just one last statement from the management that they've reiterated is that going forward, volume-led growth is going to be the way forward.
All right, they're saying volume-led growth, Mahima, but of course they have also made a statement that the price hikes have impacted the volume and more inflation. Whether they'll be able to push more price hikes at the cost of the demand and volume also needs to be seen very, very closely, and the stock is really impacting to that. Thank you, Mahima, for joining in right after that press briefing. We'll slip into a short breather on Markets at 12, but more to discuss on the other side. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV.
Welcome back and focus on one particular counter. Delivery slightly under pressure today. In fact, we had an exclusive conversation with Sahil Barua, the founder of Delivery. Take a listen. Now, Sahil, when we look at your particular sector, there has been intense competition and a lot of e-commerce players have gone into their in-house delivery. With this particular base, and of course you expanded your focus just from e-commerce to the larger play of being a logistics company across the board. But how much of a pressure point is this with the concentration of clients and they going in-house in their logistics?
Yes, I've spoken about this before. Indian logistics is about $140 billion, in terms of market size, of which e-commerce parcel logistics is less than 10%. So first of all, Delivery's aim really is not just to be the largest and most efficient e-commerce logistics company, but really to be India's largest logistics company. And so from our perspective, we remain focused on building not just our parcel business, but our freight businesses, our warehousing business, and our technology businesses. When it comes to e-commerce specifically, we've said this before, the great competitive advantage that Delivery has and that we've always focused on is that we are the lowest cost service provider in the market. And obviously we reach everywhere in India. And I think our costs cannot be matched by in-house logistics. This sort of has been proven time and again. I think companies operate in-house arms for reasons of their own choosing, of course. And maybe the reality is that half the market will continue to be served by in-house logistics. But our aim, of course, is that in the rest of the half, Delivery will be the single largest and most efficient player. There'll be thousands and thousands of companies selling online. And as more consumers come online, they're going to need reliable logistics services. And that's Delivery's job to provide.
Right, because the last mergers and acquisitions that was really done by the company of Ecom Express was basically because of one of these pain points where a large concentration client had really gone in-house. That's why, is this posing a competition in your sector and any impact going forward?
Not really, because in-house logistics arms are sort of uniquely suited to serve the needs of the companies they spring out of. And so at the end of the day, they're not really well suited to servicing, if you're servicing a very, very large marketplace or a very, very large retail arm, it's very difficult to then go and be able to serve an SME business who's selling online on a Shopify store. It's very difficult to design processes and systems to actually be able to serve their very unique and small needs. And that's why not just Delivery, but third-party logistics exists for that reason. So in that sense, while it may appear that competitive intensity is going up, the reality is it's only going up in the accounts, from which captive logistics are coming out. And there are really only 3 large captive logistics arms in India. The rest of the market continues to be served by third-party players.
All right. Now, when we talk about this particular sector and the incidence of crude oil price, how are you really navigating the challenges of crude oil prices being at elevated levels? And earlier we thought that was short-term in nature, but now probably we have to deal with it for a longer period of time.
Yeah, fuel obviously is a fairly major input cost in logistics. I think our approach has been pretty simple, which is how do we minimize our exposure to fuel cost inflation. The way we do it, one is by investing in significantly more fuel efficient trucks. And so since we run significantly larger line haul vehicles across the country, fuel has a sort of lower relative impact on Delivery's economics compared to people who are running smaller trucks. The second, obviously, is across our in-city logistics, we are increasingly trying to move to electric vehicles. So our fleets actually, I think we've grown maybe 5 or 6 times in the last 6 months alone since the fuel shocks began. And then obviously we have arrangements with our customers where at the end of the day, some amount of the impact of the shock has to be passed on in terms of inflationary pricing. But I think the long-term solution is electric vehicles, larger truck formats, shorter distances of travel, helping customers inventorize better, which is a part of another business that we run. And that's how we'll have to deal.
All right. With that, it's a wrap on Markets at 12. Thank you so much for joining in.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
पी मार्क द मस्टर्ड स्पेशलिस्ट सिंस 1933। बरसों से सरसों। कुछ तो बात है इस दिल में।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome to NDTV Profit. You're watching Trending Stocks from NDTV Profit Suzlon Studio with me, Hiral Datia, and I have Sharad Dubey, who's standing at the market pit as always. But before we head across to Sharad, let me just quickly pull up a Swiggy and see what's happening with that counter. In fact, the stock was rallying in trade. You're seeing that dip that is coming in right now. And this is on the back of the news wherein the existing CEO of Swiggy Instamart has stepped down. In fact, Nandita Sinha will be becoming the new CEO from the 3rd of August. That's the latest that we're picking up with regards to where Swiggy is concerned. Amitesh Kumar Jha, he has resigned with immediate effect as the existing CEO, and you have Nandita who will be coming in as well. And this is a very interesting change that we are seeing, and this has been the wave as well when you talk about all of these quick commerce players where there has been a transition in terms of where the leadership goes. But currently, what they've said is that Amitesh Kumar Jha, who was the Chief Executive Officer of Instamart, has tendered his resignation to pursue opportunities and accordingly ceases to be the senior management personnel of the company. And the company places on record its appreciation for the valuable contributions and the guidance that was provided by Mr. Amitesh Kumar Jha during his association with the company. Further, Ms. Nandita Sinha has been appointed as CEO Instamart, and this will be with effect from the 3rd of August 2026 and will be categorized as SMP, which is senior management personnel of the company from the said date. That is what we're picking up so far. I mean, there has been no reasons. Clearly what they've said is Instamart, which is India's pioneering quick commerce platform, has announced the appointment of Nandita Sinha as Chief Executive Officer, and she would succeed Amitesh Jha. You have the Managing Director and Group CEO of Swiggy, who's come out and said that he is delighted to welcome Nandita Sinha as the CEO of Instamart, and Nandita is one of India's most accomplished consumer internet leaders. And Sriharsha Majeti has said that I'm enthusiastic about the vision, customer obsession and operational rigor that she will bring to the team that they've built at Instamart. That's the quote I'm giving you in terms of from Sriharsh Majeti, who's the Managing Director and Group CEO of Swiggy. In fact, he's also further added that Amitesh had provided valuable leadership to Instamart, guiding the platform through a pivotal era of growth, doubling down on Instamart's differentiation with launches like Noise and steadily improving their contribution margin journey. In fact, my colleague Mahima, who tracks this space pretty closely, joins in. Mahima, it's back-to-back news for you. You have HUL, which you've just finished. You have Varun Beverages numbers, which have just come in. And now, Instamart has appointed Nandita Sinha as the CEO of Instamart. What does this take you to?
Yeah. Yeah, so Hiral, interesting developments coming in the entire consumption space, and as you mentioned, the CEO of Instamart, Amitesh Jha, has put down his papers, and this is on account of him going and pursuing other career options. But Nandita Sinha has been appointed in place of him, and she'll become the new CEO from August 3rd. Just to give a brief of what she's been the former CEO of Myntra, so she comes from the background of e-commerce scaling, and she's worked with HUL as well as Britannia in the past, so she has the background being in consumption space as well, and she's also worked with Flipkart in the past, so she's had good hold in the e-commerce space. Now we'll have to see as to how she converts the quick commerce space as well. Just to give a brief to our viewers as to how things have panned out since the listing, because Swiggy has seen a slew of resignations since the listing. I had to just give that timeline. 17th February 25, they saw resignation of M. Sridhar, who was the Company Secretary and Compliance Officer. Then on 11th April 2025, Sahil Barua, the Independent Director, resigned. Then on 25th July, we saw resignation of Sumi Juneja and Anand Daniel, who resigned as nominee directors. Then April 26, we saw Lakshmi Nandan Reddy, who was the co-founder and whole-time director and head of innovation as well, did put down his papers. Then we also had Roger Clark as a nominee director in April 26, who put down the papers. And lastly, very recent one on 24th of June 2026, the Instamart COO, that is the Chief Operating Officer, Ankit Jain, and the Chief Business Officer of Hari Kumar did also quit. Both of them quit very recently. So, Hiral, the point is that the resignations that have come in the last 1.5 odd month are all happening in Instamart. First the CEO, the CBO, and now also the CEO. But the new CEO that has come in it comes with a huge e-commerce experience. So we'll have to see as to how that pans out and how she is able to scale the quick commerce business for Swiggy.
Absolutely, this is going to be very interesting to watch out for as well. Thank you, Mahima, so much for getting in. In fact, Sharad is with me in the studio today. Sharad, anything that you want to say on this one? Because the change of guard which is coming in suddenly right now, and the whole host of leadership changes that have happened with regards to Swiggy. Exactly. That's what Mahima was just taking us through. What do you think is happening?
Well, there is a lot of, you could say, churn happening. We saw it in the banking names. Now we are seeing in the quick commerce space as well. And you never know. Action can come from Zepto also. They are planning for their listing also. In that space also, there are some overhangs.
Yeah, and Zepto, the overhang is mainly in terms of valuations. Exactly. And that's what has already happened. But if you see in terms of Swiggy right now, that stock is making its way downwards, not at the day's highest highest levels, has corrected from the day's highs right now, but still trading in the positive. Let's get in Saumil Mehta, Head Retail Research at Mirae highs right now, but still trading in the positive. Let's get in Saumil Mehta, Head Retail Research at Mirae Asset Sher Khan as well. Saumil, welcome to the show. Always a pleasure to speak to you. Saumil, Swiggy and Zomato, both of these counters that have been having a good run. In fact, yesterday's session was also pretty strong. Today, that stock was seeing some good moves in terms of Swiggy, and on the back of news, there is a mild bit of correction that is coming in here. But what are charts indicating?
I think, good afternoon to everyone. Between Eternal and Swiggy, I would definitely choose Eternal. The only reason is that Eternal has been in the uptrend for a very long time. Even in the longer term time frame, like monthly or quarterly charts, the trend is very much intact. And there are very crucial supports around 200, 190 levels, and that has become a base for the stock now. From there, the stock has multiple times bounced back, and now it has already started making higher tops, higher bottom on the weekly charts. Great momentum, trading about 220, 40 daily moving average. On the other side, Swiggy has been in the downtrend for a very long time. Lower top, lower bottom formations on the monthly, quarterly charts. Even in the short term, it has been struggling to go above 200 daily moving average or 20, 40 daily moving average. So I'm not very convinced with any bounce in Swiggy till the time it does not give me a higher top, higher bottom formations on the monthly charts. So on the higher degree time frame, Swiggy has to sustain, and then only I think I'll be able to, have more confidence on Swiggy. But at this point of time, Eternal would be my pick.
That's with regards to where Swiggy goes, but let's shift focus to a rapid fire. We're going to skip the watch list in today's day because Swiggy has come in. But Gravita, the EBITDA margins are at 7.4% versus a 9.7%. That stock is under pressure as we speak today, down at the day's lowest levels. What are charts indicating, Saumil?
Gravita, I'll be positive. I do understand that there is a sharp decline at this point of time. However, it has had a very good run from 1265 to 1850. I'll be expecting the stock to take support around 1500 or 1550 for the long term. I'm not expecting short term targets or short term trades here, but I'll be bullish, and the strategy should be to buy on declines.
That's to where Gravita goes. Godfrey Phillip, PAT down 28%. Margins are also under pressure. That stock is also seeing cuts of little over 8%. Again, opportunity to buy or stay invested?
I think it's a hold for me. 1900, 1800 is a base, so I'll hold on for the stock.
Okay, the next one is Aeroflex Industries. Again, a good number in terms of profitability, and that's what is being reflected on the charts as well. What would you advise investors to do?
I think definitely hold. I'm bullish on the stock.
Okay, so hold, bullish on the stock. Sagar Cements, net loss at around 23 crores versus a profit, and that's what is being reflected, 3.5% downtick. However, the entire cement pack has not really been so bad. There have been a lot of green shoots that we've seen in terms of cement counters and the kind of surge that we've seen. But what would you do with the Sagar Cement?
Sagar Cement would be a hold for me. It's sideways to positive a view on the stock, but you can hold on to this one.
Okay, Tejas Networks, the company has reported a loss of over 200 crores versus 194 crores. There is some bit of a recovery from the day's lows, but down a little over 3%.
I think hold on to the stock. Crucial supports around 380, 375 levels.
Okay, what about a RR cable? Because the city has gone ahead and hiked the target price on this counter to a 2,650, to a 3,000 from a 2,650.
Hold on to this stock. For medium term traders, keep a stop loss around 2,300 or 2,250 levels.
Okay, Tilaknagar Industries, PAT down 64%. Margins have dipped. That stock, however, is seeing a correction, revision from the day's lowest levels. What would you do, Saumil?
I would exit from the stock. View would be a little negative.
Okay, so that's with regards to Tilak. But thank you, Saumil, so much for joining in. Always a pleasure to speak to you. We'll quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches of
Welcome back to Trending Stocks, and now let's focus on Tata Power. The company reported its first quarter results with a net profit rising nearly 11% and revenue growing over 5% on a year-on-year basis. Speaking to NDTV Profit, CEO and MD Praveer Sinha said the company remains confident of completing key approvals for its Mundra power plant by September. Let's listen in.
This is the first full quarter since Mundra's restart and the Section 11 mandate to run at the full capacity. How much did Mundra contribute to consolidated EBITDA and PAT this quarter?
The Mundra PAT was +20. +20. It was +20 crores and EBITDA was +447 crores.
Okay, understood. And sir, continuing on this, what's the plan for Mundra once this extended mandate lapses on September 30th? Are you expecting another cycle of negotiation? Okay, understood. And sir, continuing on this, what's the plan for Mundra, or is it there a push to convert this into a long-term or permanent commercial arrangement?
We are in the final stages of agreeing on the SPPA. It is the same SPPA as has been agreed with Gujarat. The same SPPA will be agreed with all the states. And it has to go through a process of government approval, cabinet approval. In 3 of the states, it's in very advanced stage, and I expect that in August we'll be able to conclude. And the last of the states we'll be able to do in the month of September. So we are confident that we will complete all these agreements within September with all the balance 4 states.
Understood. And so my last question would be on the transmission. The capex in Mumbai is set to double. How large can the transmission business become over the next 5 years?
So we have shared our plan earlier that in next 5 years, transmission business, and our transmission business have 2 components. One is the Mumbai transmission, and the other is the TBCB bids that we are doing. So we are expecting that we will conclude all these projects by 2030.
Well, that's the management of Tata Power, and of course the stock is on the lower side. It's down almost 1.5% and near the day's low levels as well. So there is a little bit of overhang for the Mundra as well. But an ancillary, you could say, for Power is Coal India also. The company remained a mixed brokerage call post its Q1 earnings, with Jefferies staying constructive on demand and coal prices, while on the other hand, JP Morgan has flagged cost pressures and soft growth. Let's get a detailed breakdown from Parth.
Yeah, that's right. So both of these brokerages have very conflicting views on the same company. If we start with the Jeffries note, then they have a buy rating on the company with a target price of 500 rupees per share, which implies an upside of almost 70% from the current prices. While on the other hand, JP Morgan has a neutral rating on Coal India, and they have actually cut their target price to 430 rupees after Coal India reported their Q1 numbers yesterday. Now moving on to the next point, Jeffries has said that the higher global coal prices will support their e-auction prices in the range of 3,000 to 3,200 rupees per ton. While on the other hand, JP Morgan has said that the Indonesia supply risk because of increase of supply that might limit that coal price upside going ahead. In the next point, Jeffries has said that the power demand in India is recovering and they expect a 5% yearly volume growth by Coal India. But on the other side, JP Morgan believes that production growth of the company has slowed down. We saw this in the first quarter as well, with the production declining 7% year on year, and they expect only 4.5% growth in productions going forward. Now Jeffries has an argument that the stock trades at an attractive 8.7 times its FY27 earnings, which is below the 9.2 times average, but JP Morgan says that lower e-auction prices will weaken that risk reward at the current valuations. And lastly, Jeffries is expecting a 6% EPS CAGR from FY26 to FY29, while on the other hand, JP Morgan has cut their EBITDA estimates for the same time period by 1 to 3%, citing cost pressure. So that's the entire view of both the brokerages combined on Coal India, and the stock has seen a downtick post they have announced the Q1 results. About the total analyst recommendations, 14 have a buy rating on the company with a return potential of 8.1%.
Thanks a lot, Path, for that. And joined in back by Somil. Somil, we are discussing two stocks, Tata Power and Coal India, both of them near the day's low level and selling pressure coming in. Out of these two stocks, if you had to pick, Somil, which would be a better risk-reward ratio? And you can give a positional call as well.
Tata Power and the other stock was?
Coal India.
Coal India, I would go with Coal India definitely. Tata Power has been in the downtrend, and I think the next level on the downside for Tata Power would be 340, 330 levels. So I'll be bearish on that one. But Coal India, I definitely like from these levels. There would be short-term pain, maybe till 400 levels or maybe 390, 395 levels, but that will be a buying opportunity in the Coal India. So Coal India positive, Tata Power negative on the stock.
Okay, so that's with regards to where Coal India goes. But moving on, BEL, that's an interesting one to watch out for. If you have to pull up the stock on the screens as well, that stock is down a little over 3%. They've seen a revenue growth, which has mainly been aided by continued defense order execution in the first quarter. Margins, however, have remained under pressure. Parth, still with us to tell us what are the key highlights, what's not really worked, and what do brokerages make out of it? Are they seeing any revival in place in the coming quarters? Parth, over to you.
You're absolutely right. The revenue growth was led by continued defense execution. However, the pressure that they saw in margins was mainly because of this higher semiconductor cost that the company had to face during the quarter. And also for BEL, Q1 is seasonally weaker than Q4, so they also have that impact of negative operating leverage during this quarter. The order book of the company stands at around 72,000 crores as of now. Now moving on to the brokerages view, Jeffries has a buy rating on the company, but they have cut their target price from 585 rupees to 550 rupees right now. They are still confident that BEL will achieve that 15% revenue growth in for the overall FY27. Now moving on to the Macquarie report, they have maintained their outperform rating and they have actually hiked their target price from 510 rupees to 550 rupees now. They have said that the order backlog is steady and they expect overall FY27 intake to be around 55,000 crores. Now moving on to the Goldman, they have maintained a buy rating as well. They have also cut their target price from 475 rupees to 470 rupees per share. They have said that the large pipeline and exports, these two will remain the key triggers for BEL in the upcoming quarters. And lastly, JP Morgan, they have maintained an overweight rating with a target price of 525 rupees per share, and they have said that BEL remains their top pick for the India's defense sector. So that's the overall outlook on BEL's earnings and the brokerage views as well.
Okay, so that's with regards to where BEL goes. Somil, BEL as well as your other defense names, are you seeing any value at this point in time in that space?
The BEL definitely a very good long-term play, and there's no doubt about it. Long-term trend still remains positive. There is pain in the short term, and I can see that it's making low top, low bottom formations. A very crucial support around 398 has broken down now. However, in the very short term, there will be pain till probably 360 levels, which is a very crucial level for BEL. But that will be a buying opportunity for me. I think I'll be a buyer around 360. And in defense space, I would definitely like HAL. HAL is looking good overall. High top, high bottom formation, still trading about 20, 40, and 200 daily moving average. So HAL would be a good pick for me for investments.
Right, and HAL is actually trying to gain also from the day's low, but still slightly in the red. But we have been discussing most of the stocks have been impacted by the numbers and all in the red. And I think this trend will continue. HUL is under pressure after posting a weak set of quarterly results. Let's go across to my colleague Mahima, who is currently at the HUL headquarters to know what did not work for the company this quarter. The stock is down almost 6% right now. Mahima.
Right, so yes, definitely. So a couple of things and takeaways from the press. I'm live here from the HUL headquarters itself. Before I take away with all the key takeaways from the press conference or the conversation that we had with the management, I think what is actually putting the pressure on the counter, it's firstly volume growth, which is below expectation versus what the street was expecting, 5% versus a range of 6 to 8% that analysts were expecting. The second one, I think, is on account of the volume being under pressure on account of price hikes. The third one is in fact the personal care segment, which has been a good driver for growth, has not done very well this quarter, and this is largely on account of the pricing pressure coming in. Now going on to the key takeaways from the management, I think the first key takeaway in terms of the net profit that we're seeing, the overall net profit is seeing a downtick of 2%. That was largely on account of a tax credit. Apart from that, overall net profit has seen a growth of around 11%. The second key takeaway with regards to the personal care segment that we were talking about was that the personal care segment, largely on account of premiumization, is seeing good growth, but the mass segment is where the real pressure is, and there's also a structural shift happening that from the mass segment they're moving more towards the premium segment, and that's why there is pressure coming in terms of where the volumes grow. Plus there's pricing pressure also playing its part. In terms of pricing pressure and margin guidance, they've maintained the margin guidance between that 22.5 to 23.5%. But I think for inflation, what they've said is that they will take calibrated price hikes going forward. This quarter, the inflation was around 10%, and they've taken a price hike of around 5%. The rest 5% in the top line growth of 10% was led by volumes. Next quarter, what they're saying is that they're expecting inflation anywhere between 2 to 5%, and according to that inflation, they will be taking calibrated price hikes. So I think this is the biggest takeaway coming in with regards to where price hikes go. Where demand stands, I think they've said that they see demand being resilient, and they're seeing demand being stable going forward as well. They've seen this quarter as well, despite of geopolitical disruptions, and it'll happen next quarters as well. So again, just one last statement from the management that they've reiterated is that going forward, volume-led growth is going to be the way forward.
Thanks a lot, Mahima, for that. A very busy day for you, tracking so many consumption stocks and getting it at the right time. But moving on, the stock is down almost 5.5%. Somil, overreaction coming in this counter. Is there a value buy at this levels, do you think, or do you think there's more downtick? And if yes, any suggested stop loss levels for HUL?
I think I'll be positive on HUL from these levels. I was positive even in the morning as well. I think the stock has taken support around 2000 and a little below 1980. That is a very crucial level to watch out for. It's forming a triangular pattern and on the monthly chart. So I'm not expecting the stock to go below 1900. That will be a little deeper stop loss. But I think once this triangular pattern is completed forming, I think we'll see a very good move on the upside. So I'll be positive. Buy on decline should be the strategy, but please do not trade in the short term or medium term.
They do not trade in the short term or medium term. Somil, a quick view in terms of markets as well right now. The problem is we're hitting the 24,000 mark but not able to sustain at those levels. What are the levels telling you in terms of Nifty 50 as well, and what should that strategy look like according to you?
Yeah, at this point of time, Nifty has been in a very broad range, 23,500 and 24,500, 1,000 points range. In between, last month, probably we were in a very small range between 24,300 and 23,800. So that was the range. Now I'll be expecting more range bound movement, but we'll see a lot of opportunities like pharma, defense is looking little all right. And also IT space is looking all right to me. So there will be a lot of opportunities, but index wise, I think it will still be in a broad range between 24,500 and 23,500. I'll be a little positive because I can see a lot of opportunities in a lot of sectors. So that's where my focus will be, not on the index. But yes, at this point of time, in the very short term, I'll be expecting 24,100, 24,200 on the upside.
Okay, so interesting levels to watch out for. But thank you so much for joining in. Always a pleasure to speak to you as well. You know, interesting levels that you're talking about, but Sharad, sustainability is becoming key. It is expiry. Anything that you would want to add?
Volatility. Actually, it's a very plain session for both Nifty Bank. IT sector, remove that. There is a very narrow range of movement happening, so we can expect volatility at least in the last.
But you know what? I expected
minutes.
something like this yesterday as well. Did not happen.
It didn't happen.
Today's session happens or not is anything.
And I think the rollover number is something we should be focusing on
Absolutely.
as well.
So lots to watch out for, but completely out of time. With that, it's a wrap on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit from the NDTV Profit Suzlon studio. Absolutely. So lots to watch out for, but completely out of time. With that, it's a wrap on this edition of Trending Stocks from Sharad, the team that put the show together, and myself.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबां केसरी।
पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद। तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform.
Benchmark struggled to defend gains with the Nifty managing to stay above 24,000. Sensex notches marginal gains as well. IT and realty remain resilient while defense and energy are on the back foot. And oil prices extend their losses after a pause in fighting between the US and Iran held raising hopes for a de-escalation in the Middle East conflict that has upended energy supplies as well. HUL meanwhile has reported a mixed first quarter set of numbers with net profit declining 4% on a year-on-year basis, missing street expectations. Revenue growth remains steady but higher input costs and continued inflationary pressures continue to bite. Bharat Electronics reports a 25% jump in revenue and an 8% rise in the profit for the first quarter, but lower than expected operating margins actually overshadow the strong top-line performance, keeping investors focused on profitability. And Swiggy Instamart has announced a leadership reshuffle at Instamart as well, with former Myntra CEO Nandita Sinha taking charge from August 3rd. Amitesh Jha has stepped down with immediate effect as the quick commerce business enters its next phase of growth. Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets in terms of what they're up to right now. And when you talk about the market performance, actually, you do have Nifty 50 that's just about managing to cling on to those 24,000 levels. When you talk about Sensex as well, it's a little bit of a gain that you're seeing coming in, and I say little because it's just 30 odd points higher as well. Now, when you talk about the broader markets as well, you do have the mid cap that's just about also managing to clinch on to some gains. When you talk about small cap on the other side, on the flip side, that's on the back foot slightly, about 70 odd points lower as we speak. But let's also quickly talk about the sectoral picture as well. It's actually IT that is leading. A little bit of gain also coming in, 3.5% uptick coming in for some of your IT counters as well. And that sector is doing quite well for itself. Realty and auto also remaining resilient, but what's not doing so well right now is India Defence, FMCG, energy, as well as PSU Bank. So all of those sectors just about under some amount of pressure. Now let's quickly talk about what's really doing well in a volatile market such as this one right now, because just a lot of counters that are managing to hold on to a little bit of gain. So it's actually Coforge that's doing quite well for itself. So a bunch of your IT counters, when you talk about the entire Nifty 50 pack as well, you can see TCS, Tech Mahindra, Eternal, Infosys, HCL Tech, Nestle, Titan, Cipla, as well as Wipro. So a lot of IT counters that really make it to this list, up anywhere between 1.5% to about 4.5% as well. What's not doing so well right now is HUL after reporting its numbers and the guidance also in fact failed to impress the streets. 5.5% downtick coming in. Quite a gash on that particular counter. It's actually BEL that's also down after a mixed quarter set of numbers. And it's a bunch of things when you talk about BEL as well. It's actually the profitability that still remains quite the concern. 3.5% downtick coming in for that one as well, and DRL as well as ICICI Bank. So some of those heavyweights when you talk about banks also under pressure as well. And let's also quickly take a look at the entire commodity pack as well, because it's actually oil prices that are very much in focus, extending losses right now on easing tensions. Let's quickly pull up the chart for you in terms of Brent and WTI as well that remain under pressure amid some of those stocks as well. So there you go, $86 coming in for Brent. And even when you talk about WTI, you're looking at very much below those $90 a barrel levels, $81 a barrel for WTI and 86 for Brent as well. So let's quickly get in our expert Anuj Gupta as well to join in and talk to us a little bit about the entire picture here. Now, Mr. Gupta, a very good afternoon to you. It is not a good afternoon for oil. It's not a good afternoon for gold as well. Let's talk about why in terms of the clear picture really coming in terms of the de-escalation as well. But do you also see it being sustainable then?
Hi, good afternoon. Actually, this is a very good note because crude oil prices corrected almost at $80, and this is a good for our economy. And we have seen due to this rupee appreciated a lot. So this is a good news for us. But however, on the other side, we have also noticed that gold, silver, and other metals are not moving higher side. They are on a stabilized form. So we are expecting that de-escalation impact on all the commodity market because the premium of the war is diluting from the commodity side. That's why we have seen a sharp correction in all the commodities.
And it's very interesting in terms of some of the factors that you're keeping an eye on also, Mr. Gupta. When you talk about the tanker traffic, that of course remains paramount right now in terms of importance. When you talk about some of those geopolitical risks as well, that is also in focus as well. But in the kind of levels on the de-escalation, where's the bottom of the barrel right now that you're looking at? Because the market is really hunting for cues when it comes to that as well.
Definitely, Diki. Currently, crude is trading around almost $80 per barrel, and in last 2 days we saw almost 20% correction in the crude oil prices. I'm talking about the WTI. So expecting that this de-escalation and the starting of Strait of Hormuz and shipping all on the page, I think that will be negative for the crude price. And expecting crude may test $72 to $75 per barrel in a very soon because US and Iran on a talking page, and they are expecting that they will come on some negotiation that will be negative for the crude prices. But altogether, I think that will be a positive for the metal because due to this, we can see we can see a demand of industrial metal and the precious metal.
No, absolutely. And, we'll have to leave gold, I think, out of that calculation right now because that also seems to be struggling just about managing to maintain those key support levels as well. But, like you pointed out in terms of oil prices as well, when you talk about the bottom of the barrel, it's quite important to understand if this is a knee-jerk reaction coming in right now. Are you looking at it as such, or do you think that there could be some sense of recovery also coming back to the crude market as well?
See, I'm not expecting any recovery because everybody is looking towards the Fed meeting. And before Fed meeting, I'm not expecting any escalation in US and Iran because they want to hold the interest rate because as per the Fed meter, the expectation of higher interest rate is almost 30%. It is, continuing on a downside from 70% to 30%. So I am expecting that market will be in range and they are, coming very soon towards the negotiation. But yes, definitely if there is any escalation of the war, then that will be supportive for the crude. Then we can see a sharp recovery in the crude prices. But yes, currently there is a no escalation. There is escalation. So expecting that crude may test $72 to $75 per barrel.
No, absolutely. So it looks like that's what you're expecting for the next few months as well. Let's also quickly talk about gold as well in terms of that pressure really building ahead of the Fed decision, right? It's that hawkish stance that the market seems to be a little bit worried about right now.
Definitely, market is waiting and watching the result from the Fed meeting. and they are expecting that probably the interest rate will not increase. So that will be supportive for the gold and silver prices. However, the demand of gold and silver, we are seeing a very low demand of gold and silver. But yes, if they are not increasing the interest rate, and if there is any statement regarding to hold the interest rate or cut the interest rate, that will be providing the support to gold prices. So, and even in Indian terms, there is a festival season, so expecting a little bit demand from this for this festival sign, so that will also a positive. But yes, if they are not increase the interest rate, we can see some correction in dollar index, and that will be positive for the gold prices.
No, absolutely. And Mr. Gupta, I am tempted to ask you about the festive season in terms of fresh buys as well. But before I do that, let's just quickly understand in terms of the real yields as well, remaining the key driver when it comes to gold prices. Just a quick word in terms of whether you think the correlation is still very much in place as well.
Definitely, yields are increasing on a higher side. That will be, work as a rod blocker for the gold prices. But if they are not increased interest rate or is any dovish statement from the Fed side, that will, hold the higher yield, and that will be positive for the gold prices. So expecting if they are not increasing interest rate or any negative statement regarding the interest rate, that will be, again, work as a supportive for the gold prices.
Very, very quick word also coming in terms of that fresh bias that I was asking you. Do you think that this is the time is ripe to also get into the market right now?
I think there is a time to accumulating gold and silver, because we are expecting that prices are on our bottom side. That will provide some support and cushion to the investor or traders for the gold. I think there is a time to accumulate gold and silver in their portfolios.
Absolutely, and thank you so much for taking time out and joining us this afternoon. So there you go, that's the entire outlook coming in for oil as well as gold prices, and the fresh buys outlook also coming in. But with that, it's time for a very quick break. We'll come back with more news and updates on the other side.
शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट
Welcome back. Thank you so much for staying tuned in. Let's talk about Air India that has expanded its service to Amritsar now, making it the second airport to join the airline's hub and spoke network. In fact, Danish is joining in with some more details as well when it comes to this one. And Danish, it looks like good news for flyers who possibly used to take a couple of flights to get to Amritsar then.
Well, your next Air India international flight from Amritsar could be a seamless connectivity, as Amritsar Airport has now become the second airport in the country to feature Air India's hub and spoke model. Well, what is this hub and spoke model? If we talk about the current circumstances, if you are planning to fly to an international destination from, say, a tier 2 or a tier 3 city, then originally you were first supposed to take a domestic flight, and then either you reach Delhi or you reach Mumbai to continue your onward journey. And throughout this, you are also supposed to recheck in your baggage, and you're again supposed to go for a security check. But now, with this hub and spoke model in place, what Air India is trying to do is the fact that if you're planning to fly to an international destination and there is no direct international connectivity of that particular destination from the Amritsar International Airport, then what Air India is offering to its passengers now is this hub and spoke model, in which once you check in at the Amritsar International Airport, over here your immigration, your customs, your baggage, everything will be taken over here, and when you reach Delhi or when you reach Mumbai to catch your original international flight, at that point in time, you don't have to worry about anything. You don't have to worry about immigration because it will already be done at the Amritsar International Airport. You don't have to worry about security scanning of your luggage, as it will already be done at the Amritsar International Airport. So you just have to reach Delhi and you have to continue your onward journey to international destination. Well, the government's intention is that in the coming few years, the hub and spoke model will be brought down to at least 40 airports. Right now, it is only at Varanasi and Amritsar. And as per the airlines, it is only Air India that is offering this hub and spoke model. So all in all, if we see, this step has been taken by the airline and by the government to ensure that there is seamless connectivity for the passengers, as India's aviation journey has just begun.
No, absolutely, and growing by leaps and bounds. Thank you so much, Danish, for joining us with all of those details. Let's also talk about the PM's tour as well. PM Modi is on a historic two-day official visit to New Zealand as well, and the first by an Indian Prime Minister in 4 decades, with India and New Zealand advancing talks on a free trade agreement and exploring new avenues for economic cooperation. You do have Nimit Dixit joining in from New Zealand with all of the latest developments. Nimit.
Kia ora from New Zealand, and NDTV Profit is here in New Zealand to show you more than snow-capped mountains, more than big Bollywood mappings, and more than just test cricket where India fails to beat the Black Caps and every time we come down here. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. Now, Prime Minister Modi also just visited the country, and we're going to take you through some of the places that he went through, and also where we're standing today is a symbol of the connections between India and New Zealand. Why? Because we're in a living Maori village, Whake Rewa Rewa. Now the traditions here in the communal living is something that Indians also resonate to, and the FTA is simply a product of that cultural bond becoming a larger trade bond, an investment bond that brings these two nations together. Now from these geothermal springs, we're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to take you to wool and sheep farms and understand what that market is looking at from this FTA that the two countries have signed together. We're going to be talking to Air New Zealand and looking at other tourism spots where Indians continue to dominate and continue to grow as New Zealand continues to become a larger tourism destination for India. Then we're also going to be talking to the policy makers responsible for the free trade agreement. We're going to go down to the capital, we're going to meet them and understand what they expect going down the line between India and New Zealand trade. And lastly, we're going to meet with one of the banks that funds a lot of this trade in ANZ. We're going to understand what it will take in terms of capital investment and finance to make the paperless workout of this trade a success.
Now, absolutely, and Nimit, it doesn't matter what the men in blue do and whether it's disappointed versus the Black Caps for them. It does look like it's a very power-packed lineup that you've got coming out of New Zealand as well, with all of those reports as well. Thank you so much for joining us with a preview of that. But with that, it's time for a very quick break. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबां केसरी।
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे
Welcome back. Thank you so much for staying tuned in. Well, if Swiggy's quick commerce arm Instamart interests you, let's talk about the leadership reshuffle there as well. And you're looking at the stock doing quite resiliently for itself with that 4% uptick also coming in. Just a little bit of a dip that you had coming in after this announcement was made. And the announcement in question is the CEO Amitesh Jha's resignation with immediate effect. The company's appointed former Myntra CEO Nandita Sinha also to take charge from August 3rd, and the move is coming in amid a series of high-profile exits at the company since its listing. In fact, Mahima is joining in with some more details when it comes to this one.
Interesting, developments coming in the entire consumption space. And as you mentioned, the CEO of Instamart, Amitesh Jha, has put down his papers, and this is on account of him, going and pursuing other career options. But Nandita Sinha has been appointed in place of him, and she'll become the new CEO from August 3rd. Just to give a brief of what she's been the former CEO of Myntra. So she comes from the background of e-commerce scaling. And she's worked with HUL as well as Britannia in the past, so she has the background being in consumption space as well, and she's also worked with Flipkart in the past, so she's had good hold in the e-commerce space. Now we'll have to see as to how she converts the quick commerce space as well. Just to give a brief to our viewers as to how things have panned out since the listing, because Swiggy has seen a slew of resignations since the listing. I had to just give that timeline. 17th February 25 they saw resignation of M. Sridhar, who was the company secretary and compliance officer. Then on 11th April 2025, Sahil Barua, the independent director, resigned. Then on 25th July, we saw resignation of Sumi Juneja and Anand Daniel, who resigned as nominee directors. Then April 26, we saw Lakshmi Nandan Reddy, who was the co-founder and whole-time director and head of innovation as well, did put down his papers. Then we also had Roger Clark as a nominee director in April 26, who put down the papers. And lastly, very recent one on 24th of June 2026, the Instamart COO, that is the Chief Operating Officer, Ankit Jain, and the Chief Business Officer of Hari Kumar did also quit. Both of them quit very recently. So, Hiral, the point is that the resignations that have come in the last 1.5 odd month are all happening in Instamart. First the CEO, the CBO, and now also the CEO. But the new CEO that has come in it comes with a huge e-commerce experience. So we'll have to see as to how that pans out and how she is able to scale the quick commerce business for Swiggy.
No, absolutely, and thank you so much, Mahima, for getting us all of those details. And this is something that you've got that's new coming out in terms of Swiggy Instamart as well. But let's also talk about the world of work evolving along with education that must also keep pace at the sidelines of the NDTV Profit Business Leadership Awards. Atlas Skill Tech University, in fact, talked about bridging the gap between academia and industry as well. And that's also something that's quite important to take a look at. But before we do that, let's talk about Tata Communications that is set to unveil a major AI-led strategic initiative with new leadership outlining their vision as well. Let's go across to Jasmeet, who's speaking to Tata Communications management right now.
Well, thank you for that. As rightly said, we are right now talking with Mr. Ganesh Narayanan, who is the MD CEO of Tata Communication. Alongside, we also have Mr. Harjeet Singh from Tata Tele, Mr. MD from Tata Tele. So now let's quickly understand the new product launch. Well, they have launched a new product in the AI space, more of the AI voiceover, AI voice agent for the SMB space. Let's really go across to them and understand what exactly is this product and how will this benefit the company going ahead.
Good morning.
Very good morning.
Yeah, so I think what we are launching today is the first product of the unified AI infrastructure. We both have been partnering to serve all the businesses in India for multiple years. We have been partnering in multiple technology era. We are excited to bring this partnership to the AI era. What we are launching today is the first of what we see as a product which can democratize the adoption of AI for SMBs. What we have launched today is a voice AI agent. Not your chat bots or voice bots. It's true enterprise grade AI agents which can democratize the adoption of AI for SMBs. It can help the SMBs in this country to scale their businesses not only within the country in multiple languages but across the globe as well, and really bridge the skill gap the SMBs have in this country.
Absolutely. As I was explaining to you earlier, we've been operating on the SME side for multiple years. We have thousands of customers out there. And we strongly believe that technology and AI can be a strong enabler for SMEs to really compete head-on with the larger enterprises. And we've done enough number of deployments to now know that really is the, technology and AI is really the enabler that can take SMEs through. And we've done enough number of deployments to now know that really is the, technology and AI is really the enabler that can take SMEs through this disproportionate scale. So what we are presenting, while we have launched, a voice AI agent, there is a full phase, whether it is of demand generation or giving a consistent quality of service, and you will see more and more products in that area.
Well, got that point. I would like to ask you, Mr. Ganesh, about the overall AI space altogether. We do see a lot of projects converting from a pilot mode to the actual potential project mode. So how do you see that spanning out, given you already operate such huge data communication as a sector and you have been targeting a lot of digital business as well? So how do you see the AI spanning out a business for you all?
I think we have been learning a lot. We have been serving companies both in India, across the globe. AI is definitely moving from a pilot stage into production stage. The real value of AI for companies investing in this space is coming from how they best use the enterprise data as opposed to public data. That needs a different infrastructure, a secure infrastructure which can connect confidently, which can work with enterprise data, take real actions on based of enterprise data. I think that is where the real ROI is coming.
Alright then, that's all the time that we have on the show for now. Thank you so much for tuning in. More news and updates on the other side of that break.
शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933। बरसों से सरसों। कुछ तो बात है इस दिल में।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े vandeBharatam.org पर रजिस्टर करें।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume. Firstly, let's see what's happening in the market. Well, the Nifty is largely flat, not much of a movement that we are seeing in the benchmark. The index is down just 10 odd points. If you look at how the composition is working, it's the IT names which are actually holding the index up in trade. Other than that, all the other stocks are in deep red. If you look at some of the names like HUL, DMart, among the top F&O names, they are down more than 5% in trade. In fact, Varun Beverages is down 8%, Hindustan Unilever is down 6%, Avenue Supermarts is down nearly 5 odd percent. Weak set of numbers coming in from broadly all the names that have, and for Avenue Supermarts specifically, it's not weak set of numbers, but the weak store addition guidance that has come in. If you look at the sector indices, it's the Nifty IT index that's up nearly 3.5%, and it's Nifty Real Estate which is up 1.4%, largely on the back of Lodha, which had seen an upgrade coming in from Morgan Stanley. But on the losing side, we have FMCG down around 2 odd percent, Nifty Energy down 1.5%, Nifty PSU down 1.2% in trade. Only 3 sectoral indices are trading in green so far. It's Auto, Real Estate and Nifty IT. Even the Nifty Small Cap Index is largely flat to a bit negative in trade. But Varsha, which are the key stocks here that are buzzing?
Well, I want to pull up charts when it comes to Asian Granito India, which is up 37% in the last 5 sessions. Today also the stock is gaining. Let's see what stock is doing. I think it's up almost 10 to 12%. You have Agrawal Industries also buzzing in trade. Infobeams Tech is also in focus. Agrawal is up almost 8.5%. Infobeams Tech is almost up 7%. You have Fairchem Organics also in focus on the back of volumes. On the loser side though, you have Indosolar, which is down 15% in last 5 sessions. This is post Q1 FY27 results, a weak set of results that the company has posted. Indosolar is down almost 4% in trade. You have Moltech Packaging also sulking in trade. Huhtamaki India, which is up 50% in the last 1 month, but if you see, the company is actually seeing, the stock is seeing profit booking post great set of numbers in Q1 that they gave. Huhtamaki India is also down. Moltech is down almost 4%. So all these stocks are actually in focus when it comes to small cap. But one stock which is in focus on the back of Q1 numbers is Balaji Amines. Good set of numbers on the back of realizations, I must say. But let's invite our management to speak on the Q1 numbers. You have Ram Reddy, who's managing director at Balaji Amines. Welcome, sir, at NDTV Profit. Pleasure to have you. There was a good show when it comes to revenue and margins, which rose sharply despite lower volumes. Just wanted to understand how were the realizations? Were the realizations only reason why you have seen a good set of numbers? Why I'm asking this is because you had expected almost 25 to 30% of volume growth, which is not being seen in Q1. Will Q2 and further quarters see that volume growth to help or to fix that gap up?
Yeah, the volumes are down because of some obstacles in the inward and outward logistics internationally, and also geopolitical situation in the West Asia. And the good results because of some of the import substitute products like DMAC, DMAE, DAE, we have done very good, and also helped our integrated manufacturing facilities and also for the import substitute products. And going forward, we have recently commissioned the DME, dimethyl ether, which is a substitute for the LPG, and also acetonitrile plant is under modification with a new technology, which is likely to come online from the next month. That is maybe around 20th of the August. It will be coming online, and also NMM, N-methyl morpholine, is also the plant will commission in the next month. And apart from this, at our subsidiary level, we have HTM, NaCN, PDA derivatives, and also brownfield new product modification, that is data, triethyl, triamine will be coming online. Looking into all these products coming online, definitely we are confident that coming quarters, as I said, 10 to 15% volume growth will come. End of the year, the 27 March, you will see the volume growth 10 to 15% when you compare to the earlier years.
Okay, so sir, are you saying that in FY27 you're expecting almost 10 to 15% revenue growth? Am I right?
Yes, revenue growth as well as volume growth also should be there, subject to the prices should be stable.
Okay,
prices.
Right. Sir, no, why I'm asking this is because if I'm not wrong, in the last quarter you said you were expecting volume growth of 25 to 30%. Are you on track when it comes to this guidance?
Definitely, it should come because of these new plants coming into the online. End of the year, it should be 10 to 15%. If not 25%, definitely 15% should be volume growth should be there.
Okay, sir, just wanted to understand 25 to 30% of volume growth you're expecting, but only 10 to 15% of revenue growth. Any reason for that in FY27, or you're going to see that bump up growth in FY28? Just if you could clear that for the benefit of viewers.
I am saying volume growth 15 to 20%. And about the your revenue growth, subject to if the prices like this, if continues, it will be there.
Okay, so 10 to 15% of value growth if the current prices, sustain in FY27. Am I right?
You're right.
Okay, and so what about margins for FY27? EBITDA margins, where will what one should expect when it comes to EBITDA margins?
If you see the past quarter and current quarter, the sustainable 25% EBITDA margins you have seen, maybe 1 or 2% here and there, we should be in a position to maintain the 20 to 23% of the EBITDA margins for this current financial year.
Sir, just wanted to check on the raw material prices. The investors are a bit concerned about the volatility that we are seeing when it comes to your RM prices. If anything on that front, if you could give us some color, how raw material prices have been through, what is your outlook for the rest of the FY27? If on that front, if you could give us some idea.
Definitely, yes. There was some volatility earlier, but we have seen last 1 week, we have seen the stabilizing the prices of the methanol and ammonia prices. They are coming to the, slowly coming to the stabilization. We can assume that if it goes continuously like this, it should go to the normal in coming months. Assume that if it goes continuously like this, it should go to the normal in coming months.
Okay, and sir, I also wanted to, on the first commercial scale up of almost 1 lakh TPA DME plant which has been commissioned, just wanted to understand about the commercial supplies and what revenue can DME contribute when it comes to FY27?
See, this year I cannot say because the first year generally it will take the time for the approval of the various customers. We already given the sampling is going on, but definitely in the next year I can give at least about 150 200 crores revenue should come from the DME for the top line.
Understood. And I also wanted to understand about the specialty chemical space, sir. 750 crore of capex has been expected. How much has been done? What is the capex expected for FY27, and how much revenue can this segment add to the total top line of in FY27 and of course going forward?
Yeah, see, as I said, there are the two episodes are happening. One is the brownfield modification, and second is the greenfield expansion. The greenfield expansion is in the track. There will be 2 to 3 plants will be coming online by last quarter. That is about December, January. You will see sodium cyanide and hydrogen cyanide. These 2 plants will come online. Even the NDTV plant also may come online by end of this financial year. And since all the plants, all the products will be coming online by the end of the financial year, we can expect next financial year very good top line from this Bharat Specialty Chemicals.
Okay, and also I just want to understand about the realizations, sir. What's the outlook when it comes to the realizations, what you are expecting, and also on the ammonia prices as well? Just wanted to have a view on that.
We have almost come out of the crisis. Currently, country is having the sufficient ammonia. We are getting our ammonia currently. Only prices are gone up, but it has started coming down now. So no problem on the ammonia side. And realizations also, we are coming into the realistic realizations for the last 1 month. We have seen the realistic figures.
Understood. Okay. Well, thanks so much, sir, for joining in and having a conversation with us. Pleasure to have you at NDTV Profit. Thank you so much.
Thank you very much.
Well, this was Balaji Ameen's expecting 10 to 15% of revenue growth in FY27 with almost 25% of EBITDA margins. But with that, let's also invite guests for the day, Gaurang Shah, who's Senior Vice President at Geojit Investments. Gaurang, you heard the management, Balaji Ameen's great set of numbers. What's your view when it comes to the overall Ameen space, and how will you read numbers when it comes to Balaji Ameen's of Q1?
Hi Varsha, thank you so much for having me on your show. Good afternoon to all the viewers of NDTV Profit, to you and to Somit as well. So, small disclosure, Varsha, as mandatory, that all recommendations that I'll be sharing with you on your show, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So, we remain extremely positive at Geojit as far as specialty chemicals, agrochemicals, and we've a couple of investment ideas on the fundamental side over there. As I was listening to the management when you were in conversation with them, I think the company is well placed to take advantage of the product mix that they are going to launch going into the future. More importantly, the high margin products, Varsha, I think that's going to add to the profitability and the optimism and the kind of investment that the management has made and is going to make in the future. This tells us the kind of opportunity that lies for the company and the growth. So overall, it is one of the strong players in the specialty agrochemical space. Since we don't have any specific coverage on Balaji Amines, I won't give any specific. Remains to be seen as to the input cost and the availability of input, whether there is going to be any problem as we go into the future because of the geopolitical situation. Because as we all know, quite a bit of raw material that comes in from the sea route, that is from the Middle East, there was a little bit of scarcity, and if the raw material was available, it was available at a little bit of premium. So whether the margins have got contracted or not, that remains to be seen. But as of now, that is not visible. It's a strong player, and definitely the value addition is going to improve the earning visibility, Varsha, for Balaji Amines.
All right, got that view. Well, viewers, time for a short break. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों, कुछ तो बात है इस दिल में।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Welcome back. You're watching Small Cap Buzzers. The next management on the show is quite an interesting company. In the last 6 months, if you look at the share price move, it's nearly 236%. That's a Sigma Advanced System where the share prices have jumped nearly 236%. Recently, the company announced an order win of more than 1,000 crore rupees. To tell us more about the company and the way forward, we are joined by the CEO of Sigma Advanced System. Sir, firstly to start off with, given the fact that we don't often have this conversation and not many people know about your company, if you could just give us a brief of what does the company do and what do they plan to do going forward?
Firstly, thank you for having me. And so, as a company, we are we're a India headquartered global defense and aerospace platform spread across UK and India, with significant capabilities in aerospace and defense. So our defense electronics business is based out of India, in Hyderabad. And then we have aerospace manufacturing facilities in both Sri City and Bangalore. And in the UK, we have a significant manufacturing footprint spread across 6 different sites with almost about 3 decades of legacy and experience that we come with.
Okay. Also, sir, what changed for the company in the last 6 months? The share prices have jumped by nearly 236%. In the second half of FY26, you have started reporting solid revenues. In fact, in the fourth quarter, your revenue stood at close to 323 crore and PAT stood at close to 128 crore. What has changed for the company?
So we've undertaken a series of corporate actions, starting with last year, late in October, early November, we've closed our acquisition of Naismith, and then followed by our first consolidated quarterly reporting in Q3 of last year. And then Q4 also has been a very strong quarter for us. Last few weeks, we've closed the acquisition of Bromford Precision Solutions based out of the UK. And our defense exports business has been extremely robust and growing very well over the last few months. And in terms of the order book, we have very good coverage over the spread across the next 3 years. Over the next 3 years, and that's on the defense export side. And on the aerospace front, we have a clear order book visibility for the next 7 to 8 years.
The 1,000 crore order that you have won recently, if you could give us some more details, what is the kind of margin that one can expect from this order? What is the execution timeline? And are any such more orders in pipeline that we should expect to come in?
Sure. So the recent order that we've concluded or secured, there's been a lot of work done over the last 6 months, right, with our customers in North America. They believe in, they have a lot of confidence in our capabilities, and we've delivered. We've started delivering to them similar products, but these are this contract is more of extended range full bore artillery shells, which gives an additional 40 to 50% range over the regular M107 shells. So, in terms of execution, we'll start deliveries in the next 6 to 8 months, spread across, going all the way up to the end of next year.
Right. Okay. Hi, sir. Varsha, this side. Just wanted to understand our current facilities. I mean, the current facility can execute the order, the current order, the export order that you have, or you want to, or you might want to do capex to execute this order.
So our capabilities that we've already built for our defense and aerospace manufacturing platform, right, meet most of the requirements for the current order, right? And there will be a little bit of capex that we'll need to do, which is already planned and being implemented as we speak. So we're well positioned to deliver on the execution of this order and all the other the entire order book that we have in place.
And given that second half of this last financial year was the first time or one of the major times when you have started reporting revenue, what should investors expect from Sigma Advanced for FY27 and FY28 as well, if you could share?
So the next few quarters, including Q1, are very robust for us. We will deliver significant growth quarter-on-quarter basis. And this is all backed by the order book that we have in place across all our business segments, across all the verticals, and we have very good visibility on growth coming in from our current platform that we already have, and from M&A, the inorganic growth that we are looking at.
And also, does this order improve your chances of getting repeat business from this customer? And also, will this make an entry into other value-added products as well?
Absolutely. So this order gives us, puts us in a very good position for repeat orders from the same and similar customers. And we'll be one of the first few companies in the country to deliver base bleed extended range 155 mm shells. That puts us in a very unique position.
Understood. Right. Well, thank you so much, sir, for joining in and having a conversation with us. Pleasure to have you at NDTV Profit. Thank you so much.
Thank you so much for your time. Lovely. Thanks.
Well, Gaurang, what's your view when it comes to Sigma Advance, considering the order book that they have? And also the growth that you've seen is, of course, the acquisition led. But overall, what's your view when it comes to this counter?
So, Varsha, first of all, I think any company which is associated with defense and aerospace, I think there is a huge opportunity because the government's policies and focus is now going to drive the positivities as far as these sectors are concerned, defense and aerospace, point number one. Point number two, as I was listening to the verbatim given by the management of Sigma Advance, present in India, UK, Europe and US, and their capabilities are also equally spread across the globe. 3-year order book, if I heard right, in defense, and 7 to 8 years order book in aerospace. One thing that we have to remember, Varsha, is that the stock has rallied over the last 6 to 8 months to a great extent. Now that the value is there in the share, a lot will depend upon the capability of the company to execute the order book in terms of scalability of earnings up north. And remember one thing, Varsha, orders as far as defense and aerospace are concerned, these are very complex engineering products. They take time to come on stream. They have to possibly, if I understand this industry right, make a prototype, get it approved via various levels, and then the mass scale production starts. one miss here and there could possibly set back the production targets and the capabilities. So while the stock has rallied, the order book on both defense and aerospace is good for many years. Now it's the big question as far as execution is concerned. I'm sure the way management was giving the verbatim, they are capable of doing that and taking on any additional capacity in the existing facilities. I won't give specifics as far as Sigma Advance is concerned, but 2 points to note. The stock price has rallied to a great extent, and execution is something that we'll have to watch out.
Got that view. Well, thank you so much, Gaurang, for joining in and having a conversation with us. Always pleasure to have you at NDTV Profit. Thank you so much.
Thank you, Varsha. Thank you.
Well, viewers, this is time to wrap this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P Mark, the mustard specialist since 1933.
सरसों से सरसों
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। वंदेभारतम.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock related queries. But if you look at the markets today, they are reflecting to you that they've largely been flat, but there's one cohort that continues to do well, and that's IT. So while the Nifty 50 continues to be very bare bones at that 24,000 mark, the Nifty IT is up 3.5%. That's a big chunk of the Nifty 50. So you must be wondering, what is the other chunk that's not working? And that is the FMCG space. So pull up the heat map also for the Nifty 50, you'll see stocks like HUL that are not doing well in trade today, putting the index under pressure. You're also seeing pressure being put in on the other key counters that you have seen that are also outside the index. So barring HUL, you're seeing some pressure on the defense name too, led by BL earnings that were a miss. Also pull up the other key stocks like Varun Beverages as well. Those also came out with earnings. So did HUL during the day. And both those counters have largely led to a dampener on the sector as well. You've also seen, Varun Beverages now cracking down 6.5%, and it's a slightly more, well, the results were okay, largely in line. I think it's the volume growth for the India business that's putting in question as well. So it's a good time to put all of this into perspective. We are being joined by Abneesh Roy. He's the Executive Director at Nuvama Institutional Equities, now joining in. Mr. Roy, very good afternoon to you, sir. Thanks so much for joining in. It's Puneet this side. Let me first start off, with what started off the day with HUL, right? We saw that the volume growth estimates, and you can give us yours as well, of roughly 6 to 8% that the street was working with, coming in at 5%. Could you give us some perspective to start us off with the volume number of what your expectation was, and now going forward, what can the street expect?
Yeah, good afternoon. Thanks for having me. So yes, today we are seeing that whichever FMCG results or analyst meet of DMart happened, we are seeing stock reaction being adverse. So coming to your specific question on HUL, we were expecting around 6 to 7% volume growth. So yes, slightly below that. My sense is after the Nestle results and Tata Consumer strong numbers in the growth business and the Marico business update, there was an expectation that even in HUL there will be a good beat. Good beat was not there. If you see headline numbers of the sales EBITDA, it was in line with our end consensus. So stronger pricing growth was an expectation, but volume growth slightly weaker than expectation. So I think today there is an overreaction because, as you rightly said, except the IT index, most of the sectors or stocks where results are there, those have been weaker. But I would say that clearly this is also a 3-year high number for HUL. So I would say that from a medium long term, there is a good buying opportunity in HUL. The sharp reaction, I think, is an overreaction. But clearly, Q2, we would expect further acceleration in terms of revenue growth. Our topics are Nestle, Marico, we like Pidilite, Asian Paint. Those will be our topics. But in HUL, it's a mix of valuation comfort and reasonable growth. It is not the highest growth. So these are my quick thoughts on Hindustan Unilever.
Also, Abneesh, as you mentioned, it's a great D to get you because all across the consumption basket, you're seeing multiple key buzzers. So Varun Beverages is the other one that I want to come to now. The estimates that we are working with, almost 1,450 odd crores in terms of profits, that has come through, but stocks has still tanked down almost 6%. Now, the view on the street that the volume growth for the India business is slightly more disappointing. Is your thesis also the same, and what were the number that you were working with for the India business volumes and versus the 13%? So how are you looking at yet again a volume led questions, but this time for Varun Beverages?
So in Varun, clearly we are seeing that in spite of a soft base, last year the base same quarter was a minus 7% volume. So on that, the around 14% volume growth is a disappointment, I will say, because on a 2-year basis, that comes to only 7% kind of volume growth on a 2-year basis. I think for that category, that is not something which investors wanted. I think broadly consensus, and we were broadly at 18-20% volume, and last quarter was a good quarter. So March quarter company delivered positively versus the expectation. This quarter they negatively disappointed on the volumes. Please note that June quarter there was a heat wave in many parts of the country. Of course, there were a few rains also, but generally what we are seeing is because of Campa Cola, there is a grammage addition in a lot of the packs, and that helps the volume growth of Pepsi, Coke, etc. Because for the same pack, you get extra grammage. But in spite of that, volume growth on a 2-year basis is disappointing. And second thing is slightly margins also was below the street expectation, and that's why although headline numbers are almost in line for Varun Beverage versus the street and our. But construct, if you see volume growth bit lower and margins also bit lower in the India part of the business, that is where I think the stock has corrected sharply, because Campa has done really well. Campa, if you see in Q1, has delivered almost 50% of what they delivered last year for the full year. So which means Campa would have seen a strong growth in Q1, and Campa is ramping up a lot of the capacity. So we see that long term this industry will see disruption from Campa coming in. Of course, next 1 or 2 quarter there is going to be heat wave because of El Nino. But definitely even in June quarter there was a heat wave, but still the volumes were below expectation.
Very quickly, Abneesh, just a couple of key questions. So, this structural competition that you're seeing from Campa, and as you mentioned, you've seen a 50% growth just in this quarter itself, as well as the raw material price impact. I think the conference call for Varun Beverages also starts at 2:30. So, just in this quarter itself, as well as the raw material price impact, I think the conference call for Varun Beverages also starts at 2:30. So, how are you looking at the competitive intensity now? Because it can't be that it just wane away, right? So, what do you think would have worked in quarter 4 that didn't in quarter 1? As well as do you think that there will be some structural measures that the management of Varun Beverages will have to highlight as well?
So we'll wait for the call. Just a clarification, it is not a 50% growth for Campa. They don't give out quarterly growth rate. What they mentioned is in Q1, they have achieved 50% of what they did last year. So it's not a 50% growth. I wanted to clarify that. Coming to Varun, our sense is clearly 10 rupee price point will become bigger in this industry. Campa works at a 10 rupee price point. Campa is now going to come out with aluminum cans in the Campa also. In the energy, anyway, Campa is doing quite well. So I think 2 things of disruption will happen for legacy players. 10 rupee price point will become a very important price point. Currently, Pepsi and Coke operate more at higher price point. So that is one level of disruption. Second is the trade commissions can go up faster. So that can have some impact on the margins for the industry in the medium long term, because Campa operates almost double the margins of legacy players. So that's why I think that level of disruption can happen. We'll get more clarity in the call. I think in this business, clearly you'll have to see on a 6-monthly basis. Quarterly volatility will be there given when the season is. But definitely on a 2-year basis, the growth was not up to the expectations for Varun.
Also, just one final question before we wrap, because of paucity of time. DMart has been the other key, laggard today. We of course had the meet today, the new CEO coming through as well. What was your read through for this, as well as your current stock recommendation on DMart as well?
So as I said, none of the results or the calls were warranting a 5 to 7% dip in the stocks. As I said, today it's an overreaction because clearly, except IT, most of the sectors and stocks are not doing that well. So it's an overreaction in most of the cases. Coming specifically to that event which happened, I think clearly the competition from quick commerce is quite severe. We have seen Amazon now and Flipkart minutes were not there in the base last year. Now they have really ramped up significantly across many cities. So that will continue. And even on the store addition, I think Street was looking at a more ambitious number. So it seems that the 85 stores addition which they did last year, there are some question marks whether they'll be able to beat that handsomely. I think that is the second thing. But as I said, none of the event or results warrants a 5% or 7% dip. I think today it's an overreaction. So we could see some recovery in all these 3 companies in the near term going ahead. Not today, but today it's an overreaction.
Got it. Well, Abneesh, and I don't presume that you have coverage on Swiggy, right? Because of course there's been a management change there on the quick commerce side. But just checking if you have any coverage or not on Swiggy, at least under your name.
No, I don't cover.
Got it. Well, we'll let you go on that note. Abneesh, thanks so much for joining in, giving us your views about the sector, about the space and the big names that come through as well. But viewers, we'll slip into a very short break, come back with all of those questions posed to our guest for Ask Profit, the afternoon edition. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हे, लाइफ में स्क्रैचेस तो आएंगे, गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा, आप अपना देख लो।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के
Welcome back. You're watching Ask Profit right here on NDTV Profit. Let me welcome in our guest now, Kunal Shah, Senior Technical and Derivative Analyst at Mirae Asset, Sher Khan, and Astha Jain, the Senior Research Analyst at Hem Securities, now joining in. Both of you, thank you so much for joining in today. Astha, just the first question, and we had a couple of them asking this question on Swiggy today because you've seen, a big management change yet again come through in the Instamart business. And the stock has given a good positive 3 to 4% kind of a reaction. So the first question to you, what do you make of the new news flow, the new change coming in, a reputed name coming through for the quick commerce business? Do you feel that the valuation differential versus Eternal now could have some more chance going into Q1 earnings for Swiggy?
So I think, first of all, good afternoon to everyone. Yes, this change is very much required because what we were able to see that their business, especially this business was under pressure, which I'm talking about right now, Instamart. So Instamart was under pressure and they are receiving very good competition from the rivals. So yes, this management change is really very, very important for Swiggy at this point of a time because what we know that Miss Sinha, Nandita Sinha, she was she was a very good mentor at Myntra and she has scaled that business very well. So I think the kind of experience which she's getting in, I think that is really that will really help Swiggy. And these skills are very, very important, especially when we are talking about the businesses like Instamart. So first of all, my idea here is that yes, this is very important step, and this and that's why markets are also giving thumbs up. Secondly, what I believe that whenever a new CEO comes, then definitely he or she always emphasize on the unit economics, and then I think that will a main key for the Swiggy business at this point of the time. So rather than going for expansion directly, their always emphasis is on first of all improvement on the existing unit economics of any company. So I think that is also very important for any new CEO to come in, who is coming in. So I think that is why markets are giving thumbs up, and this is strategically a very, very important step. My idea here is that now investors have to just see that how she will going to improve the profitability because the Instamart growth, what we know, was very slow. So how the profitability will going to improve, we will have to see. But my idea here is definitely this is in the short term, markets are liking it, and that is why we are seeing this kind of momentum.
Got it. Well, thanks for that view, Astha. So definitely a shot in the arm for Swiggy. But Kunal, let me come to you very quickly now on CAMS. That's the other key counter that Madhu Babu, who's from Hyderabad, has a question on. Wants to know if she can continue to hold. She's bought her at 770. What's a short-term view on the stock?
Yeah, firstly, good afternoon to everyone. See, I think on CAMS, I think the capital market themes now becomes very stock specific. I think CAMS remains one of the strongest pack from the capital markets. So it has been hovering around and taking support around that 740, 745 zone. So that's a very strong demand zone for the stock. So my sense is continue to hold with that stop loss. I am expecting the stock to go towards the mark of 820, 830 on the upside.
Right. The other one coming through is from Shrikant, who's from Bengaluru. Now, we had a detailed discussion on Varun Beverages with Avnish. Also, now he wants to know about a 6-month view. So, he's bought these shares at slightly more elevated levels at almost 605. He's holding 1800 shares. So, on the fundamental side of things, he's gotten a view. But, Kunal, on the charts, how are you looking at it? Definitely, this is a big downtick now. But any kind of stabilization visible right now?
I think the level of 420 is very important. We need to stabilize around this mark. If there's stability in the next 1 to 2 trading session, you might see a smart recovery coming in. So I think if he's holding, continue to hold. 420 should be a stop loss on a closing basis. If that is breached, then probably we'll be heading towards 380 on the downside.
Next one that's coming through is on Muthoot Microfinance. Abdul Rashad, who's from Kerala, is holding these shares at 247. So currently sitting on some mild profits. Wants to know a 6-month view, Kunal, if he should still continue to hold. It's a relatively recent listing, but on the charts, so would you recommend him to continue holding?
Yeah, I think till the time 230 is not taken out on the weekly charts, we are seeing selling pressure from those levels only. Till the time that is not taken out, we'll not see the momentum coming back. If he's holding, continue to hold with a strict stop loss of 210. If that is breached, then exit your longs.
That view, Kunal. But the next question, and this one's on KPIT Tech. Now today, of course, a very vast move that we are seeing across the tech names as well. But for Sudhakar, who's holding these shares since 2024, he accumulated it at elevated levels of 1,085. So currently sitting on deep losses right now. Asta, given the conviction, I think that the street has gotten from Coforge numbers, I think today, would you just recommend him to continue holding at this point of time and maybe sell on rise, or would you recommend him to average a little bit as well?
So I would recommend just hold from current level perspective, because what we know about the KPIT Tech is, first of all, it is a global leader in the automotive software. So I mean, this company has got, a very niche kind of a business, because it is into the it is a engineering software company exclusively in the automobile space. And now they have got a very, very strong clientele, because they are working with some of the world's leading automotive components or automobile OEMs. So that is one of the very strong point for the company. And I think going ahead also, yes, the way we are seeing, there is an increasing demand for the software content, and the transition to the electric mobility is the most important part for these companies. Definitely, this company is going to benefit from this. So yes, one should remain invested in this counter. However, I'm not recommending averaging out at the current level, because I just want to investor to hold this counter. Let's wait for some more time rather than averaging out. Maybe some dips can be awaited for averaging out, but right now just hold is a strategy for this counter.
Right, got that view, Astha. But the next one coming in on Reflex Industries, our viewer is holding these shares at almost 400 odd rupees per share, and this is Sankar Narayanan, who's a regular viewer of the show, wants to know if he should still continue to hold. What would you recommend, Kunal?
I think I continue to hold the stock. There has been some smart recovery from the lower levels. Even on the weekly charts, the stock has been able to sustain above the 20 and the 40. That becomes now the new support, which is around 301 on the downside. So till the time 300 is not breached on the downside, the view remains positive. I'm expecting the stock again to go towards the mark of 360, 380 on the upside.
360 to 380. Got that view, Kunal. But let's now start the rapid fire round in this edition of the show. So we were speaking to Avnish, of course. We're taking a 4-minute rapid fire round now. Kunal, as well as Astha, you know the drill. The first question on delivery. Our viewer is holding shares at 523. He's holding 2,000 shares, Astha. Would you recommend him to continue holding, average down as well?
No, I would recommend continue holding this counter. Don't go for averaging at this point of the time. And price target which can be set for the delivery is around 520 odd level, because we all know that it is one of the leader in the India's logistics space, that is integrated logistic market.
The next one's on Raymond. Our viewer is holding shares at 750. Wants to know if he can continue holding and what's a short to medium term target here. Kunal, so currently sitting on a loss. What would you recommend?
I think utilize bounces to exit the stock.
Next one's on Sagility. Recently came out with earnings as well. Ray, who's from Bengaluru, holding shares at 42. Astha, what's your view now on the stock post earnings?
Our view is just hold this counter, because we may see further upside from here, maybe sometime later on. So 40.
Astha, what's your view now on the stock post earnings?
Our view is just hold this counter, because we may see further upside from here, maybe some 6 and 48 can be set as a target for this count.
Got it. Next one's coming from Shivakumar, and we've been getting a lot of queries on the SBI funds IPO as well. Astha, I think we spoke about it during the issue on the listing as well. You recommended, your recommendation of, I think, buy at that time, and correct me if I'm wrong. Now, Shivakumar has actually got it and wants to know if he can invest more for the next 1 to 2 years.
So for SBI Funds Management, for the IPO, our view was subscribe, and in fact it has given some small listing gains also. The problem is that the size was very big. So definitely with such big sizes, high premium cannot be sustained. So right now, my idea here is remain invested in this counter, and adding of more is recommended, but at the lower level, not at the current level, maybe at a level of 550 also, for the ultimate price target of 650, 660.
Got it. Well, so quarterly updates continue to be very important for SBI funds as well. The next one's on Deepak Nitrate. Our viewers were holding shares at 1690, and this is Raj, wants to know any kind of tailwinds visible on the charts. Kunal, can you recommend him this stock?
See, I think it is consolidating at the levels. I think 1600 is what you should keep a stop loss on the downside. On the higher end, the immediate hurdle is at 1700. So this is a 100-point range in which the stock is stuck. Above 1700, you will see the momentum coming back.
Next one that's coming through is on Kalyan Jewellers. It's been definitely a counter has seen a very strong up move. But Krishnamurthy has been holding this stock at 597. He's holding a very decent quantity of 1000 shares. Astha, would you recommend him to continue holding, and how should he look at the current position? Should he average down?
We have seen strong up move on the back of a strong, Q1 FY27 update. So my idea here is just stay invested in this counter, and the price target can be set somewhere at around 650 to 660 odd levels.
Next one that's coming through is on Power Grid. Our viewers holding shares at 261, asking that it's been consolidating and if it's a good time to add more. Kunal, your view?
See, I think definitely. I think Power Grid is one of the stocks which continues to remain as a buy and dip stock.
And if it's a good time to add more. Kunal, your view?
See, I think definitely. I think Power Grid is one of the stocks which continues to remain as a buy and dip stock. Overall, the momentum will start about 290, 300 on the upside, but utilize this dip as a buying opportunity.
Astha, how did you view the counter? I think it's because the guidance is 12.5, and I think this quarter has been slightly more slower. Our viewers holding shares at 395. What's your view?
So view is like what we believe that results were okay. They were average results which the company has posted, and on the back of that, this stock can be a slew mover. So just hold this counter with a price target of 410.
Got it. Well, that was the last question of the rapid fire as well as this edition of the show. Thanks so much, Astha as well as Kunal, for helping us solve all those queries. But viewers, out of time on this edition of Ask Profit. Thanks so much for staying in. Hopefully that view on FMCG at the start of the show helped you. And let us know if you want to know a little bit more deeper in terms of the sectors. 2 p.m. is the time to write in to us for your stock related queries as well. But do stay tuned. India Market Close comes up next.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस तेल में।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
Conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real.
Hello and welcome to India Market Close on NDTV Profit from the NDTV Profit Suzlon studio with myself, Hiral Datia, and Puneet Javeri as well. Interesting day of trade. It is expiry, and that's the reason why you're seeing this kind of volatility as well. Look at where Nifty 50 is absolutely flat right now, Puneet. If you talk about the range as well, 24,041 to 23,961. Not even a 100-point range on an expiry day. So the range is absolutely narrow. And you're seeing resistance which is coming in at levels of 24,000 very precisely.
Well, most certainly, and that continues to be the flavor, right? Because there are two separate segments. One's IT that continues to do well on the back of Coforge, and then there's FMC, just taking the sheen out of what we've seen today for the market. So when you look at the heat map too, you'll see at one cohort on the top of the left of the screen that continues to do well, and that's largely led by Coforge. So you're seeing TCS, Tech Mahindra, as well as Infosys doing well. HCL Tech also up 2% odd. While you've seen some follow-on buying come through on Nestle today, so that has been the interesting factor. Weak results by HUL, which is at the bottom of the screen, and hence probably that's lead to some follow-on buying on Nestle at this point of time, up 3.8%.
But you know what, with Nestle as well, the uptick has continued in terms of since earnings. Likewise, if you have to look at an Eternal as well, last 2 to 3 trading sessions, that uptick with regards to Eternal and Swiggy has continued. Though you saw some bit of profit booking that came in terms of Swiggy on the back of the Instamart CEO who's gone ahead and resigned, and that has been taken over by Nandita Das. So that stock is in focus as well. But BEL, again, reacting to numbers. Coal India, there is a bull versus bear case scenario because it's a very mixed view coming in from brokerages. However, the stock is reacting negatively there. Apart from that, if you look at healthcare, Dr. Reddy's, Max Healthcare, two names that I can see which are on the downward momentum. However, Eicher Motors, 1.5% up move. The company will be reporting numbers tomorrow. So that's going to be an interesting one to watch out for. The cement pack, you have Ultratech, which is up 0.7%. You have Ambuja as well, which has reported numbers some time ago. So it's a pretty interesting mix. Let's just look at the contributors first, and then we look at the other aspects as well. If you see in terms of contributors, Puneet, it is TCS, Infosys, two from the consumption names, Eternal and Titan, which are kind of trying to support. But ICICI Bank, a downer. RIL, that's another heavyweight which is actually trying to put pressure. And you have HUL and BEL, both of them are event-based downticks that you're seeing on the back of earnings. So it's pretty much even Stevens, and that's the reason why you're seeing this kind of a move.
Well, most certainly. Let's look at the sectoral heat map as well, because that is the other factor.
HUL and BEL, both of them are event-based downticks that you're seeing on the back of earnings. So it's pretty much even Stevens, and that's the reason why you're seeing this kind of...
Also, durable index up 0.8%. But if you can look at the Nifty FMCG, also look at the constituents as well, because you're seeing, of course, selective moves come through on this one too. And hence, while Nestle, of course, is almost up 3.8% now, Marico has a good quarterly update. We'll wait for some more clarification to come through in terms of the results, but those continue to be important. So is Britannia up 1.8%, and there you go. Warren Beverages, the other casualty of the day. 2:30 onwards, the conference call will start, so we'll get you more perspective and cut into what the management has to say as well. Let's just look at the Nestle and the intraday moves that we've seen on Nestle, the daily chart, because that is very important too, because you've seen follow-on buying through, as I mentioned, and then throughout the day that late spurt coming in just in the last half an hour, and that continues to be for the bigger names.
Yeah, let's look at the broader markets as well. Let's pull up the mid-cap and the small-cap index, and then we look at the advanced decline ratio. I mean, again, very volatile. You have the mid-cap 150 nearly at the day's lowest levels, your small-cap 250 as well at the day's lowest levels, with cuts of nearly 0.6% coming in there. So that's where the pressure is building up as well in terms of expiry session. Look at the mouth, it's clearly widening. Your declines are way outpacing your advances as well, nearly more than double. You're almost at a 1800 decline versus a 800 advance number. So it is telling you what's happening to the market breadth as well, and it's the broader markets which are taking a beating to some extent right now, because your benchmarks are absolutely flat. Bank Nifty also at the day's lowest levels or near the day's lowest levels. If you look at the intraday chart of Bank Nifty as well, there you go. So the financials are also down and about in trade, underperforming the benchmark indices as we speak. So that's the market setup. But Puneet, let's quickly take the viewers through the factors that we should be watching out for as we speak. Let's look at the levels. In terms of the factors, Nifty is flat. Bank Nifty down nearly 260 points, and this is on expiry day. That's exactly what we're talking about. Your IT is holding ground, as Puneet was mentioning, while the banks have slipped in trade. And if you have to look at the consumption side of the story, the biggest pain point in trade today, DMart, that stock is under pressure. HUL, that's another one. So all of these are contributing. Now your rollover data as well, Puneet, if you want to add color to this one, at 64%, and your Bank Nifty rollovers at 71%. What is that indicating?
Well, that just shows clearly that, you know, we've seen a whole month where the bearish momentum just continued for foreign investors along the others. So you've seen, of course, most positions being rolled over, but for the Nifty, that continues to be the indication that it's not as strong as something like Bank Nifty right now in terms of comparison, but also in terms of its own average of close to 68 to 70% lower at this time. So we'll see more color on this tomorrow, where we have today's data point
coming in as well.
But that's the picture where there's some strength for the Bank Nifty, but for the Nifty 50, that's clearly not visible right now.
Absolutely. Let's look at the stocks with the highest rollovers as well. Nippon India AMC, TVS Motors, Bajaj Holdings. On the other side, if you have to look at the other names in terms of levels, resistance at 24,010, that's the first point, and that's from where you're seeing the rebound on the downward side. Support is coming in at 23,920, so that is also a pretty narrow range in terms of where the resistance and the first level of support come in for Nifty 50. On Bank Nifty, you're seeing resistance on the upside at 57,050, and you have support coming in at 56,800, and you are at the day's lowest levels as well. So it's going to be interesting to see if any of these support levels are breached in terms of Bank Nifty and what happens from here on. But let's get in our guest. We have Sunny Agarwal joining in as we speak. Sunny, welcome to the show. Always a pleasure to speak to you. My question coming to you is, an absolute range bound kind of a trade is what you're seeing, no major moves. What is the sense that you're picking up right now? Because your crude is somewhere in support of the Indian markets. Your rupee is in support of the Indian markets as well right now. Your war situation is kind of under control on the back of the truce. Do you think this is the time to start accumulating, or do you think there is still a wait and watch mode from here on?
Yeah, good afternoon, Hiral, and thanks for having me on the show. I think definitely time to accumulate stock as the macro economic concern, as you rightly pointed out, especially crude oil prices, USD, INR, both are in favor of Indian equity market. And just to add on, I mean, this earnings season has been playing out very well, especially on a mid and small cap pack. we will see many companies are reporting very good set of numbers. So I think any volatility or any sideways consolidation is a good opportunity to accumulate quality names where we are seeing a very robust growth outlook. A case in point, companies like Eternal doing well even in a weaker markets like today. TVS Motor, Bajaj, both has given a very strong set of guidance. So TVS, I think Bajaj has already seen a good up move. TVS seems that there is likely to be a catch-up rally going forward. So again, a stock-specific market, but definitely buy on dips is a strategy which investors should adopt.
Got it. Well, Sunny, good afternoon. Welcome to the show as well. We'll, of course, get into more context of, the individual spaces we talked about, but just a broader, larger cap view on IT right now. We'll, of course, get into Coforge as well, but how are you looking at the large cap IT peers now, given that there's some impetus coming in from Coforge earnings? How do you look at that cohort?
Again, large cap IT pack, we all know that FY27 is likely to be a muted year in terms of growth. So maybe closer to 2 to 5% kind of growth, which most of an IT companies have alluded to. So I think the predominantly the growth is relatively better on a mid cap pack, and that is the reason we are seeing a thumbs up from the market as far as mid caps are concerned. Within large cap tier 1 IT pack, I think if somebody want to accumulate and with a view that FY28 and FY29 is likely to be relatively better in terms of earning growth. So I think Tech Mahindra is the one stock which we feel after delivering consistent margin improvement over the period of last 8 to 10 quarter can do well going forward. Still Tech again can be a slightly outperformer as far as the tier 1 IT companies are concerned. Mid cap, I think no doubt, I think Coforge has given a very robust guidance today. So FY27 is likely to be very strong for robust for Coforge, backed by organic growth, and as well as with the recent acquisition, even that will contribute to a full year healthy growth for FY27.
Okay, so that's with regard to Coforge. In fact, that stock is at the day's highest levels, 10% up move coming in there, and that should be the stock of the day. But clearly, there is a global AI trade reversal that has happened as well. Nvidia, AMD, Micron, all of them has actually fallen sharply, while your IT ADRs actually gained in trade. So that is one of the key points that we're tracking in terms of IT. Secondly, yesterday you had a Jefferies which went ahead and upgraded IT to a neutral, and they added Infosys to their model portfolio. So that was a second big trigger that we were watching out for. Thirdly, if you have to look at the Q1 earnings as well, they have largely been in line and strong. Q2 is what is on the cards. But before we head across to my colleague, let's quickly listen into what the management of Varun Beverages has to say at the conference call on the back of the Q2 numbers.
We are all well positioned to deliver sustained and profitable growth and creating long-term value for all our stakeholders. I would now like to invite Mr. Gandhi to share the key highlights of our operational and financial performance. Thank you.
Thank you, Mr. Chairman. Good afternoon and a warm welcome to everyone joining us today. Let me provide an overview of the financial performance for the second quarter and half year ended 30th June 2026. Revenue from operations net of excise and GST stood at rupees 84,512 million in Q2 of 2026, up 20.4% year-on-year. For H1 2026, revenue increased by 19.4% to 150,254 million. Growth during the quarter was primarily supported by a 19.8% increase in consolidated sales volume to the level of 466.7 million cases. As mentioned by Chairman, in India we saw healthy volume growth in 20s since the onset of the season, with the exception of course of April. International markets also delivered a healthy growth with volumes increasing by 38.4%, including the contribution of 11.8 million cases from Twiza in South Africa. Net realization per case, beverages at the consolidated level improved by 1.2%, supported by better realizations in international territories. Gross margin improved by 44 basis points year-on-year to 50%, supported by a higher mix of international business. In India, early stocking of key raw materials and savings in sugar consumption driven by a higher mix of low sugar, no sugar products helped maintain gross margins despite the inflationary raw material environment affected by West Asian crisis. EBITDA stood at rupees 23,430 million, registering growth of 17.2% year-on-year, with the EBITDA margin at 27.7% in Q2 of 2026. EBITDA margin declined by 76 basis points year-on-year, primarily due to consolidation of Twiza business, which currently operates at lower margins. In India, the EBITDA margins improved by 38 basis points, driven by operational efficiencies arising from healthy volume growth, partially offset by higher other expenses, primarily transportation and distribution costs. PAT grew by 15.1% to the level of 15,253 million, supported by strong volume growth across India and international territories. Depreciation increased by 33.6% due to the commissioning of new plants in India last year.
Well, that was the management of Varun Beverages. We'll of course keep getting you more updates because we need that management key takeaway on the domestic volume growth part. But when that comes through, we'll get you more updates. But let's go across to our stock of the day now. Coforge continues to be one and out because that has led to a strong gains in the IT pack. Jasmeet now joining in to give us more perspective of what worked for the company.
Well, thank you for that. Now, if you look at this particular counter, quite interesting setup for the Coforge altogether, and stock is up nearly 10% after the continued downfall that we have seen in the overall IT pack. Let's quickly understand the top 5 key reasons, what buzzing and what's leading to the overall rally in the stock. While the first one is the CC growth. CC growth for this particular quarter has come in at 22.3%. When you look at QOQ basis, given the company had acquired Encora and that addition also added up to the overall CC growth is at roughly 22%. In terms of like-for-like, the CC growth in this particular quarter is 5.5%, still higher compared to the other IT folks out there, which are delivering 1 to 2% of growth. In terms of the overall CC, in terms of the organic space, it's nearly at 1.1% ahead of what we were expecting. Now, in terms of the EBIT margin, the overall EBIT for this counter has come in at 16%, higher than what was guided by the company. And the company states whatever they were guiding for the entire year is already achieved in the Q1. And that's the second key reason where the stock is rallying and buzzing into today's trade. Now, in terms of the third aspect, the overall deal wins. We do know that the company has roughly signed $691 million of deals in this particular quarter. That's roughly 25% of the overall order book. In terms of last 12 years, the deal win stands at $2.2 billion, showing a good visibility going ahead. The third aspect is the overall segmental revenue. We do know that the company has reported broad-based growth, while the healthcare and high-tech vertical buzzing and gained about 11%. In terms of geographies, we are also noting that the geographies have delivered the similar broad-based growth, while the overall EMEA space for the company is delivering good growth up about 8%. Now, let's quickly understand what's the way ahead and what management is guiding going ahead. Firstly, they have maintained the FY27 guidance, and they also state that they want to be the highest margin IT company among the mid-cap space. That's a big step that the company has made. Now, second aspect is the company states the Q2 deal momentum is seeing a positive up move, and they expect the deal wins in Q2 to be equivalent to what they had won in FY20 space. That's a big step that the company has made. Now, second aspect is the company states the Q2 deal momentum is seeing a positive up move, and they expect the deal wins in Q2 to be equivalent to what they had won in FY27. Guidance is already achieved in advance. Could see a healthy uptick going ahead in the entire FY27 year. And lastly, let's quickly understand the valuation aspect of the company. Now, when you compare Coforge with Persistent, giving the similar range of the industry, we do know that the overall current P for Coforge is 32x compared to large cap IT between 13 to 14x. In terms of Persistent, slightly expensive compared to Coforge at 44 odd times. Now, in terms of 5-year comparison, we do note that Coforge still trades below its 5-year average, so as Persistent. Now, lastly, in terms of the overall return potential, for this particular counter, the current analyst ratings are roughly 40, out of which 34 have buy call in this particular counter, and the up move return potential expected 2%. So this brings to the last question. Can from here, can we expect a further uptick in terms of the overall up move of the stocks, and can there be a re-rating?
Can there be a re-rating or not is the question. Thank you for that, Jasmeet. In fact, Akshay Bhagwat also quickly joins in. Akshay, welcome to the show. Your view when it comes to a Coforge on the charts, already up 10%, or anything else that you like from the IT pack, because there is good momentum built up over the last couple of days.
Good afternoon to all. Yes, Coforge definitely is the momentum counter backed by positive news and results. So I believe from a BTST perspective or even from the momentum perspective, the targets of 1750 look achievable in the very short term. And today's development on the technical front opens the doors for upside still 1950 on the positional front. So yes, buy or hold is the view on Coforge.
Okay, so that's with regards to where Coforge goes. But moving on, Aeroflex, let's pull up that one on the screens because the revenues have seen a good uptick. Margins have expanded as well. That stock is up nearly 5.5%. Asad Daud, Managing Director at Aeroflex Industries, joins in to talk to us about the quarter gone by and the outlook in terms of FY27 as a whole. Asad, welcome to the show and always a pleasure to speak to you. The kind of revenue growth that you've seen in the first quarter seems to be exceptional. Now, what has led to this growth? And going ahead, do you think it'll be realistic to expect a similar kind of trajectory in FY27? And if not, where do you see it normalizing?
So thank you so much for having me here. So first of all, the growth in Q1 has been because of the increase in business coming in both from the core business of flexible hoses and flexible hose assemblies, and also the new business of the data center skid assemblies. Both have contributed to this significant growth in, especially in Q1. On an overall year, if I annualize that, we are looking at an overall growth or targeting an overall growth of between 30 to 35% in FY27 as compared to FY26.
Got it. Asad, thanks so much for joining in. It's Puneet this side. So, we've got that number out as you mentioned. Just give us some perspective of how this will help in terms of margins too, because you've seen a very big increase in your domestic share of business. I think it's increased to 42% this quarter versus 28% on the same time last year. So when you mention, is this largely the domestic data center business that's reflected in the numbers now? And how will that look at margins? Because you're generally very export heavy. The margins were good there. Will it be maintained at this 22 to 24% range?
So yes, the data center business domestically has been a significant contributor for the increase in the share of the domestic as compared to the export. However, export itself has grown by almost 40% in this quarter as compared to the same quarter last year. In terms of the margins, so definitely exports overall has a better margin as compared to the domestic. But specifically, if I talk about the liquid cooling skid assemblies, I think the margins in that product is on a blended level at the same level as compared to our overall company margins. So we expect that in the next few years, our target is to reach to an EBITDA margin of 25%.
Okay. The other question I have, Asad, for you is your liquid cooling solutions for AI data centers. What share of your revenues in terms of FY27 will come in from this business compared with your traditional flexible hoses business?
So for this financial year, we expect the data center skid assemblies business to contribute about 25% of the overall business. And going forward over the next few years, we expect the contribution from this business to reach up to 30%.
So when you're talking about the contribution that is coming in, there is a lot of competition in this space that comes in from international markets as well. So if you have to look at global and domestic competition, what differentiates Aeroflex in this category? Because the AI workflow itself is increasing.
So yes, if we talk about the India market, I think we have the advantage being the first mover in this space, and I think we have shown that in terms of the competition is that the ability to deliver and to deliver at scale. And over the past few quarters, we have already shown that we have the capabilities to deliver at scale, which the new players who are coming in India market have not yet delivered. Now, when we talk about the international competition, so most of these international companies or our competitors, they work in their own markets. Right now, they're not present in India. And our focus would be that once we have the base as the India market, then we will also start to export our skid assemblies in the international market as well.
Also, Asad, sorry, you mentioned that your current data center business, what is it expected to go through? You gave a number. What was the number?
So this year we expect it to contribute to 25% of the overall business. And then over the period of the next few years, this business should contribute, anywhere upwards of 30% of the overall business.
And just one, if you can give us some perspective, because even in your presentation, you mentioned the value coming in, I think, close to 32 odd crores in this quarter for the liquid cooling skid business. You also mentioned the average price per skid has actually come down materially compared to last year. So it's, I think, about 3.1 lakh rupees versus 4 lakh 98 last year. How should we look at the price per unit basically? Because as you go through, you will increase, of course, your utilization. Now you've given a range as well between 1 lakh 10 to 5 lakh 50. Right now you're bang in the middle of that. But where can we expect this, and how is the price determined? Is it based on competition, or which factors do you look at?
So to talk about this, every data center, the design of the skid assemblies is different. Even in case of even on a specific floor of a data center, the design of the skid assemblies would be different. And depending on the design of the skid assemblies, the price is determined. So every skid will have a different price. And if you see our average price ranges at approximately between 3 to 3.1 lakh rupees per skid, and that is the range that we have right now. But this the price of the skid is not the right parameter, because it can change dramatically. Like we mentioned, it can go to as low as 1 lakh or it can go to as high as 5 lakhs. So the idea is that you should look at the overall revenue that the skid business is contributing.
Interesting. So it's this entire play itself is what the street is eyeing as well. But thank you, Asad, so much for joining in. Always a pleasure to speak to you. In fact, we'll be happy to do a detailed discussion as well in terms of the newer businesses that are getting built as we speak. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
Welcome back. You're watching India Market Close right here on NDTV Profit. But let's now go across to my colleague Somit Sarkar, joining in with all the chatter from the dealing room. Somit, what are you picking up?
Well, firstly, it's Adani Energy Solutions. Now, what dealing rooms are indicating is that the QIP that opened yesterday, there is strong demand coming in for this fundraise by Adani Energy Solution, and dealing rooms are also indicating that domestic mutual funds and insurance companies were among the major buyers for this QIP that opened yesterday. A couple of other stocks, CG Power and GE Vernova. Now, there are sell flows on the large HNI and the PMS desk. Dealers indicate that the fallout in AI trade that we saw today has led to selling pressure in these counters as well, because these companies were said to be the beneficiaries of AI infra going forward. Hence, this sell-off coming in GE Vernova and CG Power in trade. For Paytm, that stock has been gaining. There are buy flows on the PMS desk. Dealers are indicating that the expected block deal by CEF Partners has been called off momentarily, and hence this buy flows coming in for Paytm. When it comes to RBL Bank, buy flows on institutional desk is what dealing rooms have indicated. Both foreign and domestic institutions have been accumulating this counter in trade, and delivery volumes are expected to be on the higher side. And lastly, given the fact that it's earnings season, GAIL is one counter that dealing rooms are focused. They are saying that there are buy flows on the large HNI and PMS desk. Dealers are indicating that the Q1 numbers are expected to be quite strong, and it could be a beat across all segments is what dealing rooms have indicated for GAIL.
Okay, so that's with regards to a couple of stocks which are buzzing in trade right now as well. And in fact, what I can pick up over there is CG Power, GE Vernova. There are sell flows, and that has been a space where we've seen good amount of accumulation as well that has happened. In fact, let me head across to Akshay Bhagwat to take his views. Akshay, from all the names that Somat actually mentioned, anything that you like that could be on investors' radar?
You can look at GE Vernova because the stock has corrected pretty significantly since last month, and it's nearing an important 200-day moving average support, which is known to see a pullback once it nears or tests the support zone. So the level roughly is around 4,000 to 3,950, and I believe there has been some recovery in intraday trades, and the chances of a relief rally pullback from the current zones are high. And if it follows on the expected lines, you can look forward for potential recovery bounce till 4,500.
Alright, but Sunny, also just a quick question. Actually, we spoke to you on the larger cap IT players on Coforge as well. Is because we've already seen a 10% up move. I think that bulk of that demand or that pressure on the stock now seems to be relieved. So, is there still a lot more room to go? Would you recommend getting into the stock now? And if not, what else do you like in the IT pack in the mid and the small cap space?
Coforge, definitely, as you rightly pointed out, post today's con call, that was a pre-market opening. We have seen a very sharp up move. So maybe a buy on deep is the right strategy when it comes to Coforge. Definitely, valuations are slightly below the 5-year average. So there is a probability of catch up as the uncertainty regarding the earning growth get over going forward, especially because of this Encora acquisition, which is likely to drive the profit growth ahead, and all the merger related expenses are likely to get over by second quarter of FY27, and third quarter should be a kind of a very robust quarter in terms of earning growth. So Coforge definitely buy on deep is a strategy. Another stock which we like from an IT pack is Oracle Financial Services. Again, that company has delivered a very fantastic set of numbers, but again, there also we have seen a very sharp up move post results. So maybe buy on deep strategy again on Oracle Financial Services. And one company which can be on radar is the First Source Limited, which has been consistently delivering a healthy set of numbers. So maybe that company can also be on radar among the mid-size IT packs.
Okay, so that's with regards to a couple of names that are coming in as well. But thank you, Sunny. Thank you, Akshay, so much for joining in. Always a pleasure to speak to both of you as well. But moving on, Gallant Ispat. Let's pull up that one on the screens because weak steel prices and pellet plant maintenance has weighed on the performance, though the stock is locked in upper circuit because margins have remained absolutely resilient. Now, with the maintenance complete, your utilization is set to normalize, whilst the expansion and captive mine plans remain on track to support your future growth and profitability as well. We have CEO Mayank Agarwal who's joining in to discuss more on this. Mayank, welcome to the show, and always a pleasure to speak to you as well. You know, I mean, we've spoken about stable revenues. There is sharp margin and profit compression as well, and this is on the back of higher raw material costs because of the pellet plant shutdown. If you have to look at the remainder of the year and compare it to the first quarter of FY27, how different is that going to look like?
A very good afternoon to you as well, ma'am. Lovely and pleasure always talking to you as well. Well, yes, as you rightly mentioned, the share market has shown us a lot of confidence on that. Coming back to your question, looking at the quarter one performance, it is in line with our business plan, what we have crafted for the year. And while being into construction steel industry, usually the first two quarters are broadly muted with regard to the demand due to the monsoon season. So with the current projections laid out by the government, where the steel construction activities remain to be growing in the range of 8 to 9% for the current year, we are very optimistic that in the quarter 3 and 4, which is the prime quarters for us, we'll be able to do exceptionally well and as per the business plan we have laid out for the year.
Mayank, very good afternoon. Thanks so much for joining in. It's Puneet this side. If you can give us some perspective of what is your, what has been the, in this quarter, largely the cost side, because your EBITDA per ton has largely been not too affected, right? Just a 1% downtick on a quarter-on-quarter basis. Could you give us some perspective of how realizations have shaped up in this quarter? Have they largely remained soft, as you mentioned, since quarter one, quarter two is it's a little softer for the industry as a whole? So is cost management something that you focused on this quarter, and hence the number that you're showing?
Yes, definitely. We have focused on the cost management, and we have changed our strategies in terms of procurement processes, etc., which has resulted into the the margins keeping intact if we compare it on quarter 4 to quarter 1, where the per ton EBITDA is almost the same. And with the part of the ongoing 3,000 crore capex which we are doing from internal accruals, there are three buckets to it. The first bucket is the capacity addition, where we are going from 1 million to 1.23 million, and that capacity will kick in the second half of the current year, which will further enhance the revenue and the profitability EBITDA substantially in the H2. So that will be actually driving the growth in the current financial year. Whereas if we talk about the costing side, the raw material prices have a little bit gone up because of the geopolitical situations. But with the strategical approach in terms of sourcing, we have somewhat been able to curtail it. While on the realization side, we saw a very nice uptick in the first half of the Q1, but slowly and gradually as the monsoon set in, we saw the realization diminishing. So quarter 2 will see the muted demand as is expected every year. But with the capacity addition kicking in the H2, along with the improvement which is expected and is generally what we have seen every year, we are very optimistic about the entire year performance compared to the last year.
So are you saying, in terms of FY27, if you have to look at the levers that will drive growth, is it going to be higher volumes? Is it going to be better realizations, costs, or increased value-added products? Where should someone look at?
So ideally, the cost, the realization is somewhat governed in steel sector, as we all know, by the demand and supply dynamics. The capacity addition, the cost reduction, and the kicking in of 85 megawatts solar also, which is planned in Q2 and Q4 to be commissioned. So the cost lever would definitely somewhere where the cost has to be going down. It is expected to go down in the current year, backed by additional capacities which are coming in. And in addition to both these things, we are also targeting to achieve a better capacity utilization as a whole. So while at one end, 25% approximately capacity addition would be seen in half of the year, backed by these cost levers of solar and other raw material sourcing, we are very positive and optimistic with regard to the FY26. We are very optimistic for FY27.
But Mayank, just one question. As you mentioned that, in the second half, you will have some of those capacity come through. The last 3 years, we've largely seen revenue being stagnant at that 4,200 to 4,400 crore mark. Will it be safe to say that this year we could cross that 5,000, 5,200 crores since you only have half a year of capacity expansion, and next year is when you could target that 5,500, 6,000 crores in terms of revenue? Would that be a fair assessment?
Definitely, it would be a very fair situation. And in the last 3-4 years, the revenues has been muted, but if we see the profitability, it has gone up to double. So even currently, we are operating at about 18% EBITDA, despite all the geopolitical scenarios in the last quarter. So while we have made ourselves fit from the point of view of integration and operational efficiency, of course, there is room to improve further. We are all set to add this 25% of the capacity, which would definitely drive the revenue broadly to the extent what you have mentioned. And for FY28, we even have the captive mines kicking in for iron ore, which will further insulate us from these geopolitical scenarios while adding substantially to the profitability by more than 2,000 rupees on per ton of steel making.
So interesting there, Mayank, investors will all accept a weak quarter, but I think the question is going to be whether the first quarter of FY27 was actually a trough when you talk about where margins are concerned, and whether the steel sector is seeing that growth emerge, or is it going to be a longer period of earnings pressure? That's what the companies will have to actually respond to as well in the coming quarters. But it's going to be interesting to watch out for FY27. Thank you so much for joining in. Always a pleasure to speak to you. We'll quickly slip onto a short break. On the other side, we'll get you the top buy today and sell tomorrow picks as well. Please stay tuned to NDTV Profit.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
पी मार्क द मस्टर्ड स्पेशलिस्ट सिंस 1933। बरसों से सरसों।
कुछ तो बात है इस दिल में।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर
Welcome back to India Market Close on NDTV Profit from the NDTV Profit Suzlon studio. Now, Rajesh Bhosle from My Advisor Alpha and Nishal Maheshwari joining in to India Market Close on NDTV Profit from the NDTV Profit Suzlon studio. Now, Rajesh Bhosle from My Advisor Alpha and Nishal Maheshwari joining in as well. Welcome to the show, gentlemen. Rajesh, we are below that 24,000 mark, already. There is good amount of stiff resistance coming in at those levels and being expiry. How are you looking at the start tomorrow?
Yeah, afternoon, and thank you for having me on your show. So first of all, it's been a very range-bound expiry, and if we see the entire July series itself has been very range-bound. Nifty has been facing resistance somewhere around 24,250, 24,300, and on the downside 23,600, 23,800 has been acting as a support. So overall, if you see the chart structure, Nifty is moving in a ascending triangle formation, and as long 23,600 holds, bias is positive. But as you highlighted, the momentum is missing. On the higher side, if we see 24,050 to 24,100 is the resistance. Once that is broken, we can expect momentum back towards 24,400 to 24,500. So buy on dip would be suggested, as we see 23,800 to 23,600 as a very strong support.
Got that view, Rajesh. But let me also welcome Nishal Maheshwari, market expert, now joining as well. Nishal, thanks so much for joining in. Very good afternoon to you. We actually discussed about IT in the first half of the show. Are you also looking at more favorably in terms of the mid-cap space, or do you prefer the large caps given the valuation comfort? What bucket do you live in?
I think largest mid-caps is the bucket basically which I favor. I think one of the stocks today basically has come out with very, very strong numbers. And my logic remains to be that if you are too small, basically, this is going to take a lot of investments also. So to pivot is not going to be easy. And if you are too large, basically, then again, it will take a much longer time for you to pivot. So I think largest mid caps are the place to be. They are showing outstanding numbers. And I think they are finding their business in the new era.
So that's with regards to where IT goes. Now, let's look at the consumption pack. Let's pull up the FMCG majors, HUL, DMart, Varun Beverages, and a Swiggy. There is some news or the other in all of these counters. But Mahima joins us first up to tell us what's really happened with the HUL, DMart, and Varun Beverages, two of them reacting to numbers, and DMart with regards to the new management and the analyst day that has happened. So all the stocks under pressure. Mahima, what are you picking up?
All right, so a slew of consumption names buzzing today, and not a good day for sure for all of these names because all of them have tanked. I'll start with HUL first. A couple of things that have not worked this quarter. I think volume expectation was anywhere between 6 to 8% but came in at 5%, largely impacted on account of price hikes. In terms of the revenue and PAT, that was a miss as compared to the estimates. 200 odd crore miss versus the estimates, and the entire 200 crore missed in the top line was translated to the bottom line as well. Personal care volume growth came in at 3%, which was much lower as compared to what it's done in the last quarters. When we spoke to the management, Priya Nair did say that overall in the personal care space, the premiumization is taking over. Premiumization is where the volume growth is coming, but the mass segment structurally is seeing a downtick in terms of volumes, and plus price hikes have also impacted the volumes. PAT was of course down on the back of one-off tax credit. Now, in terms of key takeaways from the management commentary, I think calibrated price hikes will continue going forward. Next quarter, sequentially a 2 to 5% inflation is what the management is expecting, and on the back of that, they will be taking calibrated price hikes. Personal care, like I said, is seeing a structural change within the mass category. They've reiterated their volume growth strategy from here on, and overall no change has been made in the margin guidance of 22.5 to 23.5%, and demand will stay steady is what they're saying. The next one is Varun Beverages. I think a couple of things that have not worked for Varun Beverages this quarter. The first one is I think the top line growth, which came in at 13% for the India business versus that of an expectation of anywhere between 18 to 20%. So that's one that the street is not like. The second one is weak volumes in India business have impacted the overall top line growth. Plus the consolidated EBITDA margin was down around 80 basis points. The EBITDA margins was largely impacted by the international business margin, which was down almost 100 basis points, and India business margin was however up by about 40 basis points. The con call of course is at 2:30 p.m. and that's when we'll try to understand as to what the management commentary is going to guide us towards for the entire calendar year going forward. For DMart, I think what sources are telling us and what the key commentary is coming in from their analyst meet day, I think weak store guidance. What they've said is that the management has said that store guidance growth in terms of FY27 is going to be around 15% and this implies a 75 store addition versus that of 85 store additions that they've done last quarter versus the expectation of 100 store additions in FY27. Competition, they've said is kind of intensifying, but overall on quick commerce they've not made any particular commentary. Weak same store sales growth in metro stores is offset by decent same store sales growth in lower tier towns is what the management has also kind of suggested in the commentary. But of course the key commentary will be coming in once we have the brokerage notes coming in. So that's the whole and soul of what's not worked for DMart or what's spooking the street for DMart specifically.
Well, thanks so much for that, Mahima. But Nisha, let me come back to you because, you know, HUL definitely came out with earnings this morning. You've seen pressure on the stock as well. And on the opposite side, you've seen follow-on buying come through on Nestle. So do you feel post the results that have come through, there's a clear signage of preferring the plays where you have earnings certainty at this point of time? And what do you like in that larger cap FMCG bucket at this point of time?
So I think the issue is about growth. I think whether it is DMart, whether it is HUL, I think market is looking for growth, and I think these companies. I'm not saying they are not growing. The only issue remains to be the growth versus the valuation. I think that is a challenge for all of them basically, because if I remember it, DMart used to be doing a 25%. Now it is doing around 15% kind of growth. So I think it has to recalibrate as far as the valuations are concerned. Similarly, I think in case of Lever, 8-10% kind of a growth with 50 times of valuation, basically, I think it's difficult to make money in these kind of stocks. There is a premiumization which is happening. And you should look for stories basically where there is a clear and a very, very focused premiumization story is growing. I think that's where I think the focus should be as far as FMCG is concerned.
Premiumization is the story that you're watching out for. Stay with us. We'll quickly slip into a short break. Lots more lined up on the other side. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट
Welcome back to India Market Close on NDTV Profit from the NDTV Profit Suzlon studio. Now, we have been talking about the consumption pack, and you have Swiggy also, which is in focus because their quick commerce platform, which is Instamart, the CEO over there has resigned. That's Amitesh Jha, who has resigned, and you have Nandita Sinha, who's been appointed as Instamart CEO as well. Now, she will be becoming the new CEO from the 3rd of August, and you have Nandita Sinha, who was also the former CEO of Myntra. And you know, you've seen a whole host of resignations since listing, Puneet, in terms of where Swiggy goes. Starting from February 2025, where you had M. Sridhar, the company's second compliance officer, who resigned. Then in April 2025, you had Sahil Barua, who's the independent director, who actually resigned. July 2025, Sumir Juneja and Anand Daniel resigned as nominee directors. In April 26, you had Lakshmi Nandan Reddy Obul, the co-founder and whole-time director and head of innovation, resigned. April 2026, you had Roger Clark, who resigned as the nominee director. Then in June 26, you had Instamart CEO Ankit Jain, and the CBO Hari Kumar quit. And now you have Amitesh Jha, who's gone ahead and resigned as well. So a whole host of leadership changes that we've seen since listing. Now, does this mean that this is becoming an overhang with regards to the old team, and the new team coming in is getting resolved, and now probably there will be some bit of change in strategy that will take forward?
Well, most certainly, and I think it's the underperformance that we are seeing, right? For the Instamart business, you've seen the Zepto IPO come through, and hence all of that has also had a big impact on Swiggy and its valuations. But Nishchal, let me come back to you on Swiggy very quickly, because do you feel that with a reputed name coming now to heading the Instamart business, there could be some valuation catch-up of Swiggy versus Eternal, because that gap had just widened, and then you had the Zepto IPO news come through and it had widened further. You're seeing some buying follow on today. Would you be a buyer at the current price juncture to just see that valuation differential reduce versus Eternal?
So that valuation gap has remained from the time the IPO has happened. And that valuation gap is basically, I think, is justified also, because we look at it, it is half the size of Blinkit, Instamart business. Similarly, in terms of margins, similarly in terms of the kind of losses Swiggy is not been able to still work around. So I think that's why that's why this kind of a valuation discount. If the performance improves at Swiggy, definitely I think this discount should go down. But I think there is a long way to catch up for the new team which is coming in, basically to once again see a rebound in the business.
Okay, so that's Eternal and Swiggy as well. And in fact, HUL, interesting point, the company is set to record the worst intraday loss in 6 years. That is what our team is indicating. The last time we saw a drop like this is 23rd of March 2020. And this is going to be the worst intraday loss in 6 years that HUL will actually post out in today's session. But moving on, a lot of other stocks are buzzing in trade, a lot of other stocks which are seeing an earning impact as well. Shivam joins us with the entire list. Shivam, good afternoon. What do you have for us?
Yeah, starting with the first one, which is Kalyan Jewellers. The stock has seen a strong uptick of over 6% in today's session. Also, this stock has snapped around 3-session losing streak and hit 11-month high in intraday trade. Next stock is TCS, which has seen a gains of around 4.5%, and the stock has been trading for higher for the 4th consecutive session. Also, if we compare it on the recent swing low basis, it has been up around 22% and trading near previous month high. In terms of earnings, we have Suzlon Energy, in which the PAT has gone down by around 7.8% to stand at 305 crores. Also, the EBITDA has seen a decline of around 300 basis points to stand at 15.6 crore, and that's why we are seeing a decline of around 6%, and the stock is also trading at lowest levels since April 2026. Lastly, it is TTK Prestige, which has seen the PAT increasing by twice to 59 crores. In terms of EBITDA too, it has doubled to around 81.7 crores, and this is due to a strong demand in the domestic industry. Also, the stock has gained around 11% and is trading at highest levels since October 2025.
Okay, so interesting names there. Thank you so much for that. In fact, on the charts, the question is, are you seeing any, momentum picks over here? Rajesh, over to you on these names.
So definitely, TTK Prestige looks good. It's continuously moving in a higher top, higher bottom structure, where every dip towards 20 EMA is getting bought into. Today as well, there is a flag formation. So if we keep a view of around 3 to 5 months, possibly the stock can head towards 800 levels. And on the downside, if we see 650 seems to be a strong support. Along with that, we also covered TCS. So entire IT basket is into bus. The IT index itself is forming a strong reversal formation. So possibly TCS can extend it more toward 2550 to 2600 levels. And finally, Kalyan Jewellers has been one of the outperformer. If we see from the July swing news, it has moved from the levels of 350 to 610 levels. Still, the positive momentum is intact. Possibly 720, 740 levels can be seen. There's a fresh back breakup. So as long 560 holds, one can have a positive approach.
Okay, so that's with regards to where TCS goes as well. But moving on, Ambuja reported numbers as well, and on the sidelines of what the numbers are looking like, whole-time director and CEO of Ambuja Cement, Vinod Baheti, talks about what the numbers look like and the outlook going ahead. Let's quickly listen in.
Ambuja Cements has started financial year 27 with a disciplined and resilient performance, delivering stronger profitability, improved operating margins, improved operating and cost efficiency, and continued strategic execution despite a challenging operating environment. Cement demand remained stable, supported by infrastructure, housing, and construction activity, while industry profitability faced pressure from the higher imported fuel prices, elevated freight costs, and the overall geopolitical tensions in West Asia. With focus on cost leadership on quarter-on-quarter basis, we have reduced cost by rupees 206 per metric ton, which led to improvement in EBITDA by rupees 196 per metric ton. This is after absorbing cost of rupees 110 per metric ton on account of the West Asia geopolitical situation.
Got it. Well, that was, of course, the management of Ambuja Cement. But let's also, go across to my colleague Parth, because L&T comes out with earnings today and will be, a crucial one post the West Asia crisis. A lot to watch out for. But Parth, what are you picking up?
That's right, Puneet. L&T will be reporting its Q1 earnings today, and the revenue growth is likely to be in single digits because of the disruptions, like you rightly mentioned, that we saw in Middle East during the current quarter. The EBITDA margins are expected to contract a little bit due to the execution delays and also the rise in commodity costs that we saw because of the same reason during the quarter. The company's core engineering business is likely to report muted growth, and the order inflows are expected to remain on the weaker side due to the delayed tender conversions that were faced by L&T. Now, if we talk about the expected numbers, then on a consolidated year-on-year basis, the revenue is expected to rise over 6% to reach around 67,500 crores. On the other side, EBITDA is expected to grow 3.4%, while EBITDA margins are expected to decline 20 basis points year-on-year. Also, net profit is expected to rise about 10% to reach almost 4,000 crores in the first quarter of FY27. Now, if we have a look at order book and execution, the core order inflows are estimated to be around 65,000 crores, which is a decline of 15% year-on-year. And if we exclude the service segment, then inflows are expected to be around 58,500 crores. The strong order book is expected to support the FY27 execution in the upcoming quarters. So there will be three key things to watch out for. Number one, the execution recovery across both domestic and foreign projects. Second, order inflow pipeline that currently stands at around 17.8 lakh crores, and the third is any commentary on the Gulf project execution given the disruptions that we had faced in the recent months.
Thanks so much for that, Parth. But as we wrap as well, you've of course seen L&T moving 0.8% just before the earnings as well. But Nishal, from the L&T perspective, what should investors look at? Is it largely the forward commentary? Because of course we've seen the valuations come through and reach a level at this point of time. What will you be watching out for from the earnings?
So I think L&T is in a situation where the management cannot give you much confidence, basically, because it's a geopolitical situation and they are facing the outcome of that. So I think L&T, yes, valuations are favorable, but long-term holders can only look at acquiring L&T at these prices, because unless this Middle East situation sorts out, I think L&T will face a tough time even in the coming quarters.
Well, we'll of course watch out for all those numbers. But Nishal as well as Rajesh, thanks so much for joining in, giving us your perspective across a whole bunch of stocks and spaces. But As we wrap the market closing, you started off the day and largely this show as well with flattish moves on the Nifty 50. That has largely continued. Look at the heat map also very quickly, that shows you that perspective across key stocks. So TCS actually now the biggest gainer for today, and what a move on this counter too. It's almost seen a 15% up move in this month. You've also seen good moves on Tech Mahindra come through, so on Infosys, but also watch out for Eternal. Post that 220, 230 mark, it has been seeing a very strong buying. Momentum continued going into earnings. Momentum is continuing post earnings as well. You've seen Coal India, BL and HUL now down 7% in trade. The valuation comfort is there, but market is clearly looking at growth more favorably at this point of time, and puts in perspective into what if the expectations are from the FMCG names, especially in this particular quarter. Look at the sectoral heat map too. We spoke about it at the start of the show that the IT index continued to be the top gaining one, and that is how it will be ending. You're seeing the India defense down 2%. The advanced decline ratio is the other one for the broader market picture that has continued as well. Declines largely, having a larger impact today, and that is how it ended, close to 1,800 stocks declining in trade. In terms of the mid and small cap index, largely seeing some pressure today. So while there have been for the benchmarks that there are some spaces that worked, some didn't. The mid cap 150 was up only 0.9%, small cap 2, and finally the BSE 500 as well for these individual movers. You saw a clutch of them. Coforge definitely the top gainer, up 9.8%. So was Lodha actually, up 9.2%. You had a big brokerage call upgrade coming through on the stock, and that favored the company too. Mastek was one other big beneficiary of Coforge numbers. Kalyan Jewellers back in fray of investors post that big move, up now above the 600 rupee mark. So was TTK Prestige on the back of earnings. On the losers though, on earnings misses, you had all the top three names. All three, continued to be under pressure, and how. While Equitas Small Finance Bank was the other one that was under pressure last hour of the trading session when the earnings came through. But that's the picture of the markets. Thanks so much for joining in. A lot more action on the other side. Stay tuned to NDTV Profit.
Co-powered by CoinSwitch.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin near the $63,000 mark on macro uncertainties ahead of Fed meet. Russia passes the first comprehensive crypto law. FATF crypto travel rule adoption is rising. And lastly, India's CBDT detailed guidance note comes out on crypto. Well, with just 3 days left for filing the IT return, make sure to check the TDS deductions which have been made in the financial year 27, especially for your crypto transactions, because you can claim 1% TDS amount back as a refund. Now remember, the 1% TDS is like an advance tax, while your real profit is taxed at a flat 30%. Now if your total TDS paid is higher than your final calculated tax, while your real profit is taxed at a flat 30%. Now if your total TDS paid is higher than your final calculated tax, the government will refund your income tax return. But let's first understand, how does TDS work? Your exchange cuts 1% every time you sell or trade crypto, even if you made no profit or even faced a loss. This is 1% is just a tracking fee sent to the government, not your final tax bill. All your deducted TDS shows up in your official income tax department portal under Form 26AS. That's nothing but annual statement, or AIS, which is the annual information statement. But let's look at the numbers now. Imagine you sold a crypto worth rupees 1 lakh during the year, and your exchange cut a 1% TDS, that's around 1,000 rupees. At the end of the year, you calculate your actual tax you had Of course, a small tax total profit is there, then your final 30% tax on that profit comes only 400 rupees. Since you already paid 1000 rupees via TDS, but your real tax due is only 400, the extra 600 is yours. You can claim this 600 back as a refund by putting your crypto details in your ITR. Now, in conclusion, you can claim your 1% TDS back as a refund if the total tax deducted by your crypto exchange is more than your actual tax due. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today. So viewers, markets have ended in red, and this is after a largely range-bound session with the Nifty failing to sustain above the 24,000 mark. Now, market breadth, however, remained negative as declines have outpaced the advances in the session. Next up, we have Nifty IT, Pharma and Auto, which are among the only indices to end in the green. FMCG and defense stocks among the top laggards during the session. And next, counters that were buzzing away in trade were Varun Beverages. So that has dropped nearly 8% after the company has reported its second quarter, that is April to June results, with margin contraction weighing on the investor sentiment. While revenue growth remained healthy, higher input costs and operating expenses put some pressure on the profitability front, and the stock came under sharp selling pressure as the street has focused on the weaker margin performance despite continued demand for the beverages. Next counter that was buzzing away in trade was Orient Pro Solutions, that has plunged as much as 12% after the company reported a weaker first quarter performance, with both profit and operating margins coming under pressure. So while revenue growth remained steady, higher employee costs and project-related expenses weighed on the profitability, disappointing the investors. Next counter to look at is Lodha Developers, that has nearly doubled from their April lows, climbing 99% to an 11-month high. The rally has been driven by strong residential demand, robust sales bookings, and also optimism around the real estate sector. Now, investors have also cheered the company's healthy balance sheet, project pipeline, and even the consistent execution, helping the stock outperform both the broader market and also its realty players. Viewers, our next counter to look at is Suzlon Energy, which has reported a mixed first quarter performance with revenue rising 22% year on year, and this has been driven by higher project execution. So, however, net profit has declined as margin pressure has weighed on the earnings. The company attributed the softer profitability to changes in project mix and even execution related costs. And Supreme Industries has reported a strong first quarter performance with net profit rising 29% year on year to 281 crore rupees. So the company has also posted healthy revenue growth, and this has been supported by strong demand across its key product segments, and the results reinforce optimism around the company's growth outlook, and it has been backed by steady demand, capacity expansion, and even improving operational performance. Viewers, next counter to look at is Hindustan Unilever. So its first quarter earnings have missed the street estimates despite posting record sales growth, with 5 key factors weighing on the performance. So higher input cost, increased advertising spends, and unfavorable product mix all impacted the profitability. While revenue remained resilient, these factors have really dragged the earnings below the expectations, leading to a decline in the stock. Next counter to look at is Avenue Supermarts, which has seen its shares come under pressure ahead of CEO Anshul Asawa's first investor interaction since taking charge. So investors are expected to closely track the company's strategy on store expansion, margins, competitive intensity, and even demand trends. Next up, we have Swiggy, which has appointed former Myntra CEO Nandita Sinha as the Chief Executive Officer of Instamart, which is its quick commerce business. So she will take charge on August 3rd, replacing Amitesh Jha, who has resigned to pursue the opportunities outside the company. So Sinha brings more than 2 decades of leadership experience across Myntra, Flipkart, Britannia, and even Hindustan Unilever. Next counter to look at is City Union Bank, which has reported a healthy performance for the first quarter, with loan growth accelerating 25% year on year. So the bank's net interest margin has improved to 3.78% from 3.54% a year ago. And this is reflecting better lending yields, and asset profitability has also remained stable, with return on assets inching up to 1.57%. Next counter to look at is Equitas Small Finance Bank, which has reported a strong turnaround in the first quarter, returning to profit after a loss in the year-ago period. Now, net profit came in at 184 crore rupees, and this has been supported by a sharp 31% growth in the net interest income to 1,029 crore rupees. Also, the asset quality, this has improved, with both gross and net NPAs declining sequentially. Next counter to look at is Pfizer India, and it has reported a steady first quarter performance, with net profit rising nearly 7% year on year to 205 crore rupees. So revenue has increased 8% to 653 crore rupees, while EBITDA has jumped almost 18%. This is lifting the operating margins to 37.9% from 34.8% a year ago. The improvement in the margins highlights stronger operating efficiency, although other income has declined during the quarter. Next counter to look at is Cholamandalam Investment and Finance, which has reported a strong first quarter performance, with consolidated net profit jumping 46% year on year to 1,656 crore rupees. So total income, if we talk about, so that has risen 22% to 8,957 crores, and this is reflecting healthy growth across its lending businesses. Separately, the board has also approved a plan to raise up to 55,000 crore rupees through non-convertible debentures, providing additional funding flexibility to support the future business expansion. And viewers, keeping up with the earnings momentum, we have Pine Labs, which has reported a strong first quarter performance, with net profit rising to 19.6 crore rupees from 4.8 crore rupees a year ago. Revenue grew nearly 20% year on year, and this has been supported by healthy business momentum, operating performance, It has also improved significantly, with EBITDA now more than doubling to 95 crore rupees, while the EBITDA margin has also expanded from 12.9% from 7.2% last year. So the results really highlights improving profitability and operating leverage for the digital payments firm. Viewers, Johnson & Johnson has proposed a settlement of up to $5.5 billion to resolve the majority of lawsuits alleging its talcum-based products causing ovarian cancer. So the healthcare giant continues to deny the allegations, calling them meritless, but says that the deal would really help bring years of litigation to an end. So the proposal covers around 76,000 of remaining claims and will require approval from the legal representatives handling the vast majority of the cases before it can take effect. And China is set to tighten the tax rules for energy resource companies by gradually phasing out the long-standing urban land use tax exemptions. So while tax breaks will continue for certain infrastructure land, companies benefiting under the older policies will face higher tax liabilities in phases starting September, making marking another step in Beijing's effort to really streamline the fiscal policies. And viewers, let's slip into a short break and we'll be back with more action on the other side.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर
Welcome back, viewers. You're watching Market Express and I'm Himakshi Bahugna. So viewers, there is some relief for the flood hit, Assam, with the situation showing some signs of improvement and no fresh deaths reported over the last 24 hours. But the crisis is far from over. More than 4.4 lakh people across 6 districts continue to battle the impact of flooding, with Shivasagar and Jorhat among the worst affected. Now, nearly 90 relief camps are still sheltering thousands of displaced residents, while the Dhansiri River remains above the danger mark in parts of the state, keeping authorities on high alert. Looking at more national news now, viewers, parliamentary proceedings continue to remain disrupted over the NEET paper leak issue. Now, the Rajya Sabha has now been adjourned for the 7th straight day as opposition parties have pressed for a discussion on police action against the protesters in the national capital. Meanwhile, in the Lok Sabha, the government has agreed to extend the debate on the anti-paper leak bill to as much as 10 hours. So, the opposition, however, also questioned the absence of Prime Minister Narendra Modi and Home Minister Amit Shah during the discussion, keeping the political confrontation firmly in focus. And the fallout from the July 20th Parliament March continues. Retired Delhi police officers have now sought permission to stage a protest at Jantar Mantar on July 31st, alleging attacks on police personnel during the demonstration. Delhi police has claimed that over 100 personnel were injured after anti-social elements have infiltrated the protest, while demonstrators have accused security forces of using excessive force the move is likely to add another political dimension to the ongoing controversy. And after a spell of steady monsoon morning showers, Delhi is set for more wet weather, and the IMD has issued an orange alert warning of moderate rainfall and gusty winds across several parts of the capital over the next few hours. So while the showers have brought temperatures down and kept the air quality in the satisfactory category, authorities are advising residents to remain cautious as the rain activity is expected to continue. Now let's look at some global news, our viewers. After days of heightened tensions, US President Donald Trump is saying that there's a good chance of progress in talks with Iran, with both the sides holding fire for a third straight day. Now, but even as diplomacy really takes a center stage here, Trump has warned that the pause is temporary, and even the US is prepared to resume strong military action if negotiations fail. So the developments come as Israeli Prime Minister Benjamin Netanyahu arrives in Washington for crucial discussions. And there's a powerful magnitude 7.1 earthquake has struck Japan's Kumamoto prefecture on the southern island of Kyushu, prompting authorities to issue a tsunami warning. Now, waves of up to 1 meter are expected, with residents in coastal areas they've been urged to immediately move to higher ground and even follow evacuation orders. Now, Japan's Prime Minister Sanae Takaichi has confirmed reports of injuries and also at least one building collapse as emergency teams really assess the full extent of the damage. And viewers, Germany is grappling with fresh security concerns after a deadly attack at Berlin's Pride celebrations. A van plowed into a crowd before the suspect really allegedly launched a knife attack, leaving one person dead and dozens of them injured. And the incident has reignited the debate over laws governing known extremists, with Chancellor promising decisive action, while the far-right AFD has really stepped up the criticism of the government's handling of security and even Islamist radicalization ahead of the key state elections. Whereas France is preparing for its fourth major heat wave of the year as soaring temperatures intensify the country's worst wildfire season on record. Now in the southwest, firefighters continue battling a massive blaze near Bordeaux that has already scorched tens of thousands of hectares. Now, while the crews made progress overnight, officials really warn that the situation remains fragile, with hot, dry conditions threatening to fan the flames once again. And as the world of work evolves, education must keep pace. Now, at the sidelines of NDTV Profit Business Leadership Awards, Atlas Skill Tech spoke about bridging the gap between academia and industry and how education is adapting to changing workforce demands. Let's listen in.
Let's also talk about the role, the tremendously important role that education plays, tying in with industry and that entire, complex understanding that we've got.
Yeah. Thank you for having me here this evening. I think it's been a fantastic award ceremony. Heartiest congratulations to NDTV. At Atlas Skilltech University, industry academia integration has been something that's been at the heart of what we've been working on. I think at a time like today, we've seen what's happening around us in a country like India. Employability, entrepreneurship, and really creating opportunities for the youth, I think, is a joint responsibility of not only industry but also academia. And at Atlas, it's our endeavor that we use this rich demographic dividend that we have and really create a country which the future of the globe depends on.
No, absolutely. And speaking of creating a country, right, I have to ask you, how is your definition of education or the way that you treat it, how is that changing? Because it's a very, very fast-moving world that we've got there.
I think in today's day and age, with the AI revolution that we're seeing, knowledge is everywhere. So I don't think education institutions can anyways be the imparters of knowledge, but I think they have to become a platform that creates opportunity for youth, opportunity in employment, opportunity in entrepreneurship, and I would say most importantly, opportunity to bring society together. So there's a huge responsibility on educational institutions like Atlas Skilltech University, and we hope that along with all the stalwarts who are here this evening, we can actually make a difference.
And small finance banks have emerged as a key driver of financial inclusion across the country. At the NDTV Profit Business Leadership Awards, AU Small Finance Bank shared its outlook on the sector's evolving role and its growth prospects. Let's listen in to a snippet of that conversation.
What I really wanted to ask you is, in terms of small finance banks, right, what is the kind of role that you play when it comes to the economy that has been very swiftly changing as well?
Oh, okay. So I think we all know that SFB came in picture in 2017, all 10 of us. And the whole design principle is around financial inclusion. Because, by design they say 25% has to be in unbanked area. Your branches has to be in unbanked areas. 50% loan book has to be lesser than 25 lakh. Your priority sector requirement is 75%. So it's primarily to do small lending and to get a big money from the customers. So in my opinion, it's a perfect banking, because banking is always says about there are saviors and there is borrowers, right? So I think the people who have money, they can give us at a better rate and we can deploy to those people who really need it. So this model has really worked very well, in my rough estimate, the total asset in SFB is close to now 4 lakh crores with a customer base of close to maybe 40 million. And we have 50% market share in liability, in assets, So I'm very happy that we are doing banking and also doing this kind of inclusion, right? Yeah.
No, absolutely. And capital deployment, inclusion, all of that is extremely important. One more important thing that I wanted to ask you about, in terms of the financial parameters that you had, for the purpose of this award, what was the one thing that you were really very excited about in terms of numbers or growth estimates?
So the one number which really makes me very excited is the number of customers, Whenever I see, and I track it every day, you heard that our SBI, people saying that they acquire 65,000 customer a day. My number would be around 10,000. So, 5,000. So that number, is too exciting number for me to be in business. Because, once you acquire this kind of number of customers, you're helping somebody to take loan, to do payment transactions or to do some kind of deposit transaction with you. So bank is fulfilling that time, right?
No, absolutely. And sir, since you talked about tracking numbers very closely, and it's quite great that you actually track that number with that kind of rigor, but I also wanted to get an estimate in terms of the industry as a whole. What are you then expecting in the next 5 years that's got you excited then?
Okay, so I think, we all have to know that fact that we are not the industry, right? Yes. The industry has to do well. India has to do well, Indian market has to do well, Indian consumer has to do well to make back better, right? But what I have seen in last 5 years that there are much policy reforms done by a regulator that is very enabling. The liquidity is good enough. Your NPA are very less in the system, and there is good demand coming up, especially in last 1 quarter. So I believe that bank will always be an enabler to support India growth.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुंचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े। vandeBharatam.org पर रजिस्टर करें।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most.
Market ends just below flat line ahead of the IIP data today. Investors also monitor US-Iran talks on Nifty and Nifty Bank's weekly expiry. HUL and Bharat Electronics are the top losers on Nifty today over weak earnings. HUL ends at a 4-year low after a lackluster quarter ended June. Consumption stocks see selling pressure after poor show in Q1 earnings, plagued by lower margin and volume impact. Price hikes dents HUL's demand growth. Varun Beverages misses the margin estimates, and weak guidance drags DMart. Stocks fall in the range of 4 to 8%, dragging the FMCG index down by about 1.5%. Rupee strengthened today during early trade. Traders suggest RBI intervention helped rupee in trade today. Indian currency closed at 95 rupees 86 paise against the US dollar. Oil prices extended their losses after a pause in fighting between the US and Iran, with Brent hovering around $86 a barrel ahead of Trump and Netanyahu's meeting, while Iran's foreign minister discusses security of Strait of Hormuz with Saudi Omani counterparts. Top brass changes continue at Swiggy's quick commerce arm Instamart. Announces former Myntra CEO Nandita Sinha taking charge as the CEO as Amitesh Jha steps down today. Instamart saw COO and CBO changes last month. In an exclusive chat, delivery founder Sahil Barua dismisses competition due to e-commerce players embarking on in-house logistics. Says low-cost services to assure growth and ability to deal with elevated crude prices due to war. Decade of courtroom battle may end as Johnson & Johnson agrees to $5.5 billion settlement in baby powder cancer litigation. Long-running legal saga nears end. Another day of showdown in Parliament over anti-paper leak bill. Union Minister Jitendra Singh says amendment in paper leak bill brought to make law more stringent, while opposition demands debate on pellet gun use on protesters. India's Commonwealth winning tally adds Sarvesh Kushare clinches India's first silver medal in men's high jump at Commonwealth Games. Hello and welcome. You've tuned into Profit 360 and I'm Nisha Poddar, and let's take you through all the important developments that are really transpiring in the world of business. First, let's begin with a Nifty 50 company really going to announce its Q1 earnings, and we are talking about the large cap company Larsen & Toubro. It is all set to report its Q1 earnings today in a matter of an hour or so, and our colleague Parth is right here with the key expectations on the L&T Q1 showing. Tell us, Parth.
So L&T will be reporting its Q1 earnings today, and the revenue growth is likely to be in the lower single digits because of the disruptions that we saw in Middle East during this quarter. The EBITDA margins might contract a little bit due to the execution delays and the rise in commodity costs. The company's core engineering business is likely to report muted growth, and the order inflows are expected to remain weak due to the delayed tender conversions during the quarter. If we talk about the expected numbers, then on a consolidated year-on-year basis, the revenue is expected to rise 6.1% to reach almost 67,544 crores. On the EBITDA side, the company is expected to post a growth of 3.4%, while EBITDA margins are expected to decline by 20 basis points year-on-year. The net profit for the company might rise 10.1% to reach almost 4,000 crores during the quarter. If we have a look at the order book and execution as well, the core order inflows are estimated to be around 65,000 crores, implying a downside of 15% year-on-year. Excluding services, these order inflows are expected to be around 58,500 crores. The strong order book is expected to support that FY27 execution in the coming quarters as well. So the key things to watch in the result will be, number one, execution recovery after these disruptions in both domestic as well as overseas projects. Also the order inflow pipeline that is currently around 17.8 lakh crores, and lastly the management's commentary on the Gulf region project execution given the kind of disruptions we have had over the last few months.
That's right, Parth. In fact, stay on. In fact, markets really end in the red after a largely range-bound session today, with the Nifty really failing to sustain above the 24,000 mark, and the market breadth also remained negative as the declines really outpaced the advances in the session. Parth will take us through the complete market roundup as well. Tell us, Parth.
So Nifty has closed in red today, seeing a downtick of almost 0.1%. This was led by two companies, HUL and BEL, both of which were the top losers of the index. Both of them seeing this downtick because of the results. HUL had reported weaker than estimated results in which volumes grew by just 5% versus an estimated range of 6 to 8%, and as a result of which HUL saw a downtick of almost 7%, while on the other side BEL also reported a mixed set of numbers because of the higher semiconductor cost that they faced in the previous quarter, and that's why the stock was down around 4.5% as well. On the broader market side, Nifty Midcap 150 has outperformed the benchmark with the index gaining almost 0.1%. This was led by Kalyan Jewellers and Hexaware Technologies, both of which were the top gainers of the index. Kalyan Jewellers gaining almost 8%, while Hexaware Technologies also saw an uptick of over 5.5%. On the other side, Nifty Small Cap 250 has underperformed the benchmark with the index closing in red, down almost 0.5%. This was because of Capri Global and GSPL, both of which were the top losers of the index, each seeing a downtick of almost 7%. On the sectoral side, all of the sectors except Nifty IT, Nifty Realty, Nifty Auto and Nifty Pharma have closed in red. Nifty IT was the top gaining sector, gaining over 3.5% today, led by TCS and Tech Mahindra. TCS seeing an uptick of almost 4.5%, while Tech Mahindra also closed in green above 4%. On the losing side, we saw Nifty FMCG that was down over 1.5% today. This was led by Varun Beverages and HUL, both of which saw a downtick of over 7% today. Varun Beverages again on the back of weaker results. On the sectoral trend side, Nifty IT has ended in green for the third consecutive day, while Nifty Realty, Nifty Auto, Nifty Pharma have closed in green for the second day in a row. Also, Nifty Bank, Nifty PSU Bank and Nifty FMCG have snapped their two-day gaining streak.
All right, thank you so much, Parth, for getting us all the highlights coming in from the equity markets. And the big highlight was that the IT sector was the best performer, while FMCG really dragged, and overall consumption coming in from the equity markets. And the big highlight was that the IT sector was the best performer, while FMCG really dragged, and overall consumption. Indian currency and the crude prices as well. The rupee closed at 95 rupees 86 against the US dollar. However, it really strengthened in the early trade as RBI sold dollars and also improving global sentiment. Meanwhile, take a look at the crude oil prices. They continue to cool off, with the Brent slipping back to around $86 a barrel mark, and after the US really paused its bombing campaign against Iran. So that has given some softness to the crude oil prices, easing the concerns over the immediate supply disruptions in the Middle East. So a lot developing on the global arena to really take stock of rupee as well as crude. Now, HDFC Bank has formally concluded its internal review into the MSRDC deposit arrangements, clearing the way for the next big governance milestone. And sources tell NDTV Profit that the bank's Nomination and Remuneration Committee, or NRC, is really expected to meet soon to deliberate on the reappointment of the CEO, Sashidhar Jagdishan. Now, the internal probe found no malified intent or personal gains, terming this matter as a business overreach. Remember, now the board has already issued the warning letter and also a 1 lakh rupees penalty on the 3 executives, which has been communicated yesterday. But the bigger question is, once the NRC really finalizes its recommendation, the proposal will be sent to the Reserve Bank of India for its approval. In fact, quite a choppy day, and HDFC Bank was seen under pressure through the session on the back of this particular impact coming in. All right, Swiggy is witnessing yet another key leadership change, and Instamart CEO Amitesh Jha has really resigned with immediate effect, with the company appointing former Myntra CEO Nandita Sinha to take charge from 3rd of August. Now, the change comes at a company appointing former Myntra CEO Nandita Sinha to take charge from 3rd of August. Now, the change comes at a crucial time as Swiggy really sharpens its focus on the quick commerce business amid the intensifying competition. Notably, this is the latest in a series of high-profile exits since the company's listing. And over the past year, remember that Swiggy has seen the departure of its company secretary and various other, levels. But this one is an important one because the quick commerce competition is really growing at this particular moment. And at this time, Swiggy's Instamart has seen a full top brass change, with the CEO changing today. And on the other hand, just a month back, the COO and CBO positions were also changed for Instamart. So lots happening in that particular space. Let's hear out from the whole-time director and CEO of Ambuja Cements, Vinod Baheti, about the company's Q1 earnings as well.
Ambuja Cements has started financial year 27 with a disciplined and resilient performance, delivering stronger profitability, improved operating margins, improved operating and cost efficiency, and continued strategic execution despite a challenging operating environment. Cement demand remained stable, supported by infrastructure, housing, and construction activity, while industry profitability faced pressure from the higher imported fuel prices, elevated freight costs, and the overall geopolitical tensions in West Asia. With focus on cost leadership on quarter-on-quarter basis, we have reduced cost by Rs 206 per metric ton, which led to improvement in EBITDA by Rs 196 per metric ton. This is after absorbing cost of Rs 110 per metric ton on account of the West Asia